Alright. Let's go. Gotta hurry up. I hope you guys are doing well today. Sorry that I'm a little bit behind. Again, I am only doing this to just go over my trades until I figure out what it is that I'm going to do. So if you guys see anything, want to ask me what I'm doing, throw it in the chat. I traded banks yesterday, traded Starbucks. I was long Starbucks. There's some nice volume and continuation on that trade. Stuffing some money in my pockets. Watching Tesla, a few other things here. Alright, I do have my charger set up. Good. We're good there. If you guys can hear me, just let me know. If you could, again, hit the like button, subscribe. My cat's going crazy. Alright, first things first. What a surprise. I've been talking about this for a while now. What a surprise with the initial jobless claims today. 230,000. Big number coming in. I told you guys to watch out for a number like that. That could come out of nowhere. It could just come out of nowhere. So, a couple of things that I'm watching. Microsoft, Apple, Tesla. I was kind of watching Google, but not really. You know, Roblox got hit this morning. We'll cover all that. I'm going to make today a day where I'm really going to focus on, you know, how I'm going to be making my money. So yesterday I got, I grabbed, like nothing was paying. I grabbed calls on the SPY and puts on the Qs, and I took profits on them and took them off. I took Starbucks yesterday. Yesterday I probably made like 5-6 trades yesterday, and it was just like, you know, it wasn't any like 30, 40, 50 percenters. It could have been close to 20 or 30%, but you know, they weren't huge, so I was kind of just grinding and digging for whatever it is that I could get yesterday, and sometimes you just have to do that. Next week we have a crazy amount of data, not just CPI, industrial production and retail sales. I'll tell you guys all the time, at least I've been saying it since I've been here on the live, is that outside of 2 negative quarters of GDP, what do they use to signal whether or not we're in a recession or not? Retail sales, industrial production. And there was, along with GDP, right? So they look at, it's non-farm payrolls, retail sales, and industrial production, right? Outside of using 2 negative quarters of GDP, right? You have GDP's okay, but you have declining retail sales, non-farm payroll rising, industrial production negative. That's recessionary signal as well, right? There's two things that they use, and those are the two, all right? We get them next week along with CPI. So it's easy to see why this market has not moved. And that's okay. And I said that we would probably sit here in a range. I think I might need more. All right. Qs. All right, let's just go right here. SPY, top right. Qs, bottom left. Let's see if they've caught up yet. You can see yesterday how this high on the SPY before the close. Look at that. Look at that. And you see why I was short the Qs on this move, but I was long the SPY as well. Those SPY calls were dated for today, and the Qs puts were dated for yesterday. So I ended up taking them both off for a small profit. So let's see here. So the SPY is up at that double top, right? The IWM is what I'm watching. It was down bad yesterday, and 204 was the number yesterday we were watching for to see if we could get back up there and get some shorts. As you guys can see, also this 50-day moving average is right there. So I'm just getting an eye on where are the markets and what are our leaders. So the IWM, you can see we'll use the IWM for, let's look at the Dow before I say anything. Okay, so the Dow is still there. So the Dow put in not just a double top, but new highs. And we know that. Why? Because I took a long on JP Morgan yesterday. Relative strength, right? Starbucks, relative strength. Like the triggers are hitting in whatchamacallit. So I'm going to be using the IWM to see if we can hold here. And then I'm going to look for, the Qs. Obviously, technology for downside. Let's see. We have just a couple minutes here. Could really look for a bounce here on EMPH. This wasn't part of the plan, but if we pull in here. So Tesla, I'm looking for Tesla. It's crazy because that came out after. Bro, come on. I'm looking to get Tesla back to 278, but I don't know where I'm going to take this trade at. Like, this is also a rejection of yesterday's high as well. So watch yesterday's high on Tesla. Because you might end up breaking down to the 50-day moving average. We have 5 minutes left. So let's just say this, right? Watch big cap tech, okay? Keep an eye on big cap tech because, in my opinion, I think maybe I'll leave the 2 minute. So the reason I use 1 minute is because of the volume. Because I want to know what really is going on underneath the things. And I use the 1 minute for volume, not necessarily price, but more so for volume. I'm watching yesterday's high on a lot of things. Microsoft. So Microsoft, I wrote down 412 rejection and or a 410 rejection. Or a break, I'm sorry. Right? I'm not necessarily looking for a short. It's... You just have to watch the overall markets and see what they do. If you guys have any... It's just a weird time. I'm not going to force anything today. Because next week is such a big week. I want to just really find, like I found yesterday, and find that relative strength that has a lot of volume and be on that side of the trade. I want to be on that institutional side of the trade, right? Where you just see it getting bought all day long. Things like that. Bro, I gotta fix this, don't I? Of course I do. God damn it, man. Alright, SPY's breaking down. Are you okay? You okay? Sorry, I was talking to my cat because... You okay, boo-boo? Making me nervous. So yeah, that's that. I got the SPY here, not up on this chart next to me, but watch. Keep an eye on the overall index. Look, it looks like 204 is not going to hold. I think this market has its mind made up. If you want me to be completely honest with you.
1 minute to the U.S. market open.
So 204, you have the 50-day right there. Okay. Man, we have such a far room down. If we break this 50-day, guys, we could head right into the 20-day moving average on the IWM. So 204, if we can't regain that, or like yesterday's close, really your support level's way down here at 203. So where's that lower high going to be? We'll find out. Good luck today. If you guys need any help or any questions, if you guys have questions also, please throw them in the chat and we will this is actually, and I'll get right to them, but this is actually lining up to be one of those type of days where all right, guys, good luck today. God damn it. All right, we have a gap. Looking like a gap fill up there.
NASDAQ up 23.70.
I'm watching Apple for a short.
S&P 500 up 2.56. Dow Jones down 41.90.
I am. I mean, we'll see how the we'll see what happens, but I think that's where I'm leaning, guys. I do. Yep, there it was, and I think I missed it. Fuck! I think I missed it. It's giving you the same setup as Tesla.
Shares of Roblox are popping here now, back over $31. Roblox shares down about...
That's crazy. Roblox getting cut in half, guys. That's nuts. That is absolutely nuts.
That's RBLX.
And there it goes. Tesla's breaking down. Tesla breaking down. Tesla breaking down. Shit, man. I don't know where the box is. Okay. The dotted line. I'm looking at Tesla right now, obviously. All right, so we got a pop coming up here. Let me look at right here. Of course. Sorry, I had to get her out of here because I can't keep fooling around with her. She's got to figure out what she wants to do. I know she's tired, but my cat is just on one this morning. All right, so Apple. Come on, bro. Oh, my fucking God. I'm getting rid of that. I'm getting rid of this box. All right, there we go. Good shit. All right, because I couldn't do nothing with it. All right, 170. Let's see. Those 170s. You could look at. I like the. See, those have a little bit more. Is it 37? 150. Yeah, I like those. I'm looking at the 172.50s. See, I don't like.
And those who like the stock would point out that with the AI revolution that we spend so much time talking about appropriately, you know, this is like think of a building that the rent's
All right, so let's take some profit right there. That's a nice move. I love that. Let's go, baby. Let's go. I don't know if there's even anybody here. Hold on. If you guys are here, let me know in chat.
all the stuff you just talked about. Yeah, it's the duck comes down. It's retrograde. Admit it. It's all video. Yeah. And everything else that goes in with it. And arm, as you point out, it's a little touch of arm, subvertive, helping you build it. Yes, and it's by the way the old.
It's a nice quick reversal there.
You know, Carl, one of the things that when you
Nice quick reversal. I'm gonna. Let's see. Where am I at? Where's everything at here? This is crazy. Hold on one second.
In 20 years. So these Equinix part of many changes within the grid, which just say, you know what?
All right, let's go.
We're real power and power. And what you need, and here's a good one that we didn't mention, that we'll mention when we speak Renee. Why do people like ARM chips so much? Because they don't use so much
ABVC Biopharma from an 8K filing collaboration between ABVC, and non-cost.
All right, Microsoft broke 410. All right, and what did we say? 410 break, right? 412, 412 rejection. You get this break here. Let's look at Apple. It looks like Big Cap Tech kind of trying to break down here.
access to power do we have? It's a Jim's point. That's where you start. You can't build these things unless you have access to power, and you're going to need a lot more of it as we generate, as we move into the world of Blackwell. Even though it consumes,
Damn, Tesla going too. Fuck.
obviously, we're going to be wanting to power the robots.
Come on. Hurry, hurry, hurry. Oh, damn, look at Apple, bro. Okay. It's a low volume bounce. Keep that in mind. That's it right there. That's your level. That's your level. Is this going to be right now a high, a lower high? Let's see. 183.50. Let's see. 183.50. What you got?
For industrials, Chevron and Caterpillar lead the Dow. You got this upgrade of Emerson this morning, Jim?
Emerson's in the data center. I misjudged Emerson. I was not happy they missed 2 quarters, and now they've come on very strong, and they are in the data center big time.
As for restaurants, we got
All right, Google breaking down. I had a feeling that would happen. So if you guys notice, this is a nice rejection. You could have some room to the downside. You could have some serious room to the downside, guys, if you break this level. If you break 171. Okay, Tesla bounced. Resistance.
We mentioned a bunch of double-digit movers pre-market. AppLovin's in there, Bumble's in there, Lorbee's in there.
Lorbe has become the choice tenant for the real estate.
Bro, that's such low volume today on Tesla. That's honestly weird. That's what's turning me away from that. Probably get a day 2 continuation out of JP Morgan. Look at that day, guys. Look at that. 191 to 197. Also, Bank of America was on the list. Okay, so Starbucks did break. Starbucks broke. That move would go to 74.
where crypto sales up 230%.
Let's go hood because on the one hand, when you listen to Vlad Tenev, he is just telling you the greatest stories on earth. They're opening live accounts.
Let's go look at
They're buying crypto and they're buying options, and so far that is sustainable. I don't know how long it could be sustainable, but that's it. Vlad's put together. Vlad's taking accounts from everybody.
what's everybody watching today? Is there anything that's sticking out that you guys
What is that guy doing? He's taking out. The answer is
really like, or
he's skating ahead of the puck. He won crypto, and he's got the best touch in crypto.
let's see.
Zuho reiterates a buy today. Vlad Tenev was on last call last night. Take a quick listen.
We tried to create what's called a special purpose broker dealer.
There goes the spy. There goes the spy.
And we actually came in good faith to meet with the SEC. I think we met with them 16 times. And unfortunately, that was not reciprocated. And it was clear that there didn't seem to be a path.
Let's hope that's benign. When he says special purpose, Vlad, has he watched the movie The Jerk?
This is all I need.
Yes. Cans. The cans. That guy does not like cans. No. All right, quick correction from me. I don't want the people at Dine mad at me. Be banned from my house. They don't use high fructose corn syrup.
You know what?
Syrup. I'm sure they use, I don't know what they use, maple syrup.
This could be a big short. I think this could be a big short, guys. Look at the volume on this today. Holy smokes. If you break this level, guys, I think it's on. I think it is on. Holy cow. I'm going to try it. 106. Oh, that's not a huge move. It's not as big as I thought. That's what she said.
Perhaps it was down, but it's headed back higher. His last quarter was a so-called breakout quarter. And it was not the breakout quarter. The stock was down 11 at one point.
Look how weak Tesla is.
Apparently slowed down performance of the game.
Alright, let's take some more off of that. Nice. Nice trade. Did anybody get on this with us, gang, or what? Gotta take it as it gives it to you. It's lower volume. It is lower volume.
Guidance. I mean, it feels to the story of this week, to a large extent, has been guidance that has not met what the street had hoped for in any number of names, and many of them have been down. Whether it's Airbnb today, or Roblox today, or ARM, or Disney from earlier in the week, and
ABVC. Shares popping here now. Filing from the company. Victor Charlie.
smooth and legendary. When I said, listen, your guidance this week, he goes, Jim, the guidance is the guidance.
$1.18 now, up 7 cents on ABVC.
Well, the guidance might be checkered, but buybacks, Jim. Big piece in the journal, up 16% year on year.
You should take a look at that buyback that Chesky has. It's really kind of typical of what's going on. And the buyback, Salesforce is down badly today, like I know why that is, but they've got a buyback to try to keep it so that the stock is down bad.
BIGC, Big Commerce, moving to the highs, $8.01, up 19%.
We're talking Salesforce here. They're driving it down.
Golf Charlie.
Come in with guns blazing. There was something that they announced what day they were going to report. I guess some of the things that they're reporting on the wrong day. But that's
I might lower it down. Let's see here. That is a nice
VITL Vital
reversal.
Farms following their report, shares are up
This is a nice
25%
reversal.
now. $38.93 continues to spike here, more than 30%. That's VITL, Victor India Tango Lima.
They're programmed by us. Unless you're David, who says no, they program themselves. Well, they will be programming themselves very soon. That's true. David, you're saying that, in other words, we're all going to be turned into linear TV by the robots? It's a very good reason. Okay, there you go.
Watch this volume starting to creep up here.
When I used to be on radio,
feel like I'm on tilt.
We're not going to be like newspapers. And then I went to TV. They said, don't worry about it. We're not going to be like radio.
It is we're in a remarkable transition. Speaking of some of that, Jim, I don't know if you
Where's the SPY? I may end up trading the SPY right now.
Apple's iPad ad, which has been written about.
May just end up trading that. QQQ. Nice bounce and a rejection.
Posted it yesterday, and it basically is a giant machine press crushing objects of art into a very thin iPad, almost the inverse of the 1984 ad, as some pointed out. Take a listen.
Carl, you post the dumbest shit, gang. Bro.
Not much to add on it.
I don't like that ad.
Yeah.
Well, it's different.
I don't like it.
It's,
I have not seen it, and that is my
it's like,
reaction.
unlike other ads.
Anybody cares, which I'm sure they don't.
No, no.
Apparently, neither did a lot of other artists.
Well, it's, I don't know. We just ran an ad for Apple. I mean, maybe it's, you can say, that's not, that would not be my ad of choice, but I watch Apple Plus, by the way. That
Yeah, I mean,
used to be down my
you're a
network.
musician. You're really, well, they're crushing a piano.
All right, we got Renee Hodge.
Jim, a little bit of macro. I don't know if you saw yesterday, Atlanta Fed is at 4.2. A lot of pieces looking at.
Watch if it holds this level here.
The Fed's going to have to adjust. Or
Bounce.
that's good. Number's going to come off.
We might turn.
We're sitting here.
Are we gonna start to get upside on Tesla? Let's see. Yup. She cranking. She trying.
Order books that were strong, I think they would say, this is no slowdown. I think there is a slowdown.
I don't know what to do, gang. I don't know what to do. That volume is consistent as all heck. Let's see. Are we gonna break above the whole VWAP? Or are we gonna continue to? I lowered it.
But since then, we've had a jobs number miss. Biggest increase in claims today since June of last year.
We have slowdown, and I think that one of the things that has to happen, I know that the Fed chief is not going to, David, just say,
Come on, gang.
one month, because he did
What you
that
got,
last
bro?
time. Can't do that. So we're heading into a slowdown. I mean, even cybersecurity is slowing. I mean, the bad guys aren't slowing.
No, they never slow down.
No, they don't.
Sadly. Jim, let me at least end on my front with.
I want to see what we do if we push in here.
I'm not going anywhere, but we're gonna.
I want to see if we push down in there and what we do at that level. Right, this level right here. I want to see what we did. We just reject it.
Board seats, right? Yeah, but there it is. 3 board seats. This was a hotly contested proxy fight, but the CEO lives on for now. Any thoughts?
Well, look, I think that there's a great conundrum here because you don't really get to make the change with those people. I happen to think that Alan Shaw's doing a decent job. I mean, he did have the Palestine problem in Ohio, and that's bad, but they're not doing that badly that they have to abandon ship. And
Let's
that's
go.
just not enough to be able to make a difference.
She's weak.
It reminds me of Macy's.
Not enough to make a difference. I mean, it's 3 different. Now,
No, but see, they can't throw Alan
no,
out.
they can't. And Cora, of course, for its part, saying it highlights their opinion that Alan Shaw essentially received a vote of no confidence, with barely 50% of the outstanding shares supporting him.
You see, this is not like a British parliamentary thing. It's like an American parliament. And he may get no confidence, but he's going to be in.
He's still in. He's still in.
And look, should the stock be down? I happen to think that really one of the crux of the problems here, what reference what you talked about, Lois, is that these railroads are not seeing a pickup in traffic that I would have expected at this time, and that's worrisome.
We'll watch it, obviously. Light week for data, which is forcing us to grope a little bit ahead of PPI on Monday. Take a look at the bond market as we go to break.
It feels like there's a lot of buying going on, bro.
Already, of course, in the BOE, holding steady at 5.25. That's still a 16-year high, although Bailey suggests that inflation might come close to target in the next few months. Take a listen.
NTR Nutrient shares hitting new highs.
Look at that
now, up
reversal
about
there.
4%. November Tango Romeo, Nutrien reporting better than expected results.
And she is. She's just weak. It's just weak.
Hey there, Brenda.
It's Carol.
Exactly. So which leg are we operating on?
You mean arm?
It's all connected.
Asking the right question can greatly impact your future,
Are you sure you're an orthopedist?
Actually, I'm a Sagittarius.
especially when it comes to your finances.
Do you have a question?
Puke it
Are
up.
you a certified financial planner? Yes, CFP professional.
CFP professionals are committed to acting in your best interest. That's why it's gotta be a CFP. Find your CFP professional at letsmakeaplan.org.
You know what's brilliant? Boring. Think about it. Boring is the unsung catalyst for bold. What straps gold to a rocket and hurls it into space? Boring does. Boring makes vacations happen. Early retirement's possible. And startups start up because it's smart, dependable, and safe. All words you want from your bank. For nearly 160 years, PNC Bank has been brilliantly boring so you can be happily fulfilled. Which is pretty unboring if you think about it.
Am I still on target to have enough for retirement?
Am I saving enough? Is the economy turning? Can I afford for college?
You know, technology can't answer those questions, but RIAs can. And when you're supported by someone who's faced them too, it's much easier. It's more than tech, more than service. What matters is having a custodial service provider who gets you and treats RIAs like they treat their clients. And that's trade PM.
Apple's on one today. That's a fact. Apple is on one today, guys.
Take frames out.
Alright, so
Ridiculously easy to frame your favorite photos. Just choose a
I
photo
think
that
you-
you love. Select the
No.
perfect frame, and you'll have your framed print delivered, ready to hang. Download the free Keepsake Frames app.
volume isn't that crazy. It's ramped up a little bit.
120 seconds to add the finishing touches. 900 seconds to arrange the displays. If you're short on time for marketing, Constant Contact's powerful tools can help. You can automate email and SMS messages, so customers get the right message at the right time. Save time marketing with Constant Contact, because all it takes is 30 seconds to make someone stay. Get started today at ConstantContact.com, helping the small.
Oh wow, Tesla right back. Look at the reversal on Tesla. Uh-oh. I would watch, y'all. I would watch Tesla. Things are getting froggy here with Tesla.
Weekdays on CNBC, the power players are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers. Weekdays 11 a.m. Eastern, CNBC.
S&P down just a touch. Breadth is on the positive side. Take a look at the heat map there. Later on this morning, by the way, Goldman Sachs Professional Investment Forum will be sitting down with the company's president and COO, John Waldron. It's coming up on Money Movers at 11 a.m. Eastern Time. Talk some macro environment, CEO confidence, capital markets, and more. We will get stock trading with Jim.
Come on, bro. You can do it, gang. You can do it, cuz. You can do it. Let the SPY go down and you go up. You can do it, Tesla. Let's see. Did we reject it again? Let's go.
With the Fundrise Innovation Fund, you can invest in some of the world's top tech companies, including those leading the AI revolution before they go public. The future is now open for investment.
If AI is the Wild West, does that make data the new gold?
So I took some calls here. Gonna on Tesla. That was a nice reversal.
60 was designed to wow. The interior, it's luxurious. Ooh, I didn't realize it would have a third row of seating. The 2024 Pro Infiniti QX60. Consider me wowed.
Oh shit.
Is about allowing
I want a whole 174.
We'll empower you to take care of your life.
Get invested. Join the club today. Go to cnbc.com/.
Is it just going to reject again?
Cataract surgery has taken another leap forward with
Shit.
surgery.
It might.
To bring you the latest advance, the light adjustable lens. This lens is unique. 3 weeks after surgery, we will use light energy to adjust the lens to match your prescription. Patients
Fuck me, man.
distant vision and good near vision without the risk of glare and halos. The future is here at Delaware Eye Surgeons. Let our team help you match.
It's going to go down.
A slow network is no network for business. That's why more choose Comcast Business.
There's no volume to the buy side at all today. I knew it. They got me. You fucking punk motherfuckers, man.
And T-Mobile. And existing customers can even get up to triple the speeds at no additional cost. It's ultimate speed for ultimate business.
Don't miss out on our fastest speed plans yet. Switch to Comcast Business and get started for
That's it.
$39.99 a month. Plus, ask how to get up to an $800 prepaid card. Call today.
Let's get to Jim and Stubbs ready.
One stock that kind of captures all the zeitgeist that we talk about this hour is Duolingo. Stock's down $49, is off 19% today. Duolingo, two theses that people are propounding. One is that maybe people aren't traveling as much, so you don't need Duolingo, and that's certainly we know travel not that much. And then second, this Samsung phone. Well, you don't need to speak the foreign language. You speak into it, and it speaks the foreign language for you. So the question is, why do I need Duolingo when I have the Samsung reputedly the Apple?
Do they still have translators at the UN? And they do? Cuban translation, real time?
I don't know.
Yeah.
I don't know. My guess is yes, because they seem to be a bit behind the times. I don't expect that they're necessarily on top of the latest.
My wife took 2 years of Italian, and she still can't speak anything other than allure. So I don't know. There's some smart languages out there. I go to countries that they speak English. I don't have to worry about Duolingo.
But you are going to get to a point where you're going to be able to converse
Right, well, this is it.
some
You
sort
can
of
do it.
device where you're fine.
I love David Faber. Let's see what's this.
We say that in
I'm gonna put it in. I
Mandarin,
don't know.
or how do you want to
I
say
don't
it?
know what language I would put that. It's a good point. I just spoke in English.
Yeah.
I'm a Greek.
Greek. Yes.
Nice.
Greek. Yes, they're Pericles.
Jim, you're going to stick around, right?
You know what? I don't feel like going
Yeah.
anywhere.
Why not?
Just want to leave.
Jim's going to be
Why
here
would I leave? It's like an Airbnb for me. I'm gonna rent it for the show.
because we're going to talk to ARM's chief Renee Haas about earnings, chips, and AI after a break.
So this is pickleball? Intense. With E-Trade from Morgan Stanley, we're ready for whatever gets served up.
Dude, you gotta work on your chest, dog.
I'd rather work on saving for retirement or college. Since you like to get That's pretty good burn, right?
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term
It's probably dumb that I'm not taking it off there.
Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. That got me thinking. Maybe selling our policy could help with our retirement.
I'm skeptical. So I did some research and called Coventry Direct. They explain life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments.
Alright, damn it.
We sold our policy.
I should have just got out right there, man, when it gave me the chance.
We had planned.
If you have 100,000
It doesn't feel right.
life insurance, you may qualify to sell your
It doesn't feel right.
policy. Let your policy lapse without finding out what it's worth.
We took some profits on the short.
Find out if your policy
And we saw the reversal. Let's just see. Let's see. Is it going to get... It's just struggling at VWAP. It's just really struggling there at VWAP. The volume is just dying.
Biz2Credit helps you stay on top of your expenses and keep the cushion you need to succeed. You have what it takes.
Yeah, that's it. Alright.
Get the funding you need.
I'm going to...
In our previous home, we had wood. I never liked it. I wanted a sustainable option, and that made Timber Tech the obvious choice for me. I love the indoor-outdoor living. I mean, to be honest...
Come on, baby. Just break back up. Boom, 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 boom. Let's go. Let's go. You can do it. You can do it. Oh my gosh. I almost...
Sure, I'm a paid actor, and this isn't a real company. But there's no way to fake how Upwork can help your business. Search talent all over the world with over 10,000 skills you may not have in-house. More than 30% of the Fortune 500 use Upwork. Because this is how we work now.
Let's go. Give it up. Give it up. Go, 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 go. Damn. I'm so close to getting out. I'm only giving this a little bit of room because I feel like it could just fall. VWAP is such a bad... Yes! Let's go. Bang! Let's go, big! Let's fucking go. I knew it. Getting pressured there. Take some off. Bada bing, bada boom. Let's go. Let's go. That was a tough one, man. God, that was tough. We got the short and the long right there. I'm out of that. I don't... Let's just see what if she can actually make some ground here. That's a nice volume push. It's pulling back. See if it can hold VWAP. VWAP has been an area of rejection. Bang. Fuck yes. That was a nice one. That was a nice one. God, that was tough. That was tough. Finger on the trigger. All right, let's go. Let's look for a pump to 175. Again, I'm not in anything right now. I want it to I want her to start proving something to me. That could have went either way. I felt it as soon as it broke through. It was just like whoop whoop, and you got that trigger. And yes, that was calls for Tesla there. Let's go. See if you can't run a test back up. Damn right, that was a nice trade. 79 cents to 88. It's like 20% there. Just on that move. The bigger move would be 176. We're at 173. I feel like we could get caught and chopped through here, so. All right, let's keep it moving. Let's keep it moving. Let's keep this day going. I know that's right. I know that's right, bro. It could have went either way on that second one, though. But I felt a little bit better for a few reasons. Because of the reversal. Because of the reversal and... you know, if you notice this reversal down here, it was a nice reversal. And it just, you know, I felt like... It kept VWAP kept acting as resistance, and I almost, and I'm like, man, I'm gonna just hold on a little bit, just hold on a little bit. Now watch this neckline because you only see it in a 1 minute. This could be a reverse head and shoulders here. You could kind of see. I would not consider this one because you would see them on all time frames. You should at least be able to, right? And here would be the neckline. Oh my gosh, bro. Come on, mouse. Right here would be the neckline with that trade line right there. So we will look to see if 174 holds. Look for 174 to hold. If it does, listen though. Do not expect like a nice trend day out of this. This is something that is not, it does not have direction right now. Okay? Alright, it does not have direction. Look at Reddit. This... It's stuck in a range too. Shit. I feel like Apple was a nice one. It's reversing right now. EMPH to the downside. We called that one out. This one could have some room down here. That would be the target. Target would be 106. Okay. Um,
Great point, because what happens is people at home mention, did somebody
oh shit, AMD. I forgot about the semiconductors. AMD to the downside. Damn it, that was another top idea today.
that's the shrinkage that you get of the low.
We could still get this thing down here, guys. Right now, 150. We could get this thing back down to 150. Just, I haven't been watching it, so I don't know how it's been reacting.
Meantime, it's foreign central banks that are talking more dovish than our own.
You'll have to watch NVIDIA. I would watch NVIDIA.
You're seeing FTSE all-time highs, for example.
I thought that was it. Quietly, they've been doing some really terrific things. Now, I know that they've got a government that is apparently on the ropes there, but boy, the lenders and the central bank in Dave, UK, the central bank, I know you've always been a fan.
Oh, yes, you know I cover it very closely.
Yeah. Well, see, Sarah's not here, so I just kind of.
My stuff's freezing up on me right now. Hang on. Oh man, that felt good. That felt good. That felt good. That felt good. It always feels good to get your a nice trade on. You know, starting the day out. Let's see. Let's look at. We're watching yesterday's low and the initial morning low. Like AMD chart is so ugly. I've been saying this. This could be an inverse head and shoulders, but it doesn't seem like it to me personally. It just doesn't seem like it. I'm gonna make this. I'm gonna remove that, and I'm actually gonna put this here. I'm gonna make this a 20-day moving average. I'm not making it the 20-day moving average. It is the 20-day. Nice little support level right here, possibly coming in on AMD. I think bounce, gap, rejection, bounce. It still feels like you would need to test like 150 or so. It feels like he didn't really test it like.
You're so right. We have to buy back the road. We want some deals. We want some buyers. Those would be exciting. If there's any industrial out there, please come public right now. But there's just not.
Meantime, we've been talking the last 2 days about geopolitical risk. It's been all over the place, given the president's comments about Rafah and whether or not the delegation.
AMD or NVIDIA has massive volume to the downside, guys. That's probably where we should have been, huh? Was semiconductors this morning. Okay, so your NVIDIA's coming up on prior day's pre-market low, or you know, the opening price from yesterday on NVIDIA. Now, why do we watch NVIDIA along with AMD? Well, because NVIDIA is the leader, right? AMD has been weak. So you guys can see here on the 1 minute, you guys can see right there, bang, that area right there. You know, you'll see if you can reject it or not.
Speaking of which, Kate Rogers has a news alert on MCD. Morning, Kate.
Hey, Carl, good morning. McDonald's making some changes to leading into digital ads and, quote, rethinking its legacy approach. Think print and TV commercials. That's according to a memo viewed by CNBC. In the memo, the company says, quote, our goal is to know our customers better than ever.
I need like a really nice setup. I know that. Like, I don't want to just be taking shit just to take it.
Adds that in the U.S. it has 34 million digital customers who have been active in the last 90 days and 58 million reachable customers overall. For context, Starbucks had nearly 33 million rewards members this quarter, and Chipotle had 40 million.
Yo, I do not know why this stuff is not saving like it should be.
Of McDonald's in the U.S. Brands, of course, are competing fiercely for loyalty engagement as these customers tend to visit more and spend more. They can be targeted with certain offers, menu items specifically available on the digital app, and more. Now, beginning in 2025, the company will introduce a new digital marketing fund for its top 5 markets. The total contribution here from franchisees in the U.S. won't change.
If we can reject this, we're going to go down to 150. It's only $2. That's the problem. You're only talking $2 there. So, me personally, I'm not too fond of it because it's not worth it. What are you going to risk? Unless you're risking like 30, 40, 50 cents to make $2. It's just you know what I mean. It's not you're not going to get paid, so it's not really where I want to be. I need to get paid, right? I need to get paid. I'd like to be able to do some things for other people. So, Tesla was nice. We'll continue to watch that. Look, going right to the target. But listen, I couldn't hold it, guys, because I sat through so much getting in so early. Um, you know, you're up. What? 2080. So that's 40. Let's see. So 40 would be 50%. You're up at least what? 20%, 35%, close to probably 40%, right? 20 cents. I'll have to go back. Cents on 80. Yeah, so no, yeah, you're up probably like 20-30% on that run there. It's a nice move, guys. That's a really nice move.
Little pop here, just some opening highs, Dow's up 100. As we said, going to
All right, so what I'm going to do is watch this 175 and see if we can hold it if we get up above that level of 175. I think it'll act as a rejection point, but that is a key level I'm going to be paying attention to. Maybe even taking a short up here. I did have something drawn, but I took it off because I couldn't zoom in and out. But we have a nice gap fill that we could get to back up here to like 178. We'll see. We'll see if we can get through this level and hold it. You just have to watch pre-market highs. And that's also, look at that resistance level there. We'll see. Let's see. We'll see what happens here. Qs are turning Tuesday's support into resistance still. And I think the overall markets may not move that much because of what we have next week. We have so much data. It's not even like you guys have to understand how much retail sales and industrial production, what those things mean. That's pretty much your GDP numbers, add on non-farm payroll, so which we just had this initial jobless claims number really good. And I've been saying, watch for a surprise, right? That's the highest number since I don't even know when. We have been in the low 200s for a year and a half, I think, since the last time was like August, maybe. And even then, I think we got up to it was like 227. So once you watch the numbers, you'll kind of know whereabouts we are. Listen, there has been a lot of storms too, so I don't know how many, how much of the tornadoes have been affected and how much that causes and possible storms and stuff. You did have a few others saying that they were laying off, so we'll see. We'll just continue to watch it. And I think we are starting that trajectory. We have been for the past 2 months. That upward guidance for initial jobless claims. They should, slowly but surely start ticking up. Pretty much like if you were to chart it, making higher highs and lower highs, or higher lows. All right, so I'm watching this level here on Tesla. Might be able to get a little short here and pull back to test VWAP 174.25. Unless we can break through there and really get going, I think you would probably need some type of news. There's not much volume here. Does anyone see anything with volume today? Like good volume? Google did break down from this level. You could still probably get this. I still think this is a good trade. There it is, right there. You broke it. You just retested it. Now it's starting to reject it. You really get cranking. You don't have much room, actually. Right there, 169.85, and you're at 170.25. So, not worth it. Not worth it, in my opinion. AMD, nice rejection there. But it has to be worth it again. You're at 151.39, and what are you going to go? To 150? You're going to go for a $1.50 trade? You could. There's nothing wrong with that. You got a nice little double top up there at the 20-day. Rejection of VWAP. But it's already down, 1.5%. I just don't know how much meat is left on the bone there. We can look at, again, I want to find something that has volume, that is moving. I want some momentum in my life. Kirk, what's up, gang? How you been, buddy? Well, if I anchor my VWAP, it all depends on what I'm trying to do. I don't really use anchor VWAP. I don't really use it. Because it's just like, I don't know. Like, it depends. Like, you could have a weekly anchor VWAP, monthly, yearly, quarterly. You could go from earnings. So sometimes, like, okay, look, Coinbase, right? For instance, and this is exactly where Coinbase pulled back to. I pulled it from its earnings. Now, the reason it may look like it to you guys is because I don't have pre-market on this, right? That's why you're seeing VWAP just start right at the opening price, right? You're seeing VWAP just open up right there. So that's why that looks like that. But I don't really use anchor VWAP. You can, but it's not like, I don't know. I think there's other things that will, if you're worried about like movements, I think there's better things to use than that, and obviously on different time frames. But you can see here, if you were to draw anchor VWAP, wherever she's at, let's see here. I know she's here somewhere. Let's see. Right. No. Come on. So it was this earnings, I think, right here or right here. It was one, because this is where the uptrend started. Was right here on this earnings. And we took it, let's see, because we just had these earnings. It's hard to say because this is on a 4-hour, and let me go to the daily. Yeah, so it all depends, Kirk, on what you're, on what it is you're trying to do. So you can see here, like on this blue line with the 50-day and anchored VWAP became resistance. You reclaimed it, pushed back down to it from these earnings, and then you started that second leg from the first rally from these earnings, right? Rally, pull it back. You got the earnings, bang, there was your second move. Now you're seeing like the candles are getting bigger, obviously because it's in a higher price, but a longer consolidation for that. Hopefully, which this is probably done, right? 1, pull back, consolidate. 2, pulls it back, double bottom, bang, and you got kind of a double top there. I could actually see Coinbase starting to drop back down to anchored VWAP, which is where at 181 with that prior high. Funny how that lines up, but I would not use that. I don't really care to use that. What I like to use, I'm going to tell you right now, there's only a couple people here, so look, here's what I like to do. I'm going to tell you guys the truth, all right? If I want to know movements, and see, listen, this is where earnings start to mess things up because you get these big gap ups, big gap downs, right? If I want to use them, I could use like, we'll just go to Tesla, daily chart, right? I'm going to start at either the weekly or daily. I'm going to start at the daily. I know the weekly, depending on where we've been trading at, if it's oversold or overbought. Look at the RSI, right? Just using an RSI. Look at the daily chart, right? So if I go here, and it all will depend if you use pre-market stuff or not. So look, 4-hour chart RSI. I'm going to give you guys a lowdown on a very nice way to get moves. Now again, because of earnings, this is going to affect it, right? It's going to affect it a little bit here. 4-hour, I know with MACD as well, negative, that I should expect some upside here within the next 2 to 3 days. At least to put in a lower high, right? On a 4-hour. So a 2-hour should be a little bit higher. Should be a little bit higher, right? I think it should be. Just a little bit higher. Let's go to the hourly. So we still have room on the 2 hour. Let's go to the hour, right? Still very low on the hourly chart. Of course, the stock is weak, so it probably isn't a good one to use. 30-minute is higher, right? We're not even starting to get over. So there's still relatively, could possibly be some strength there. This just probably isn't one to use. I would say right now, if we start holding, wait, I thought I was at the 15-minute chart. Okay, short term. You guys may not get it because I just moved on from the hourly 30-minute. I would say we get a pull. We're in the process of a pullback where it looks like you may start to put in a double bottom long term and then sit here and consolidate. That's not something to use, man. See, again, with this stuff, like, we could go to the SPY and use it, right? 4 hour, we're a bit overdone. You can see we're starting to reject up here, right? Let's go to the 2 hour. Okay, so it's a little bit further down as to be expected. Okay, cool. So what I'm going to look for and analyze right now, even on the hourly chart, looks like we could find support here at 517.50, right? And get another possible push back into like 518. This hourly should have a little bit more room to go, right? It should at least get to like right like in this area within the from now to like 11:30, right? So you should look. Did you see that? Did you see how it just pulled in there and it's found support? Now it's bouncing back to 18. Let's go to a 30-minute. We're starting to get oversold. That hourly should help pump that 30-minute to oversold. You get the 30-minute oversold, the hourly oversold. Let's go to the 15-minute. Let's see. It's starting to look like it was, and it's anchoring down. I still think it'll go a little bit higher because it is still in an uptrend. It might put in that lower high. Again, with these earnings, things are mixed up. You know what I'm saying? Things have just been mixed up because of earnings season. When we start to get this market back on a regular thing, let's see if we can get another pop. I'm gonna see if we can. I think we could get another little pop here, right? Get another little pop, and then probably fade it in a little bit. You just have to, like, I can't explain it how to use these things. Like, from now, it feels like we will probably go down. I would say that. I think we're gonna go back down. You know, I just felt like we had a little bit more upside on like a, you know, again, in a bull market, you can remain oversold. You know, I really don't use much more than just that. Like, kind of, where are we? What's the sentiment? Where are the levels in conjunction to what's going on with MACD, RSI, and different time frames? So really, you can go tick for tick on this. Right now, look. I said we should be able to get a bounce off of here, and we pulled into it. We're starting to try and get a bounce. Now, what could happen is we could just sit here for like a little bit, right? And just consolidate. That consolidation would take the hourly and 30-minute, that 30-minute chart. You can see how it's starting to get a little bit more oversold, right? Like, what did I say? I said I think we get that little bit more push upwards, which we're getting now, which would also send the hourly chart oversold. And I would expect a consolidation to help the 2 hour to put in a lower high. And then the 4 hour, obviously, you know, pretty much saying, let's consolidate. And I'm going to look for some downside going into tomorrow and into Monday, right? Looking at the far. I know that may not make sense because of earnings, and I may not have explained it right, but I can explain it better. And it's something that'll be in the book that I'm still working on, because this book, I'm not rushing it like I rushed my channel. Like, there's a lot of stuff that I wish I did differently, but it's a really, once I can sit down and explain it with somebody, you can really start to see something. And look, there's your pop back up to there, right? It's not like I know these things, but yeah, I mean, if you read the chart, it should tell you what's going to happen. And look, there's your pop. You know, to put in like a double top, and then we could sit here, along with using the Dow, right? Look at the Dow screaming to the upside, right? Qs were lagging. I should have went long the IWM. That was one of my top ideas. Yeah, look, the Qs are pulling back. IWM, new high. So, not a new high, but it's you know, it's covered past that pre-market high. So. But yeah, I don't really use anchor VWAPs. I think anchor VWAP is, I like to keep it simple, honestly. I would much rather just use, some moving averages, different time frames, along with the levels, with some sentiment, you know what I mean? But if I were to use an anchor VWAP, it would have to be placed where what am I trying, the question would have to be, what am I trying to get out of this? What do I want to know? You know what I'm saying? That's where I would put it. Do I want to know where it's at, between the last, well, I could tell you right now, even on a weekly, if you put it on Monday's low or Monday's open, your anchor VWAP would probably be sitting right here at 516. I don't even have to put it up to know where it would be, because we kind of just rallied and then floated, you know what I mean, started pulling back a little bit. Quarterly, yearly, from last earnings to this earnings, or would you go from like the past two earnings are good, go from where the earnings started if you're in a rally, right? You know what I'm saying? You could start doing things like that to give yourselves targets to get to, or like, if it matches up along with support and resistance, and if it's not, as long as it's not like some like 50%, 75%, move away, it would take something pretty crazy for that to happen. I mean, Roblox just got cut in half today, so it's not like it can't happen. It's Roblox, so what do you expect? $40, it got cut damn near in half. That's crazy. That's at least what, a 25 to 30% cut there. So yeah, sorry about that. I don't really use anchor VWAP. I have, but I don't. Unless I want to just see certain things, but I really don't use it. 15 minutes. So like now I would expect Tesla to start pulling back. I would start expecting Tesla to start. I think Tesla does have some downside in it, to test this initial morning low. But I still think that, after this pullback that I drew there, I still think Tesla does have. I think you'll test this pre-market level again, and then it should consolidate and try to like do something with itself. It's gonna try, but I think there needs to be a catalyst. I don't know if there's any type of catalyst coming up, but again, this also is because of earnings, and when you get these news, it really messes with like the MACD and RSI. So you got to understand that, as long as there's some time there with the stock, and using the different time frames to see, and then once you get them like where everything is like way oversold, like short term to long term, bro, that's a sell trigger. Like I don't know what, right? Like I'm expecting a double bottom here. Look at the 3-minute. We should have some room to pump back up. You may only pump to VWAP, so this could be a nice scalp, right? You could get to VWAP. They both meet right there at where that pre-market level, right? That makes sense, right? This is just how I put the markets together, stuff like that, right? You have this here at like 174, we'll say. That was support and resistance. Support, resistance. We broke above. We're below it now. We'll see if we can't get a nice pop, right? That'll start yanking VWAP down, and they'll all meet right there. Boop. Maybe for your 50-day test. I don't know. And the 15-minute chart tells me we have room further down. Let's go see what the 5-minute is. See, the 5 minutes, it feels to me it's going to put in like a double bottom here. It does. It could sit here too. That's always the other option. It could sit there. And yeah. So all right, let's go. And that's why I always say, like, unless there's news or something changes, we should be able to know where pretty much even tick for tick whether a level is going to hold or not. Because if you know how to read the chart, and use that with volume, the only way that is going to change is if there is news, or news comes out of nowhere, or something. You know what I'm saying? So I want to see if Tesla, even though Tesla feels weak, I want to see if it can just put in like a lower high between the next, like tomorrow and into Monday and into Tuesday. Doesn't mean it's going to. Doesn't mean it has to, but Apple. Apple. But yeah, we double dipped this morning. I double dipped on Tesla. I took it short this morning, and then went and flipped to the long side just to stuff some money in my pockets because this week's been really slow. So I'm just trying to get in where I feel like yesterday I was actually really busy yesterday. We actually were on some nice stuff like JP Morgan. That was in the morning watch list. I said watch for that 50-day. If we get a rejection, I'm going short. If we can break above and hold, we're going long. And look at it. We put ourselves in the right place at the right time. Starbucks, right? What do these all have in common? Relative strength and relative weakness. Like I want institutional money flow. Like the volume really picked up yesterday, not just in financials, but like on JP Morgan. Like there's your 5-minute chart, and if you look, just the consistency yesterday, right? Look at that volume, right? Like I'll go down to like the low, or like the highs from today and yesterday, and look at that, right? You can see the consistently high volume. This was our trade, and something happened when I went on Twitter yesterday. Where the stream stopped, but I was able to get this out on the stream. And look, here's the target today. I drew the arrow out for us on Starbucks. This is the target right here. All right. Damn, I missed that one too. I didn't look at it again. I was looking at it for a day two, a day two continuation trade, but I didn't think it was going to do that much. Look, because this morning when I looked at this, there wasn't that much volume at all on it. Damn, I should have never stopped watching this. That's a nice trade. Damn. And I drew that this morning at like 7:30, 8 o'clock. It's whatever. Can't get them all. Damn. And look, JP Morgan. I did say JP Morgan, we could probably get a... look for a day two continuation on these. All right. Oh, man, that sucks. That's brutal. That one's a brutal one. I drew that out this morning. That 174.80, 175 target. That stinks. I just, I kind of figured within the first 15 minutes I would have saw some nice volume, but look, it didn't really come in until, yeah, it did. It came in at 9:45. I was too busy watching Tesla and trading that, but I did look at Starbucks to see what it was doing. I just didn't give it enough time. Oh, that's brutal. That one hurts. That could have been a really nice trade there. I could have packed it up after that one. Instead, I'm fooling around with these ugly-ass charts. Tesla and AMD. All right, we have a nice little double bottom there. Getting put in. Volume's starting to slow up. What's the SPY and the Q's doing? Let me check on Snowflake also. So these red boxes, like this red box is going to be the 50-day moving average. I think you could see Tesla get back down to like 173. I actually was thinking about the there you go. You might get your double bottom there. If you hold this level, I will think about another long, possibly scalp it back to 174.50. I don't know. It's not really worth it. Shit, I forgot what I was going to say. Oh, I was thinking about taking a trade, guys. Thinking about trying to get Tesla back down to 165. That was on the list. I think it is kind of on the list. I got to decide whether or not to, could I just do it both ways? Spend a little bit of money both ways, and, obviously, I'd probably wait till later in the day. You can see the hourly trade line, VWAP coming down. This thing's just way oversold. But it again, just because something's oversold or overbought, it doesn't mean that it can just remain there. Okay, so 4 hour, we do have some room down with no trade. See, that's what you have to decide too. Is just having an understanding, because people and institutions are looking at the charts with pre-market and without. So it's good to look at it with and without to kind of have an idea. Do both analysis line up for the most part with one another? And I think it's fair to say that, you know, this thing is oversold. Let's see what this little pop does here. Like, if you were to look at the 3-minute chart, see what this little pop does. But I'm not going to sit here and watch Tesla really anymore. Well, I'm going to keep an eye on it, but I don't want to waste my time because it's still 10:30. We could still try to squeak out something from like 10:30 to 12. Let's go here. Let me give us 2 more screens. All right, so let's look at NVIDIA. That's already. Come on, bro. That's a nice pop into that rejection zone right there. You could see it's already there, but unless you want an $8 move, I don't know where the 50-day is, but if you get a rejection here on NVIDIA, you could stay up here at like 890 and get a pullback down into 880. That's a $10 move on NVIDIA. That could be a play. That could be a trade there. It could be a nice trade. AMD holding up. AMD with a nice bounce back. I didn't think AMD was worth it. Damn, look at the SPY go. And there she goes, guys. SPY is going. Sayonara. Let's see if we can find out what else is going with it. What's keeping the SPY up with it? Let's go to the heat map real quick. I know energy in CCJ we gave out. Look, what I say. CCJ or energy, healthcare. You know, why did I know that off the hip? Because of the Dow. Because the Dow going. And I'm actually surprised some of the names that are still in the Dow. Actually surprises me. No. So CCJ, I ended up bringing this up a couple days ago to make a new high. Actually, matter of fact, it was here this week and at the end of last week because I had a YouTube video that came up on my phone randomly about the production of uranium. So this was something that I put on my I put it up and I just turned it, you know, went to CCJ just, you know, knowing that uranium's been going, and come to find out it's really liquid. So I was like, oh heck yeah. So I've been keeping an eye on this, and I know GLD as well. Gold I think was doing nice today. Look, yep. I should have just stuck with that. So I did see this morning on the scanners, and I can look at them right now too. Is like names like XPeng, PDD. Let's go look at them. And I'm looking at the top right box. XPEV, XPEV. Okay, it's not doing anything. Oh, that's why it was gapping up. CRW. Let's go look at CrowdStrike. Okay, security names are doing well today. This is just randomly how I find shit, by the way, guys. I just randomly throw it in my head and it just comes to me. Dude, I wonder if CrowdStrike has room to 320. The volume is awful. Yeah, I don't know if I can do that. Dude. Oh, wow. So it just held the 50-day. Yo, if we could get a pullback right there and hold that 316 level. Man, look at all these tails up here too, though. I think that's an indecision day there, and I feel like you held the 50-day, and it feels like it's trying to break out to the top end of this range. We could see. Damn. Dude, when was the last time I charted this thing? Obviously a while ago. I'm really curious if this is going to try and do something. Watch for a pullback here on CrowdStrike. So would that be the 38? No, look, VWAP is way down here. That's probably, this is probably what, 2 standard deviations above VWAP there, that pivot high. Probably have a mean reversal getting ready to come in. Look at the volume too. I wouldn't fall for it, guys. It could continue. I would just wait, let it pull back. I don't know about trading this thing. 50% retracement would be VWAP, but the volume's just, man, that's weird. See, what would be different with this is if we had this type of volume where you had, 50,000 shares just consistently across the board, and like the candles were filling up, something like that, and it was just consistent throughout, then that would tell me, okay, we have an institution here wanting this thing, and we're going to get on the same side as them because they have an algorithm that's just, they're eating these things up. They either know, it's not that they know something, they want it, and once they want it, I want it. That's what pays us. At least that's what pays me, and it makes for really stress-free trades when you find those. I've also been trying to keep an eye on. Damn, look at HD. This is what I'm talking about. Damn, look at that. Oh my god. We're seeing a. You're seeing yesterday. This is exactly what JP Morgan did. Now, we started watching JP Morgan on Tuesday, like Monday, Tuesday. I brought it up. We were watching it for that pullback and hold. Either it was going to hold or it was going to break down. It was going to break down or it was going to rally off of that level. And you're seeing more of these Dow names start to go. And that's why I always say in the mornings, like, I go through and I watch what sector and where they are. Not just like, oh, the IWM is up, the Dow is down, percent, one's green, one's yellow. No, where is it at on the chart? Because that's really going to help you. SEDG, DG. Solar Edge. Yeah, that was another one that was on the thing. That just randomly came to my mind. And ENPH we gave out. That's what it was for the short. Did it work out or no? Let's see. This is the target, was 105. No, it recovered. Maybe get a double top up there at 112. Anyway, I bring up, look at the Dow today. Holy shit. Oh my god. UNH. I'm in the middle box, by the way. Sorry. No, stop. Okay, UNH. Bro. That sucks. Flight to safety? What's TLT doing? That's so weird. Let's go see what is Intel's going. So, and I already have the Dow because it's been going. Amazon? Fuck. No? It's not doing anything. I mean, I could have kind of figured that with technology, but what's Ford doing? I missed this short too, guys. I really wanted this short here. I think it was that day right there. It was last week. Or no, it was right here, Wednesday. I missed that. Right there. Nice move down. It was down a lot. And Microsoft. So I've been paying attention to big cap tech, and they haven't been, in my opinion, doing too great. me see.
Appreciate it. Still to come, chip stocks rallying recently and outperforming
Fine.
here, but can the gains continue? NVIDIA CEO says we are in a renaissance. We'll discuss it next. Don't go away.
I know Meta has been really strong. I will say that Meta has been really strong. I don't know. That's why you see there. I should have had it up. I should have had the Dow up. This is crazy. This is a huge day for the Dow. Huge day. I don't know what much more to get or look for after that. I mean, it's only up 0.5%, oddly enough. And I don't know the average on that, but I would have to say 0.8 to a percent, 0.8%. The SPY is only up 0.3% right now, which isn't crazy big. Let's see. That's wild. Sorry, I don't have the chat up. You have small cap going too. It's let's go look at this. CCLD. You're gonna see a lot of the. Wait, it's breaking down. Never mind. Wait, hold on.
Finds FAA oversight of United to be audited by U.S. watchdog agency. That's Uniform Alpha Lima UAL.
Undetected and untreated. A $40 billion problem. Now, Orogenics, stock symbol OGEN on the NYSE, is developing a potential game-changing.
It's breaking down. I'm not worried about those. Let's go back to the heat map and let's see what we got going on. What's Boeing doing today? Is Boeing getting any juice out of this? Yeah, gold names are going. AG. First, look at the volume on this thing. This is what I like right there. That's what I like, right? All that congregation just filthy thick. I love it. That's big money right there. And they're going to pay me. They're going to pay me today. I would put a stop. Look, we have VWAP here. If we can consolidate right here at 750, I might go for the long to 775. I think we can get there. It's like 762. Let me look at the daily chart. It's a gap fill. We're in the gap now. Or we filled the gap, I should say. Sorry. Yeah, we'll see if AG can hold on. I feel like I've missed that run there. Look for like 730, 740, 736, 746 area if we're able to get that. I don't think we are. Damn, man, that sucks, bro. I always wanted to make something or build something, whether it was like, where, we could have like the markets covered. I mean, I guess I could use I guess I could set the scanners up for it. Could do that, but I don't know.
First off, I'd just love to get your take on the one earnings report we got this morning, which is ARM. I think you cover the company. Stock is down about 4.5% or so. What do you think?
So people, if you look here, like PLTK instead of PLTR and then PTN, that's so weird. Cake. Oh, Cheesecake Factory was yesterday. I heard that yesterday. There was news or something on that came out yesterday with that. Redfin. Let's see. Let's change. 1326 Z-Lab. CLAB.
But now you will start to see AI and intelligence spread to the edge of the network, and maybe ARM is one of the most unique ways to access that. That means every
I feel like I'm going down a road I don't need to go down here because, well, you know what? You're above the 100-day. This actually might have room to $23. This could very well have room to $23. I think that's actually where it's going to go. Look for a pop here. You have a high volume break. High volume break there. And I would look for $23. Let's see if there's support there also. Yup, what do you know? There is. Isn't that funny? Alright. Z-Lab, guys, if anybody wants to take it, I think you got $3 left on that thing. I think there's $3 left on it. You have a nice triple top there. Prior support and resistance right there at 23. I think this is a buy trigger right now. You should start to see level 2. There's nobody's buying it. Nobody knows about it. There ain't no damn share. Look, 50,000 shares. Come on, bro. But yeah, in my opinion, that's a buy right there. It doesn't have much liquidity, but I would like that, and I'd probably put a stop maybe just below VWAP because it hasn't really tested it all day. It tested it a little bit, but look, watch. Let's see if it goes. I think it's gonna. It should. If it doesn't, that's a problem. But I think you should get $23 out of that. Meadows back up above. I gotta fix this daily chart. I wish they put big cap tech back in. Whatchamacallit? I was watching a thing with what's his name last night, Dan Niles, about he's just things being overvalued and stuff like that. I mean, it is true when the SPY is at at 20 times forward earnings, 20 to 22. It's usually when we start to get our pullback. It's just like I also think, in my opinion, I think it's going to be some time before that multiple of the SPY, because we're just starting to come into like weakness, right? Job growth. You're starting to get higher taxes with higher energy, higher everything. Like possibly you don't have it yet, but I think that it could be a couple more earnings, even though that we've been revised down a little bit. The SPY was never revised down because it's just, it's equally weighted. Energy's been doing really good, and you have gold. You have the dollar. The dollar started pulling back yesterday. I forgot about Coinbase, MSTR. Sorry for just blabbering. I don't know. I just been talking, guys. Sorry. Coinbase gets back above here, you could see a little short cover. Possibly. I don't know, though. I still feel like I need to not rush into anything. Like, take what I can get and don't do too much and give some back because it's that type of week. What was I going to do? Dixie. Let's go look at the other markets. Yeah, look, the dollar's pulling back heavy. Oh. Alright, so we got an hourly chart. Boom, boom. Alright, you have some support. Damn, I think it would be nice to get down to 104.3. Keep watching the dollar. The more that we can get this dollar to pull back, you tried to make that area support. As you can see here, this is just going to help gold out. So let it bounce, and that'll be the pullback for gold. And if we start getting this rejection here, I'll probably set a an alert, and I'll probably take a long gold, and I'll go out next week. That's a plan that we could do just to make some money. It's our job just to pull money out of the markets, not put money into it. 10-year. Oh, guess what? We have a 30-year bond auction as well today at 12 o'clock. 10-year didn't do much. It was kind of bad, but We have a 30-year bond auction today. It'll be interesting to see what that does. You know, and then we'll also get a little bit of insight on where the Fed's liquidity is. I think tomorrow. I don't have an account with Fred, and I don't know if you do need one, but I would like to know when they update this. Right? I would love to know when they update this. I wonder if I could just go get, because it's supposed to come out on Wednesday, and today's what, Thursday? So this stuff should be out. What's today's date? The 9th, right? Yeah. And that's May 1st, of course. And let me see if I can refresh it. See what I mean? It's not going to give it to me until tomorrow. And I'm telling you, if this thing bounces to the upside and the markets do it, that's not a coincidence.
Welcome back. Check out this mover. Roblox shares plummeting down nearly 22%. Steve Kovac's been tracking the action and joins us with the numbers and what's really got investors spooked today. Steve?
Yeah, listen, this one is
Let's see. Give me. How should I word this real quick? I know that sounds stupid, but
the guidance for the current quarter and the full year is pretty rough. Company says it saw a lot of weakness in engagement, and it turns out the problem is more technical than anything else, at least according to the company. I actually caught up with CEO Dave Baszucki.
March 11th, huh?
At the end of last year, the company launched a bunch of new features in the game that caused a few technical hiccups, especially on
New
mobile
loans
and
as
Android devices. Most Roblox players actually use Android. He even called
Let's get it. Let's go.
one of the company's key growth factors. Now, if Roblox is
I want to see a chart. No. Don't do no. We want to make this simple. Okay? General information. All right, general information. I just need a chart. Give me the chart, bro. I just want to know where it's at. Where it's at? I put in FOMC release.
How does the competitive picture look right now for Roblox?
Did I just see chart?
How does that compare with some other peers?
I thought I seen it.
Have seen limits?
Discount window, payment system risk, discount window, the discount window, introduction, types of credit. I'm not getting anywhere with this. And this is on federalreserve.gov. Okay. March 11th, right? January, February, March, April, May. No, May. May.
Positive territory, generally positive tone to the overall market, including even some names that we saw down earlier, making up for that.
Why do they not have it on here?
Not nearly as much as it was in the early going. Warner Brothers Discovery now in positive territory, and some of your bigger names as well, including Apple, Meta, Amazon.
Bro, I just want a chart of it. I just want to know where it was at. Just give me the number even. You don't.
Finding opportunity in fixed income today helps secure tomorrow. Our time-tested fixed income suite, backed by over 145 years of risk experience, helps investors meet their goals. PGIM Investments, shaping tomorrow today.
We know that it ends in March, April, May. God damn it. Excuse my language. I'm sorry, guys. I guess I have to go here. I just want a chart of it. That's it. Where's the number? May, January, February, March, April, May 2nd. See, it hasn't been updated. I don't like that, bro. Come on, man.
Capital has arguably been one of the highest performing investments. But for most investors,
Damn it.
until now,
I didn't know you was gonna do that bullshit, Powell.
you can invest in some of the world's top tech companies, including those leading the AI revolution, before they go public. Now it's your turn to get in early and start building a portfolio of industry leaders, disruptors,
On that bullshit.
with the
On that bullshit, Powell.
The future is now open for investment.
Think equity. Finance
All right, I'm not gonna be able to get it. I'm gonna try this one more time here in March, April, May. Nice. Discount window, I guess I could say. What's today? Today is the 9th, so it was yesterday. So it would have been yesterday. Winning chart discount window. It's gotta be here, bro. It's gotta be here. 2024 5.
Wednesday, May 22nd.
I know it's.
CNBC's Financial Advisor Summit. Economists and top investors.
All right. Sorry for going through all this and just wasting everybody's time. But it would have been nice to know. It would have been really nice to know. No, I don't need. Select it. Actually, oh, here we go. Let's see if it has it up to date. Oh my god. No. Alright, whatever. I'm done looking at this. I'm going to go back.
What's driving this reversal? It's been a pattern, Leslie. I would say over the last 2 weeks, you've actually had most days finish higher than you were at the midpoint of the day. So that's a positive show of at least underlying demand. And the market's kind of dancing through the raindrops a little bit on some of the prominent earnings misses.
So again, this is
In aggregate, if you look at how the 12-month forward earnings forecast is holding up, it's really steady. It's like looking at 9% growth on a forward basis, and that seems to be providing sort of that foundation for where we are. The other piece of it today is that the equity futures firm.
It's not going to give it to us. We're going to have to. Yeah, we're going to have to wait for it. We're going to have to wait till it comes out, or whenever they get it. Again, keep your eye on here. Financial conditions have softened a little bit, kind of just sitting down here, kind of just putting in a base. And if we start to climb higher, obviously you'll know, which we should be just about at the top, right? I'm not saying we're going to crash 30, 40, 50%. I would hope so. I would love for that to be the case, right? But I think there will come a time where, just like 2018, I think you might start getting the market to price in. If the Fed doesn't do anything, the market will try to start telling the Fed, all right, we need you to give us some slack here. And if you don't, we're just going to go price it in, you know. Because the longer you wait, the worse it could be. But here's what I really want. Like, if you guys notice, if you go to a daily chart, look how separated the markets are. And they never, this isn't good. This is not healthy. Right? So here's the SPY. It's way up here. Now, where am I going to base this from? I'm going to base this from, we'll say, 2023, 2022. I'll base it off of that. And I'm going to show you guys something. Now, I've been storing this in my back pocket because this always happens. The markets always catch back up to one another. They even back up. One way, shape, or form, you just have to get the timing right. That's on you to do your research. And I'll show you where it happens every 5-6 years. Or every so often when things happen, right? Here's the SPY. Way above, we could use the prior high, right? The prior high, we're way above it. Same for the Qs, right? Prior high, way above it, right? Dow, we're way above it. The IWM, we're still down here. So this is where I think things get interesting, and that's why I put this here. You'll always see, if you go back 2016, now specifically the IWM and the SPY. Look here, right? We'll use 2018. Look at the high, right? Right there. You fall, you rally, and then you just consolidated. And then you went and you hit where? You pretty much put in a double top. If you go to the SPY, 2018, right? You put in that high, fell, you rallied. What'd you do? It actually made a slightly higher high than another new high, right? And you just kept climbing. Look how far away it is from 2019 to 2017 or 2018, whatever that is, whatever the year is. 2017 that would be. IWM, and I'm going to show you. Look at the IWM in 2017, right? It never, 18, 19, never put in a new high. And what happened? I'm going to show you guys something here. Because you can take it back to 2015 is when it all starts. Now what happens is, you'll notice, the SPY and everything else, what do? You'll see that they even back up. It's easier on a weekly chart. You'll see here, we rallied. Let's use this right here, right? This second, so you have 2017, 2018, and that middle of the year double top on the SPY. IWM. It never did it, right? Let's see. What am I doing here? I had this all already marked out and done. I did not plan on doing this today. We'll do it later. What time is it? It's 11. Unless something's going on, let me just look over here at the Qs and the. So the Qs are breaking out. But my point is that they always, you get this sell off where they meet back up and they even up and then they start going with each other. If I were to bring up a weekly chart, I did it like a little while ago. A weekly chart is really what you need. You can really see it with a weekly chart here, right? I'm going to show you guys. I will. Let me go to the SPY and the IWM. You know what? Here's what I'm going to do. We could just do this. We could do this. Right? We can do this. And what you have right now is this. There's a big separation between the SPY, the Dow, and the Qs, and small caps to large caps and mid caps. And you can start to see right now, what are large caps doing? They're not leading higher. They're actually slowly showing you guys they're done making new highs. They're so far they're consolidating and not making highs. Now, once you get the mid cap companies to either catch up or not catch up, if they don't catch up, you're going to see this market pull back. And small caps, or not small caps, but mid caps, large caps, and big cap tech, they'll all meet back up with one another at a certain area, and then they'll try to get back to it. That's what they talk about when you got people here about a healthy market. And it is that in and of itself, right? Like the separation between the markets, right? You're supposed to have the leaders lead and the laggards lag. Well, some of these laggards are not lagging. They're still down at lows. So 2015, where are we at? Do I have 2015 on here? 2015 right there. That is the SPY. Usually I had the IWM on the left. So here we go. We came out of 2000. See, why is that like that? Because I have time and sales on. Yeah. 2010. Weekly, okay. IWM, here we go.
Making it clear to all of us that there's a bit more weakness in there. But I think when you go to the kind of mid-level of the consumer, the $80,000, $90,000, $100,000 household earner, they're still spending. Those numbers are still strong. The data still suggests that.
All right, 2008, come up. You can see the SPY double top, made a new high, bang, match up. Let's see, here we go. All right, here we go, and then they rally. So you can see, right? Just so I can keep myself in line, okay? All right, there it is. There's that head and your shoulders there. And then you have that nice little boop, and then a rally. Like, look how far above to the left on 2017 here, 2007. And look at the SPY. Look how far it is, right? And you rallied. It's up a little bit, so we rally. And then we get to 2015, and that's where we want to be. All right, so 2015, let's move this over. Move this over. So you can see 2015, sorry, right here, 2015, 2014, to 2014, 2015, consolidation, 2015, consolidation, rally, come on. There was no double bottom there. See, it's going to be hard for me this because I've already done this work. You know what? Here you go. Let's do this. Here. Wait. I already posted it. Let's go here. Sorry, guys, because it's a lot easier for me to... Because I already have it all marked. And I have everything written out here. It was just not too long ago here. Because it's just going to take me a minute to go back and go all the way through everything. Right here. Let's see. Come on. Okay, here we go. We're coming up on it. I just want you guys to see this. Here we go. Here it is. Right here. So you guys can see here in 2018, 2017, right? On the left-hand side, the IWM. Say you get this rally here. So I have everything marked, right? Same thing, 2017, 2018. You have this rally on the right-hand side. And then it pulls back. You have that bottom, right? Pulls back, right? They matched, right? They matched, and then they started rallying. Look at the SPY on the right-hand side, how it made a new high, right? Off of this pullback. The IWM never made a new high. So what happened? Once it got, and this looks exactly like the charts we have right now. Just one big, look at the left-hand side of the screen. Look at this long consolidation there, right? Look at that long consolidation. Kind of reminds you of what? Of that, right? And then you get that pump right here to like the top, which is that like 220, 230 area, right? And then it falls, right? SPY made a new high. What did we do? We fell. And what happened? Look at the SPY. It made a new low along with the IWM, making a new low. SPY making a new low. They matched back up and then rallied. Like made new highs with one another, right? And we're still at that part. If you take this thing right back, you'll see the SPY, right, back here is making new highs like we're doing right here on the right hand side, right? We're making new highs. Like this is, if you guys can see the thing, like look at this, just rallying, and you're starting to see the choppiness. And I feel like that's where we're at right now and what we've been doing. We'll see, but these markets should match up with one another. And the longer that you have the IWM not meeting up with the rest of the market, you're going to continue to hear talks about not necessarily that we have to have a recession, but you're going to have the market like off balance. You're going to have stocks that are making way new highs and other stocks that are in the same sector like still down at like by lows. So I would just keep an eye on it. Doesn't mean it's going to happen, but this is like really close to back here where you just consolidated and you tried to rally and then it failed, right? You never went to test that high, right? You fell, we fell, consolidated, and we'll see. It doesn't. Nothing's going to be exactly the same, but it's kind of like, it's just like, if you really look at that and go on my Twitter and you look at that page, you'll see how just how it like really looks exactly alike. You could probably maybe look at it with the Qs, right? This is the research you got to do. You look at the Qs and the SPY together, maybe the Qs with the IWM, right? A little bit more riskier there. Technology with small caps, put risk and risk together. But this is the imbalance of the market. You're seeing, the Roblox today get cut in half. You're seeing Tesla, a large cap, that's just way down. You're seeing Apple not make new highs. They technically are consolidating, but the only real strong stock that I kind of feel like I see is Meta. But your leaders are just kind of sitting here consolidating, waiting for like your snowflakes, right? Your large cap names. Look, down at lows. It's not catching up, right? Coinbase tried. It's trying. This one isn't bad. So, as far as the sector, like RCL, Oracle, like with Microsoft, that's not too bad there, right? Just keep an eye out. That's all I'm going to say. Now, again, nothing's going to be exactly the same. But if you go back, go to my Twitter and just, pull that up, or even just look at a chart for yourself and put them together, and you'll see how much in common we have. And even with gold from that time, right? Gold broke out 2010, 2012 and just ripped. And that you're kind of like in the same type of sector. I'm sorry, it was like 2018, right? You got this nice rally there, but I thought it was like 2010, 2012. I have to go to gold itself, I think, if I wanted to pull it up now. Yeah, right there. Yeah, it was in, you made a new high in 2009, 2010, but that rally and extension that took you into 2011, that 2-year rally was just nuts. So, I don't know. I think, the longer they stay separated like that, there's going to be more imbalance in the market. Because what it also shows you underneath of all that is that, but are those deals not being bought for a reason? And if that's the case, what's wrong? You know what I mean? Why aren't they being bought? If they're like half decent companies that shouldn't go bankrupt, is it going to take the bankruptcies to start happening and more banks to start? I think we do. I think we need a nice little pullback in all assets between homes, jobs, and just pull it back for a little bit and rally. Or don't and keep feeding the beast. I don't care. Either you're going, because like you stopped feeding the beast. Now it's kind of just like, they fed it a little bit just to keep it alive with the bank term lending program, but they did it with higher rates. You know what I'm saying? So it's just a matter of time, and when that shows back up, what are they going to do? Are they going to continue to feed the beast again, or are they going to let us really go into a small recession? Jerome Powell did say he's okay with a few banks going under. We'll see. We'll see what's to come. But as long as the IWM is still down here, it's part of the major markets. I think you really gotta, just understand that and just know that like there's a big imbalance between, small caps and large caps, and if those deals aren't being, because what I'm trying to say is like you have the SPY, right? You have Apple, Microsoft, all these names, right? They're at highs. Nobody's buying them up there. They're going to be taking profits. But if they're going to take profits, where are they going to put that money back into? Right? Is it going to be treasuries? Is it going to be, like, if it's not in any of the smaller companies, then what's it going to be in? Because they're scared to go, like, IWM is made up of regional banks. We could go in and look at it. You can see here that, there's probably, they don't want to because of risk of these banks, pulling back. You actually had semiconductors, not semiconductor. You had regional banks do really well yesterday. Come on, man. So you can see the Russell here, names like MSTR, you know, Celsius, stuff like that. There's a lot of names I haven't even heard of. You probably haven't heard of them either. Like, you know, I mean, if everybody's probably heard of Wingstop, but and once again, look, well, see, it's flat right now today, but financials is a big weighting, like huge weighting. I don't know. I'm just still watching this, right? Mara Riot. I'm watching the whatchamacallit, the I don't know how to say it. You know, where there's a huge mix match. Like the IWM should at least be up to like 220, 230 area. It should be like up here, right? And that's telling us that risk is still, there's still something going on here, right? Because if this being down here is telling all of us that it's not safe to be there yet, because you're not seeing really any money. You're seeing a little bit of nibbling, but how much further before this thing dies? Like you know. So I'm gonna keep my eye on the IWM and see, like, is it like this would be a soft landing? You would start to see that shift, that consolidation in big cap and large cap names start going here, and you start seeing this thing start to break out, right? That would be a good sign. Then that would mean the IWM is trying to catch up with the Dow and the SPY. If it doesn't, it doesn't. And you know what's going to happen is when we do get that pullback, the IWM may not pull back as much, and then you start having the Dow and the SPY. They all actually they meet back up, and we may get a healthy market. When that happens, I don't know. It could happen down here at like 2026, 2025, 2026, 2027. I don't know, right? I don't know. It may not even happen, but I will say the longer that this does go on, you can see here, you consolidated for like a year, but and then it attempted and then it fell. This is the same thing with COVID, right? We sat there all year and I remember I traded it 205 to 210 or 230. You tried to rally, bang, got cut off, and it went right into a bear market. So do we try to rally and then we get it taken back along with the market? I mean, it's a good sign, because every time you had a long consolidation with a rally attempt, it was met by a nice pullback, right? Consolidation, rally attempt met with a pullback. That's a nice inverse head and shoulders too. So I want to know, where's this rally at, bro? Start it. I need it. Let's go. I want to get it going, right? It's not that I'm impatient, but I want to start to see the IWM start to make some ground here. And I feel like institutions know this. Like they kind of bring up the IWM and small caps. But here's the other thing to this too that could help is it's probably going to take until rates pull back, because you could see like names like biotech, they're really going to outperform when we get to that time when that trade is meant to be put on. And I'm gonna look to put that trade on, but I'm waiting. I think the minute, like even on the day of Powell, the day that he cuts rates, maybe leading into the Fed day, we watch this, and we watch for a small little like rally out of like biotech, right? You start seeing this thing rally for closes green for a few days in a row, leading into a Fed meeting. You might be getting your sign that that's the day that we do cut, and it would be, let's just say that like it's unexpected, but you're seeing this. Really, you're not going to get anything that's unexpected. Like it's not like, oh, maybe we think that they do, but if they don't, it's not surprising. That's what I mean by that. But because the Fed will usually always do what is priced in by whatever the traders are pricing in.
Adjust the earnings for non-earning assets and the cash on the balance sheet. And we like what we're seeing with some financial discipline from the company for the first time in a while.
All right, guys. So let's go run through the markets real quick. I was getting ready to grab something to drink. Sorry, I didn't mean to be on Twitter. I was trying to click on this. All right. So clear separation. All right, semiconductors. You can see tech is starting to go weak. Cat, John Deere, energy, steel, gold. We said pullbacks, bounce back into the Dixie that we would look for. Look, it already did it, didn't it? I missed it. I was waiting for this bounce back, guys, to get short. Shit. Give me a 15-minute chart here, 30-minute chart. Let's see. Oh, that's why. All right. So what I'm gonna look for, sorry, I just wanted to grab something to drink. I'm gonna watch Dixie. I want to see if we can start putting something together here for the next few days. If we can get this dollar to start pulling back. It's a tricky time because, we've already held this level twice. I still think we need one more bounce back, right? I think we get one more bounce back, and it looks like it's setting up that way. It look like we get one more bounce back to like right here and really solidify that area at 105.5, and then look for a pullback. I'm gonna look for names like GLD. I wonder, you know what? We have the 30-year bond auction today. I wonder if that does anything or not. I think a lot of this stuff's going to come down to next week, and if we don't have a trade on now, like, it's probably not wise to put one on. But I won't shy away from even trying to, make some money. I have 2 trades today. Yesterday was a busy day for me, actually. Starbucks, JP Morgan. I think I traded Tesla, a few names, and I was just getting my moves and running, and taking my money. It's a little double top there. So what I was looking for is if we could pull back, like if the dollar bounced back, which we got, I was going to try to trade gold, right? If you get this bounce back, which would be higher for the dollar, then we would look for GLD to continue to pull back, and then look to like maybe try to swing higher. Like it looks like it could right now is trying to consolidate. The volume doesn't look that great though. That's what scares me. I don't know. Just got to figure it out, It will just take what we can get. If anybody sees anything, let me know. And let's go to XLM. Let's go look at like Microsoft and stuff, because I feel like those. Look, yeah, Exxon, a big winner today. Shit. What did natural gas do? UNG's 15-minute chart. UNG pulled back yesterday. Oh wow, look at that. So yesterday, I thought we were going to start breaking down a little bit, and we did. Look, we went down to 1580. That sucks. So what you may not know, last week you had, and I brought this up, I think Sunday or Monday, was you had a major natural gas company out of Russia like get hit. Something happened. Whether it was just like they caught things, the building caught on fire. So either something happened, whether it was, no fault to their own, or it was their fault, whatever, right? Whether it was Ukraine or if it wasn't, it kind of doesn't matter. Maybe it doesn't, but, you don't hear much about that. And that's why last Friday you started getting a big rally out of this thing Thursday into Friday. That's when natural gas really started. When you had the biggest natural gas company in the world that's based out of Russia, they're pretty much their headquarters caught on fire. And now you're seeing that extension today. And I talked about this earlier in the week, trying to get this long and seeing if we could take this higher. I haven't really ever traded natural gas. I do know, with like UNG, you're going to have to know about these contracts and, just the future contracts. And I think like the 20th or something of this month, I'll have to go back and look. But we still have a few more, like 2 more weeks before they end. And I would look, like even now, I would see if we can get a pullback to like 1649 or 1645 to 1650. See if we can't get a pullback into 1650 and try to take this long and try to get natural gas going. You have some nice volume here. I would take what it gives you. I will say that. And look, you have the 100-day line and right up here. You could come in one morning and there could be news, right? That just shoots this thing up. But I will say last week, nobody really talked about this. I'm not sure if traders don't know or what. But, this major, and that's happened last Thursday or last Friday when this company, let's see, I don't know I tried to bring it up. Maybe I should go to Twitter. Natural gas company, Russia catches on fire. Let's see. February, March. Siberia. I do not want cookies. No. Trying to see something here. Damn it. So what I do is at night I'll watch. I know this was a while ago, but this was there was something just recently as of last week, and you can see March 2023, May 2024. So I watch the Ukraine and Russia things at night, right, about war and stuff like that. And the majority of them like to, I guess, register the industrial Eastland of Thailand. No. Oh, wait. See, it's so weird. CNBC just brought up natural gas, and it's probably not going to be on here. Yeah, CNBC just brought up some natural gas stuff. All right. Either way, so they were talking about that, and then I go to look at natural gas, and I see Thursday and Friday, it's rallying. So let's see here. Let me go here. No, I don't want build documentaries, bro. That's it, 7 million, bro. That's it, 7 million. That's cool. But the old 7-10 million is the old 1 million. Oh wow, that's ballsy. Damn, bro. What is his deal? He's just trying to have somebody come over knocking at the door, ain't he? Talking about painting Powell up like a clown and shit. You think Powell gonna play around like that? You're not worried about him with his little 160 viewers, but that's crazy. I don't know. I was gonna see if we could get CNBC because they were talking about that, but keep an eye out for natural gas. That's all I'll say, right? Keep an eye out for some of these names here like gold, because you might start to see money. We had a nice consolidation here. You might start seeing money chase this, and it would be nice to see if we could go on like a 2-3 day rally. You know what? That's what we're going to do. I'm going to go through a couple charts. If you guys have tickers, spam the chat with some tickers and we'll go through them. I'm going to start with the daily chart. We'll start with gold. We'll go over to natural gas. No, keep an eye on them. Let's see here. I won't. Oh, it already pulled back there. Okay, so we have the 20-day moving average right up in our stuff. All right, let's start with the daily chart and or weekly. Damn, the monthly chart is oversold or overbought. Some nice volume there. The volume's just dying out. That's not a good look. Weekly, daily. Give me 1 second. All right. I was just looking at this scanner here. So GLD, we're running right into the 20-day moving average. Remove, remove. Because this is weakness in the midst of strength, guys. We have a very nice rally. We're buying the dip, right? We're buying the dip, so it will not take us long at all to find out whether or not we're wrong, all right? If we buy right, we should not, like technically, we should have been a buyer yesterday. And we would have gave it a stop of like, what is this, Thursday, Wednesday, Tuesday, Monday, Friday. Like a stop at Friday's close or Friday's open. You could have even gave it to 211, 212. So I would say if we can get back to the opening price, if we can get back here, see, this is where they're buying right here, because you can see if I draw this trend line, right, if I draw this level, right, you can see what's going on here, right? You got to bounce, you got to pull back to it, bounce, pull back, all right? You start to curl over, you gap down, bounce, gap below it, bounce into it, reject it, gap above it, pulled back, and now you're holding it. Now is the 20-day, and this level here, boop, right? Bro, I just drew a line, so why did it change on me? Right there, gonna stop. All right, that's how I would look at this. We got to get above that, and we got to get above that 20-day moving average in order for this thing to extend higher. And if we can get up here, we have some nice room right back to 220. What could send us there? Maybe retail sales, industrial production, stuff like that that helps us with the dollar pulling back. All right, as long as we can keep this dollar pulling back, we should be okay. Wow, that's hella bright. All right, so that's the first one. All right, let's go. So 20-day, I got to be a buyer. And what happens if we don't get it? We don't get it. If you guys want to take it, you can. I think, you know, I still think this level right here at like 215 is where we got to be, where I would be a buyer. 215 is where I would be a buyer. Anything outside of that, I think I'm asking for trouble. Because again, if you buy correctly, it should never test where you buy. Technically, it should never test. That means something's fundamentally changed. If you buy right. If it goes back and tests that area or goes back to where you bought it, then that means you haven't bought it right. And that's just a fact. If you ask any institutional trader, you know, the stock should never test where you bought. Like if it pulls back and you're buying the dip, like that long tail, maybe it like goes back close to it, but it should never go to where you bought and or lower to for this. So I'm gonna have to say 215. We get to 215, I'll buy GLD, and I'm gonna look for the breakout higher. All right, that's my plan. We'll see if the 30-year bond auction can do anything for us and help us move to the upside or not.
The house view at Goldman has been pretty constructive
Like
for a while now. I think
like right there, you know what I mean? That's also not a bad area. Is if we can buy the dip, you have VWAP there at like 215.40s, you know, be able to take some profit off on the first rally off of that level. So I'll put a dotted line here, and this is where I would start looking to be a buyer at GLD. And you know what? I wonder if I can actually set an alert. Wait, what is that? 215.54.
But the choppiness you're talking about does still lead you to high quality, right?
That's right. This isn't a market in which everything's going to do well because what is different here and the playbook changed is we have a higher cost of capital. So there are
Does anybody know how to use this shit?
structures, consumers that can't handle this higher cost. And so you have to be really discerning in where you invest. Big picture, broad strokes, up in quality, leaning into high quality assets, investment grade, or up in quality and high yield, double Bs, single Bs. That is a great place to be. And the other thing we think is really important is that this
White House's Kirby said Biden has communicated opposition to Rafah repeatedly and straightforwardly to Israel's Netanyahu.
Looking at the portfolio and saying, I want to stay away from those triple Cs, or I'm worried about that commercial property. Let's pick the right things that are going to do well in this environment.
You talk about geographic diversity, and I wonder why. What about the current environment leads you to making sure you're not concentrated in one
Bro,
area of the world?
Sure.
this is pissing me off.
It's really interesting right now because there's global divergence, right? You have the Bank of Japan that's likely to hike. You have the Fed, July, September, let's see, going to cut. Sweden cut, actually. So you've got all of these things moving in different directions. That leads to very different outcomes. This is a beautiful place
Is that
in fixed income and pick and choose because you can do interesting pairs. Like you can be long duration in the US, you can be short duration in Japan. We can put all of this together to have a much better outcome and alpha opportunity for our clients.
When you, I don't need to belabor like every data point, but when an Atlanta Fed comes in this week and says Q2 tracking at 4.2, how do you look away and not get seduced by numbers that might lead you to change your whole thesis?
Yeah, I think you have to pull the camera back and you need to think long.
Israeli delegation and CIA Chief Burns leave Egypt following talks, that according to sources.
And I think that's a message that we'll have at the investor forum today. Investors really do need to be humble. We have seen just in the very first quarter where Atlanta Fed would have told you a very different kind of print. So we have a very recent data point that suggests to you we need to pull the camera back and think broader. The bigger picture is as we forecast out where GDP is going to
Oh, there we go. So I can move it. What's going on?
You mentioned the forum, and I wonder when you talk about, say,
Okay. Okay, cool. So I don't know what happened the last time.
are they willing to be led on that front right now?
Clients are asking the question, they're looking for advice. What are we supposed to do? The pushback that we've received is, hey, being in cash has really worked. And you know what? We are saying, congratulations, you're right. Cash was a great place to be. We are not denying that. And we are not saying that the investors that we speak to aren't smart and haven't made prudent decisions. But together, we want to work together on the forward. What should you do next? Let us help you think about
Yep.
solutions for your clients.
Give it to me.
That for us is extending duration. Fixed income right now has yields in a way it didn't have before. This is a great opportunity.
Give it to me.
And again, if you really did like those yields that you were
I'll
getting
probably
from
forget
a
about it.
5% handle, they're not going to be
All right, sorry about that. I know that was a
is 2 cuts.
I know that was a nightmare.
T-bills don't have
Wait,
a
wait,
lot of
wait, wait.
handle.
This volume is trash. This is where we should have been a buyer. You see that? You see exactly what I'm saying? If you buy correctly, it should never touch your stop unless something's changed, like, or unless you're wrong. Like, it can come close. This is what I'm talking about. Look at this day. Right? Look at that day. Like, it pulls back, but it doesn't really come back down to the low. But look at the volume that day. That's because institutional buyers are buying correctly. Right? That's because they're buying correctly. So, look at that. Like you have not seen that type of volume, right? You have not seen that type of volume consistently there throughout the whole morning, you know. And they bought the low. Like that was it. So this is where we put ourselves in trouble. So I'll give it, you know, this. I'd like to give it this little area down here. If it pulls back and we can start to hold and consolidate here at 215, we'll look for GLD. And what this is, right? How you can play this. Look for the bounce back in the dollar, right? Look for the dollar. Dixie, whatever you want to use. Look for the bounce back in the dollar. See it, then see if it can reject like 105.06, 105.6 or so. How I would do it is I would give it an area. Like I would draw a box, like something like this.
SVCO, IPO,
Bro,
is open now. Sandy Victor, Charlie Oscar.
I would do something like this, like right there. Bang.
130.
All right, and then I would watch it and say, okay, cool. You know what I mean? All right, we're still rejecting. Like you might reject the low end of this box here, 105.4. And then if we bounce to it, it starts to reject it, and I look for a move lower, then I know this consolidation, once it stops going higher, if it stops going higher here, then I would look for that bounce back in the dollar, that bounce higher in the dollar to be that, you know, that buyable dip in GLD. Anyway, let's keep it moving. Let's keep it moving. All right, so Intel, the Dow screaming today. The Dow is just screaming higher, screaming safety. You know, Cat, John Deere, Energy, Gold. All right, and look, the Qs are still below yesterday's high. So pretty easy. What we want to do there is start looking at is so I made two trades today. All right, so Tesla did pull back. I got short Tesla early this morning, and then we took a small scalp long and double dipped that for the bounce back to 175. That was a tough one to sit through. Right here, we got short on that off of that reversal there, or not short, but we got out of the short down through here, down through this level of 174, and took the long off of that reversal. So here we go. Let's go look at Tesla. Let's go look at Tesla because it's down at the 50-day moving average. And I told you guys earlier, I am looking for 165. I am looking for 165 on Tesla. I want to see if we can get there. Bro, why does it... If anybody... Never mind. Look at this volume, man. It's so pitiful. 165. I really want to try to get down to 165. I'm not sure if it will. I think we could find a trade here on Tesla and see if we can't test yesterday's low. I would be careful. So you are rejecting that. You see how it's getting froggy right there? Watch your level 2 in time and sales to get an idea, right? That's how we took the long. All right, so if we get a bounce here and a rejection at 173, I may take this. What time is it? It's lunchtime right now. Oh, that'd be stupid to take something at lunch. Damn, I thought it was like 11:45. I've been talking this long. Damn, that sucks. Damn, I need a life. God damn. That's what happens when you don't really have friends. I mean, you know what I mean? I have friends. I don't talk to nobody. I just do me. I feel like I need to clean these charts up. Sorry that I keep clicking and you know, changing these charts around on everybody and stuff. It's probably giving everybody a headache. Let's do it, man. I think I'm gonna look for. Look at that volume, though. Like, it's still low, but it was pretty aggressive there on the 1 minute. Notice what you want. Poetic justice. Put it in a song. Alright. Can anybody please? Can somebody answer me? Who the fuck? Why the fuck Rick Ross like quick? I think we know why, but why is my man so quick to just get up in other people's shit? Like, don't nobody give a fuck about you no more, bro. I think it's real funny. He trying to talk about Drake, but I'm like, when was the last time you put out anything that anybody listened to? And y'all just mad because this dude is still, whether it's his team writing it, him writing it, they still putting songs out, and ain't nobody. If it wasn't for them, ain't nobody would have music right now. Right? Wouldn't nobody have music. I'm gonna just keep it at that. And if it wasn't for the beef, Kendrick still be just. Ain't nobody know what ain't nobody gonna hear from him. You know? With a random drop of that album that he has coming out, which would have probably. It wouldn't have sold shit. Because nobody would have knew. But, you know, what can I say? I mean, we don't know that to be a fact. You know what I mean? He probably could have some bangers on there that would come out on the radio, blah, blah, blah. But, I don't know. I just had to say that. I watched a video with Rick Ross talking this shit. I'm like, wait, hold on. You're talking about somebody that stole somebody else's name. Yeah, I'm El Chapo, gang, what up? Yeah, this dude, man, gang think he black, bro. He white. My name El Chapo, but, you know, my real name, James. Like, come on, bro. You had to steal someone else's name on some shit that you ain't never did in a day of your life. Matter of fact, you was arresting Rick Ross type of people, making sure they had their shoes and their whatchamacallit, sweaty meat ass sandwiches. You know what I mean? I don't know. I just thought it was funny, and I had to say something about it. All right, here it is. Here's the bounce. This thing has moved from the open 175 to 172, so $3. Semiconductors, Nvidia hasn't really moved. My NTC, it's a nice bounce. JP Morgan. I wonder if JP Morgan's about to get a double bottom on VWAP and start continuing. So yesterday there was a price target on JP Morgan. I was trying to get a little pullback further on this to take a long, but doesn't seem like I was gonna get it. Oh shit! Hold on 1 second.
You are pulling here.
Wait, what was it?
Headline letter X.
Oh, U.S. Steel. All right, what happened? Are we doing tariffs again? Shit. Did Biden say something? Let's go to YouTube. I think he might have said something, guys. Biden's bitch ass. Biden's ass live. I don't see anything there. In the thunder and rain. Yo, Roblox is down 20%, man. That's wild. That is wild. It really is. I mean, I think we could have all seen that coming. All right, let's see here. I don't know. Here, you know what? White House says Biden is determined to make U.S. steel stay in American hands. Okay, here's the question that I have. This is exactly everything that I talk about, right? It's called U.S. Steel, yes, but it's a company, right? It's a company. Just like if I had a company like Mid Atlantic or East Coast or, you know, like if this owner, this is what I get at that I really hate and why this is half the reason why this guy's got to go. Like if these owners want to sell this company to whomever, it is not unless he is going to buy it, right? He does not need to say you can't do this and you can't do that. It's not his business. This is supposed to be a free market. Like I don't think anybody realizes that shit. You cannot sit there and tell people how to run their companies because you know what happens? I'm not sitting there preaching or talking shit, but I'm going to tell you all right now. You guys want to know why healthcare and schools continuously go up higher than the rate of pay? And why why school has gone up 10, 15, 20 times, 10x? It's because the federal government has their back and they're going to get paid no matter what. Take that away. Take that away and you may get some competition because there's no competition when the Fed and the government says we will pay those debts, especially in healthcare. Like the government and even healthcare people like doctors will tell you that. You know, if you keep the government out of it, all of the companies won't continuously raise prices and make things high. They're high for a reason and not high in other countries for a reason. They know that it doesn't matter whether you pay them or not. They will get paid by the government. You take that away, then you will start having companies fight for prices. You eliminate that. You know, this is the problem with having too much government. Government is good for, to an extent. But when you get this overburden of government, that tells company owners in small and big business what they can and can't do and to sell, just like iRobot with Amazon. They denied them to buy out. iRobot, they were like, bro, we're going under if they don't buy us out. And guess what happened? 3 days later, all those majority of those employees got laid off without a job. Like the government says we can't buy it, bro. Like what? I don't know. I just this is where you get reminded about politics. Now, certain things, companies should not be able to have cookies on your phone and computers and you go to the doctor and they can just go see everything that you do. Like, that's not okay. That's a good part where government can come in and say, here, all right, well, here's where we draw the lines. And that's what government was made for. Like, drawing sensible lines. Not just strangling with a chokehold and saying, yeah, I'm going to raise taxes and I'm going to tell you what you can and can't do. And, half of these companies are still way under and don't even make any money. They barely make payroll. And you want them to pay taxes? But the point of taxes as well is, when you have a president that doesn't, that tries to like stay away from getting, starting wars and stuff, it's about putting it back into the economy. He just wants to take it and send it to Ukraine and buy new vehicles and do these things. Like, yes, we've had a stockpile of all these old things. We're sending over their old things. Yes. But there's a lot of money too that goes on for fuel and transportation and trucks to move the stuff, and it's sad to think like that. That's where it's upsetting, to make a decision on the decision that I'm about to make as a president is going to affect everybody and it's going to affect everybody in a negative way. Why would you do that? It's because you do not care, right? That's some of the stuff that I try to get out, and it's a shame. It really is, because I think if you would have continued with the mutual agreement that if anything happened to Europe, Australia, Canada, that we are here and not pressed. All right, we're back in NATO. We're gonna go pick up Ukraine. We're gonna do this. We're gonna start pushing. We're gonna push west because Putin knows when we push west, he's gonna push east. Like, I know this, he knows that, but I'm gonna do it anyway. Like, you're making a conscious decision to start something that isn't there. You know what I mean? It just shows that. It just shows who you really are. That's all I'm saying. And I'm gonna end it at that. Because all this stuff and a lot of lives could have not happened. This is not going back to the 1800s because they've only done it twice, and that is when NATO has moved and pushed east. So, that's. I think these are just facts because if it wasn't a fact, then it would have happened with Bill Clinton. It would have happened with Bush. It would have happened with Trump, but it didn't. It didn't happen with Clinton and Bush and or Trump because they're not pushing certain scenarios. Now, when you have a 9/11 incident, okay, it's time to handle business, right? Just like Jerusalem, when shit pops off, okay, you just gave us all the reason that we needed. So, and it's just, this is where it goes back to taxes and tightening up companies, and it just has its effect. And it all, at the end of the day, stifles growth, right? There's retirement accounts that are going to get hit. And not only do they get hit for growth, they get hit on taxes as well. Take. That's when you guys hear me, because all this stuff has its root effects. It's just, I do not think these companies are the enemies like they're treated. And I think, I don't know where this even came from. Like, I can understand being mad at Google, this, that, and third, and Meta, but they do allow, you to, promote your business or do something for free and be able to reach out, and it's up to you to do things with those and not have to pay a monthly fee for that. So there is this give and take with it, but they do hire and employ hundreds of thousands of people. And they do business, and not just here, even around the world. So, I don't know, but when you say you want to raise taxes and do this and that, in the process of also raising height, like, you're also in a rate hike cycle also on top of it. So people are paying more on interest, whether they bought a home, credit cards, and energy's up. So everything is up, and then you're going to add on top of it, because you want to pay for a war that could have actually not been started in the first place, but you decided not to. So when I come from with this is it wasn't the companies that decided to do this. It wasn't me. It wasn't you that decided to provoke these altercations. Why are we being treated as such? And we shouldn't be, and you shouldn't be. You shouldn't be having to be raising taxes and pay more and get more of what you earn taken from you because somebody else wanted to make a decision. You made that decision, not me, Biden, not the people listening to this. You pay for it. It wasn't U.S. Steel, right? And that's what this all goes back to, is him saying, I plan on keeping it here. Okay, just because it has U.S. Steel, it doesn't necessarily mean it's the United States government. So if you want to buy it, buy it. It's for sale. Go buy it. If you're dead set on keeping a business that's, hardly making, it's a tough business to be in, then go ahead and buy it. It's for sale, but don't stop them from selling it to someone else. I mean, it's just it's not like the place is going anywhere, so, especially with where currencies are, Now we get the dollar back down a little bit. That's a little bit of a different story there, but looks like we have a bear flag forming there. Where can we take? Let's go look at the options real quick. See if they cooled down a little bit with this IV. 38 puts. Obviously, you got to look to the downside, in my opinion. Let's look for it. I might try this out. Shit. I knew it. Oh, damn. Those spreads are wide now. Somebody got filled last at 40 cents. Somebody just market ordered in. Oh, no. That sucks. Let's throw out some limit orders. See if we can get something here. Is that 38 or 38.50? 38. Oh, there's like no volume here. What? Why is there like no volume on US Steel? Usually there is. I'm gonna stay. Wait, hold on. 35s. Two. Look at this. They're asking $2. Ha! Look, $3 bid. That's so funny. Oh gosh. Wait, no. Hold on. 3 cents. 11. That's exactly what I was going for. Was 11 cents. That's so funny. I didn't put it in, but I was. Look, you can see the bid just changing. Somebody's getting caught in that. Sit here and watch it for a minute. Somebody's getting caught there. You were seeing it go from 10, 11, 10, 11, 10, 11, 10, 11. Somebody was just going back trying to get their fill. Oh shit, look, somebody got filled at 40. Somebody just market ordered in at 40 cents. Holy shit. Yo, they're going to get murked. Oh my gosh. All right, I'm going to try. Hold on, guys. I think US Steel might end up going higher. Hold on, it's sitting on top of its 200-day moving average right now. Let me see here. Yo, somebody just got out of that for 40 cents. My God, that's crazy. They're going to need it to go to 37. We'll just say 37. Was that 9, 8, 6? And what is that? Let's go look and see what the percentage move on that would be. Just to break even. Just break even, by the way. 37.60. 2%. Percent and 0.6. That's not bad. It's not too bad. All right, I'm trying now myself.
My point is not to say go sell all your growth stocks. That's not the point. My point is to say you can look further afield, folks, for good returns.
Well, of course, but Josh, can you look further afield for?
Let's just say I'm just gonna do.
Returns, not just for of the moment returns. Like I'll give you.
Oh shit! Hold on, guys. I messed up.
52-week highs again today. All right, that's fine. Are those reliable? Are we
In the thunder and rain. I think you're gonna get a pop here, and I'm gonna see if I get filled on that pop. There's like no. Wait, where'd everything go? Like there was 600 open interest. Now there's like nothing.
When you're in the markets, am I an investor? Am I a trader? If I am a trader, am I a momentum player, or am I something else?
I'm canceling that.
Ways to do this. If you're a momentum trader, you're in the utilities right now, not because of the earnings outlook, but because these are the best stocks in the market at the moment. There's this really weird thing.
I canceled that.
Started in April. All of a sudden, utilities caught.
Oh wait, did I get filled?
That's going to end in
No, I didn't.
But these stocks look incredible. 100% of the names in the
Yeah, I canceled that order. I'm not even gonna try. There's no. It doesn't. To me, it doesn't feel like there's much volume there on US Steel with that news. But if you get the right fill, you could get a pop here, and I don't know. So I'm not fooling with it.
You're not like, oh yeah, let me get involved. If you're a momentum player, you have to be involved. It's where the money's being made. So if you don't know what you are, the stock market's a really expensive place to find out. So know what you are, what your time frame is, what you're trying to accomplish.
Okay, so Tesla. This could be a nice buy trigger there. Fuck. Or not, to get. What time is it? It's 12 o'clock. I don't know why my stuff keeps saving like this. I'm sorry to keep moving my stuff around, but I gotta save it one more time. I don't know why my screens are doing this. I don't know why. I know there's a lot to it. I know it's hard to see because I have a lot going on there, and I need to delete some of them, but let's see if we can test yesterday's low a day. I wouldn't mind trying to get down here to this 20-day moving average if we could. I don't think we can, but I don't see why we can't. I just think there's not enough volume today. Let's look to see it. We'll just wait a minute and see if we do hold this 50-day. Because we went down, we gapped below it, we bounced above it. Now we're bouncing on the 50-day. So if we sit here and consolidate,
that there have been rotations internally within the Mag 7 this year, which is fascinating.
then we could have a. I need to delete all these levels. I need to delete all the levels just because there's way too much going on. All right, let's see. Let me pull this up. And look, there's prior resistance. We're trying to get here. Let's watch this 15-minute. Watch this 15-minute chart here and see if we can get above the trade line and actually start doing something here. You know, Tesla's weak though, so I think we tried to make some type of progress and we couldn't. But you know, another test of VWAP, which would also be top left corner. You'll see that low a day, that initial morning low. We try to bounce back in there, and you start turning that 170, 350 into a rejection point. Then I really think we're going to get our 165 area. Then I think, watch out, we're going down to 165. And we can get down to that 20-day and actually finally get back down. Listen, 165 2 weeks ago, right? I missed the long on Tesla because I was looking for that 165, not 168, but 165 to right here, right? Look, this was the day. I'll never forget it. Oh, it's not going to give me enough room. So we bounced up and consolidated. You could see here. I was looking for, it was like oh no, 165. I'm sorry. Never mind what I said. Because this is what I was talking about right here. You guys can see this little double bottom right there. Hold on, no, it was right here. So it was 154, not 164. Right here. When we came up from the earnings, I was looking to see if we could hold that 155 level right there. 155, 154. There's also, you know, it's just a nice little, you can see here, a nice double bottom right there. But it ended up holding that flat top resistance at 158. So 165, if this weakness continues, that's what I'd look for on Tesla. You know, you could go a couple weeks out, but we'll see. I don't know what takes Tesla higher. I really don't. It's just, you know, there's not much going for it other than you know, I don't know. I think they need, I always suggest, I'm like, I know they have a lot going on with robotics, AI, stuff like that. But I'm telling you guys, man, I think they should they should just try and make like laptops and computers and stuff. I think they could do a great job. I think they could have like some really good products that they could put out and people would buy it. It would be like a low level, you know, like a low barrier to entry. And you know, you could, you know, just, you got the hard sector over with, the vehicles. Look, it couldn't get above it. Baby, are you okay? Are you congested? Wait. What happened here, dog? Come on, gang.
Annualized premium to do that. So it gives us a little bit of a hedge to the downside. And if the stock continues to move higher and we get caught away, well, gosh, I wouldn't lose any sleep selling that stock at 195 in 2 weeks.
Yeah. You think it's on an upward trajectory from here? Like there's been a legitimate recovery? Because the technicals look terrific.
My little girl's worrying me. She's just breathing a little heavy.
Coming from 164 to 184, consolidation as far as the chart is concerned. But yeah, I definitely think that at these levels, it's still.
What are you doing, Mama?
We have the developers conference coming out. I think it's going to be exciting for them to say AI. To Liz's point, it's probably not going to spark the world on fire.
Should we trade Cat today?
Stock that we believe in long term. We certainly want to own it. We think we're getting in at 160s and 170s was the right move. And I would encourage anyone that does own it to consider writing calls against it at these levels. There's nice premium here.
Yeah. You sold what? I don't know. It plays into our story a bit off the top about what some of these AI-related stocks have done. This one has surged, over the past month.
UNH pulled back down. GLD. Alright, so look for this here on GLD. You can see when I drew this dotted line, I was giving it a little extra room here to 215. But watch pre-market highs here, and if we can kind of just hang out there, and if we try to make another attempt higher and get up through this green box here. Is that the 20-day? Let me see. All right, that's right. That's right. So yeah, so we're starting to pull back now, and we go over to the dollar. Let's look at the dollar, and looks like we're getting. Looks like we did get our bounce back. Oh man, I really wanted that 105.4 though. I have to grab a tissue. Give me 1 second.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by,
Just give me
Carl.
1
No
second.
problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Keep an eye on keep your eyes on Apple as well. Keep your eye on Apple.
To survive initially.
Danielle DiMartino.
So it's going to replace workers, and on the other end, it's going to make all of the workers in the workforce that much more productive and be beneficial and work its way through education and into the workforce. But for the moment, with companies in a cost-cutting mode, it's working the other direction.
Microsoft. All right, I'm going to cover these as soon as I get back.
Every day this week, Market Overtime brings you an in-depth conversation with Danielle DiMartino Booth. With 9 years of experience working at the Federal Reserve Bank of Dallas.
It's going to go.
She does not hold any punches when talking about the Fed's fight against inflation. Check it out every day this week, 4:30 p.m. Eastern Time, or on demand on the Schwab Network YouTube page. All right, let's get back into a discussion about Tesla. The automaker is down about 30% so far this year. And if you look at the headlines on Tesla, there's not too many good ones over the last couple months. Let's bring in Diane King Hall, senior markets correspondent here. Diane, I was trying to go through some of the, the news flow on Tesla over the last month or so, and I think I found one bright spot out of a multitude of negative reactions here. What do you got for us here on Tesla?
I'm surprised you found that. Hey guys, all right. So the stock is under pressure once again, down a little more than 1%. It does follow on the heels of that, coming under scrutiny of the Department of Justice, probe for potential fraud allegations that what Tesla said about its full self-driving capability or autonomous driving does not match up to what it actually can do. But here's the latest. Another executive leaving the company. This time it's Rich Otto. This guy is the head of product launches. So he's the latest one. He posted about this on LinkedIn.
I'm
I
just
looked through
eating
some
something,
of his
so give me 1 second.
letter. He talked about what's going on with company morale at the
If
company.
I enter Apple, I'll let you guys know.
That's one of the things that's changing. I mean, we know that Tesla has been going through a significant amount of job cuts. So it's no surprise that you're seeing some challenges to morale there. But he's also just the latest executive to leave. Let's go through a list of some of the execs who've left. You had the senior execs. You had the senior director of charging infrastructure. That's a big blemish for the company. You have the director of new product introduction. He left. The SVP of powertrain and energy engineering. The vice president of public policy and business development. The list goes on. So it's not just about the layoffs. A lot of times, we see that being helpful in terms of the share price, but you have top officials at the company leaving because they're unsatisfied with what's happening to the company. In terms of Rich Otto's note on LinkedIn, he said, quote, the recent layoffs that are rocking the company and its morale have thrown this harmony out of balance. The harmony he's speaking about, the great people and great products that had how he'd seen Tesla previously. And he said it's hard to see the long game. It was time for a change. And of course, we know Tesla had already announced plans to cut its workforce by double digits. That was expected to impact about 14,000 workers. We're seeing the company go through, make job cuts, including we're seeing reports of rescinding offers even to interns. So that's difficult. And we know that Tesla has just really seen a deceleration in terms of demand.
And look, yields are pulling back,
products.
and so are the
Revenue
markets. So.
was lighter than expected in its last quarter. And then you also have job cuts in China as well. So it's not just here in the U.S.
Oh, look,
Tesla's
that could actually
really
be
just got a lot of challenges in front of it.
Man,
and
that could,
again,
if
Tom,
that
like you
becomes
said,
support,
the fact that you
to
found
grind
one,
higher.
what was the bright
I always
spot
thought
you
we
found?
could get a grind back higher to 4.6.
I saw the positive news on the full self-driving out of China. That's about the only
the China
positive.
story was significant.
Yeah.
And that's part of my question, Diane. Tom and I, this show, we're a big proponent of watching the news flow on a stock. And the news flow is horrible in Tesla. But the also real important thing about Tesla is its relationship with China and its ability to grow. And when did the stock rally in the last week? When Elon Musk went to China.
It already
and
did do it.
Robotaxi
So we did get
in
the pop
China
in the 112.
and all the news that came out of that. Now, the stock has come down since then.
So
Why?
EMPH has a gap here. Look, guys, it could go down to 106. That could be a nice $6 move.
You name it. It's
on
all
a dollar,
over the board, but it's all negative.
On 100, that's 6%.
That takes
in the
me
stock
back to
itself.
The
That's what I'm talking about.
Of China in a lot
So
of
keep it
not
on
just
watch.
Tesla, a lot of these companies. Go ahead, Diane.
In case we can get that short.
China is a significant market for, and if Tesla can continue to kind of maintain strong positioning there, especially when you compare it to the Chinese. I mean, we know that there's been some pushback in terms of Tesla's presence because of the data it collects in terms of having any ability at all to penetrate certain sectors of the market in China. And so you have the Chinese EV makers maintaining their positioning there. The China story certainly matters. So hopefully for Tesla's sake, they can kind of stake more claim there. But you're right, the news flow hasn't been great for Tesla. And this latest black eye with the Department of Justice, this was first reported by Reuters, looking into whether there is a fraud issue here in terms of what the company has said about its autopilot and self-driving features, if they actually do what they say they're due. If they're not really fully autonomous, I mean, that is just a difficult wall for the company to climb and a wall for the stock to climb. You've got a wall of worry there.
Yep, definitely. And
Bro,
I guess
the car does drive by
itself,
itself, and it's going to take time. Like, I don't even understand.
This is definitely a name
half the
that,
shit they're talking
maybe
about
you should
with
be
Tesla.
looking at this point. All right, thanks to Diane King Hall,
it doesn't
senior
make
markets
any
correspondent
sense.
here, breaking down Tesla for us. But now let's bring back Nathan. And Nate, wanted to get your take here. We kind of highlighted all the negatives here on the stock, a lot of non-believers, but headline news drives stocks a lot of times, and this gully that the stock's in at this point, who knows if it continues, but right now, this is where we're at.
Yeah, and the technicals are not great. I mean, we've been in a downtrend. I mean, we were at, I think, $300 last July. I'm just taking a look here. Yeah, last July, $300, and we've pretty much been in a pretty steady downtrend since then. Maybe we're flirting with the 50-day SMA today. Maybe there's some support there, but look, if this was any other company, I mean, if you want orange flags from a fundamental perspective, I mean, they're all over the place here in terms of the executives leaving, in terms of the layoffs, and in terms of the price cuts that continue to happen, and your one bright spot on full self-driving, I think that's great and everything. Potentially that has some leeway down the line. I mean, Kathy Woods certainly believes that it does, but they just cut their price in half on full self-driving from $199 to $99. These are fundamental orange flags, if not red flags, that I think if you were any other company that didn't have the CEO that you have, this stock would be getting punished a lot more and wouldn't be trading at the multiple that it currently has.
Yep. And Nathan,
if this
even
was
right
Ford,
now,
and you had the opportunity to buy
like
Ford
that,
in the first
that are
10,
coming out,
15 years of its making,
would you or
would you
get some
not?
monthly numbers as far as deliveries
You'd have so
go,
much
but
money right now.
It's been pretty
between
dour
all
at
the
this
stock
point. How do you
splits,
wanna look
all
at
the
this one from an
dividends, like
example trade?
Sure, yeah, and the delivery numbers have been, awful. The last earnings report just got some kind of relief, maybe some short covering that, as the bears were kind of looking to take advantage of the stock as it was moving down to that 140 level just in mid-April. But, taking into consideration, look, example trade, I don't have a position in Tesla or anything like that, but if you had a bearish view on the stock and you wanted to, look, this stock is volatile and it moves around. It can be headline driven. But if you had a bearish view and you want to hit that next earnings announcement, this is what this example trade is about. I was just going to the July 19th, that standard monthly expiration. They report next earnings on the 17th.
Why is my 3-minute not coming up?
So this would capture that earnings event, buying the 170 put and selling the 155 put against that, a $15 wide spread. In the debit at the time that I was looking at it was about $5.50. So,
oh my God.
Look, because you're going out and including this earnings event, this stock can move around. It can move against you in the meantime, and it's going a little bit out in duration. You might say, well, hey, is this the best day for me to put on this bear put spread? Or if I wait a couple of weeks, might I have a better opportunity, meaning a higher price
Apple.
and perhaps a lower debit to do so? That's up to the individual viewer. You guys asked me for an example trade. I'm telling you about it today because that's the discussion.
Apply,
hitting that earnings event, $15 wide, bear put spread, $5.50 debit.
All right.
I'm questioning his commitment.
I think
he feels a little wishy-washy.
I think he wants to blame us for something.
Yeah, that's right. Don't throw it back to us, Nathan. This is on you.
All right, let's go through this example trade that Nathan brought us because I think it's a good discussion at this point. We'll break it down. Out in the July 19th monthly cycle, so 71 days to expiration. You got plenty of duration as far as this trade goes. You're buying the 170 put, selling the 155 put, $15 wide, bearish put vertical, paying $5.50 debit for this. Kevin, that takes your break even down to $164.50 to the downside. That's about $8 below the current share price in there. But the duration, I think, is the focus here. The debit you pay, $5.50, that's your risk, $550. Paying about a third the width of this vertical. But at the same time, you got 71 days in it, and because it's directionally and you're buying it, if this stock somehow goes down to 160, 155 and expands, you have that opportunity if the market's open and liquidity is provided to close it early or take some. If you did more than one spread, if you did 20 spreads, you could take some of them off. It gives you a little flexibility.
Implied volatility is not that high, so the premiums on this are reasonable. You've got loads of duration on your hands. So, and remember, and this is already into the third quarter in July. So you'll have that. There's a lot of time. If the flow of headlines keeps going on, this stock could remain under pressure. But like I said, if Elon Musk does something good news with China, it's just hard to know. Nathan's hesitancy, everyone should understand what that is. We don't know where the stock is going. Right. If you have an opinion, this is one way to do a bearish opinion. Right. Does that mean we know? No, it doesn't.
Yeah, and I think, Nathan, with the highlight I wanted to do on this is
at the chart,
you're buying that slightly out of the money put to the downside, the 170
where
put.
Tesla
Somebody
is
might
going,
say, hey, why don't you just buy the 170 put if you think it's going to go lower? Because there's a lot of extrinsic option premium in those. Those puts are about $11.10 per put. So offsetting some of the cost by selling another put down below the 170 strike at the 155 strike may make sense if you don't want to have that much risk, right?
Got it right now.
Absolutely. When you're talking about earnings, you're talking high IV
I mean,
that's
look
going to
at
be
all this
embedded in there.
buying
Kevin's right.
pressure
If you
here,
look at the
down
average
here.
implied volatility, I think it was around 41% if you're doing a 30-day estimate on the curve using the around the money options, kind of like similar to the VIX. So it is lower on the IV, but you go to the earnings.
I'm gonna
and you
go
look
feed
at
my
those
cat
options,
real
that
quick.
IV is going to be a lot higher. So how do you offset some of that?
Damn.
It's by establishing a spread, and that's why you might
I
not
want
do
to,
that. Now,
I
having
want to
said
get
that, there's
busy on
always a
this thing.
trade-off. The position delta on this spread here,
Come
I
on,
think, was
I'm
around
coming.
0.16. So if the stock goes down, you're right, Tom. If this thing were to creep down towards 160, maybe you take it off before earnings. Let's say the spread's worth $8 or $9, and you say that's good enough. I'm out of here. But because of the position delta,
See how it just
it's
gets
gonna be
taken
a little
back
bit sluggish
like
in
that?
order
I don't
to get
like
that
that.
appreciation. So you would need quite a big
It
move.
does have like a
down
lot of
towards
nice
that 160 in
volume,
order to take
especially
it off for a
since
nice
their
profit.
earnings. But
Yep.
even with the
50
volume, it
percentile
just gets
11.
taken back.
Yep. Good look at that directional bearish example here from Nathan, and thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for discussion on Royal Caribbean and the sentiment data on the stock moves. The cruise liner stock has rallied about 84% over the last year, near all-time highs. Stick around. We're coming right back.
I'll be right back too, guys.
Wrap up the trading day with me.
Look, there's GLD trying to extend again. All right, get ready, because we're gonna go over the scanners. We're gonna go over whatever it is that we got moving around, and we're gonna go try and get something going this afternoon for Power Hour. All right, it's 12:30. The night is still young. Okay, the night is still young, gang. Opportunity is still to be had. There she goes, Apple. I was just grabbing something to drink. Shat.
2020 kind of shutdowns, slowdowns, whatever you want to call it.
Shat.
You know, that,
Give me 1 second.
That created a backlog of existing customers, but it also created a backlog of new. That's the most promising thing because, you know, these cruise ships and cruise vacations. I don't know if you guys.
I want to see if this
been on
breaks
any,
down.
But it can go one way or the other.
Like pulls back.
And
And
if
so,
you
well,
have a great experience and you see, you know, a cruise for what it can be phenomenal. But if you have a bad experience, it can be terrible and you'll never come back. Well, Royal Caribbean is delivering phenomenal experiences to its clients, and they're coming back in droves, and I think that will continue for years to come.
I've been on a Celebrity. I've been on now 3 Silver Seas.
I haven't been on one yet, but I'm starting to get broken down here because if they're doing that well, they must be doing something right. But I definitely need to go on a small one. Andy, I think one of the key things and metrics for Royal Caribbean, they've got their own private island where their boat docks now down in the Caribbean or the Caribbean. If you look at this, the name, is that the key to their success along with probably their management? Is that everybody that goes on these cruises are now spending more. I mean, they're at a healthy load factor of 107% at this point.
Yeah, no, they're doing very well monetizing the people that are coming onto the ship, both in ticket prices and some of these stops that they're able to make. You know, they're able to demand a lot from some of those ports that they hit. The other thing I'd say is, you know, they're in the right space just from a consumer perspective. You know, we talk on here a lot of times about the bifurcation of the consumer, and that is the higher end consumers are doing just fine. It's the lower end that we're worried about. Well, who's really going on a cruise? Who's going to spend lots of money on a cruise, upgrade their experience, really focus on the experience portion of travel? Well, that's people that have a lot of money or that have a considerable amount of money for those experiences.
I was
They're
thinking cruise
focused
ship.
on experiences.
I
Royal
don't know.
Caribbean
I look at
is
that
delivering
differently.
experiences, and I think that just continues.
I mean,
and by the way, they also have the best management team in the business, which
I
is
guess he's
always
kinda
good
right.
from an investment
I had a
perspective.
feeling he was gonna say
bet
that.
on a horse with a really good jockey.
Yeah, and you know,
I think cruise ships
earnings
are the
past,
cheaper
would you guys still be,
alternative
you know,
for
an
people
earnings
that don't have
score
money
that's
to vacation.
elevated here at these levels?
Yeah, we were elevated going into this earnings. They delivered. The stock was
to
up. I think
$800
this is one that
somebody
you
can
just
be
put on your
on one and
watch
go
list,
with
and
a
you
group
say
of
anytime it's, you know, kind of
Right.
thrown out with the bathwater.
Maybe even get it
of
for
the
free, but
market,
just
and
bring
you get
money for
you get a nice
themselves,
dip,
like-
maybe pick up some shares because
So
I think it is a
5 to
long-term winner.
All right,
I
great
don't know what
stuff,
the
great
prices
data as
are
always,
now.
Andy,
but
appreciate it.
Thank you.
All right, that's Andy Swan,
And
co-founder
CCL
at
was a
Lightfolio,
big
breaking
winner
down data.
last year.
And RCL,
I
and I
mentioned
mentioned
this.
that comparison, Kevin,
Just
here
yearly,
between a lot of the
this
other
thing was
names
up
in this
a
space.
lot.
And,
Look at this.
I mean, Carnival Cruise Lines, I mean, it's nowhere near its all-time highs.
$7, and then it went all the way up to
This
20.
is a well-run company.
That was
the
a
fact that they hedged their
12
gas,
bag, you know, a 10, 11, 12 bagger.
They're still always
And
watching
now it's in a
expenses.
downtrend, so-
I think they only have 65 ships. It's not a big, massive
Could use
company.
that for what it's
pretty
worth and
lean.
be a nice stock
and
to
like
short,
I said, they appeal to all different income levels.
All right, so you got an example trade for us here, Kevin. Break it down for us.
I went out to the June 7th expiration. You know, they've got an expected move that, you know, for tomorrow.
Yeah.
But there's no reason for it. And I looked. I had to look hard to find something because the premiums are not real big.
Right.
So a lot of things weren't attractive. So I went out a month to the June 7th expiration, and I looked at something that we do a lot on this show, the call unbalanced butterfly. And I did the 140, bought one of the 140s, sold two of the 150s, and bought
These
one
guys got-
of the 155s.
It
And
got me wanting to
careful,
start
'cause
selling
some
spreads
of
and
the,
shit.
Markets, the bid asks are a little wide.
I always feel like there's
in
a
this
certain
name.
time, though,
so
to be doing
this one's it's looking like it's about 320
Yep.
is where it lined up. This is a paper money trade, but it's got no upside risk, Tom, because you're buying a $10, you're selling a $5, you're doing it for $3.20. If it goes way up, it's about 180, right? It's the difference between your max lane. But if it goes towards that 150 strike, you've got a nice chance. And like I said, it's about a month out.
Yep, all-time high in this stock, 143.93, that it just hit this week. So we were talking about near all-time highs, but let's look at this unbalanced call butterfly to the upside. June 7th, so 29 days till expiration on this option series. Buying one of the 140 calls, sell two of the 150 calls, buy one of the 155s. 320 debit, there's your $320, but even above 155, you're going to make a little bit on this because buying a $5 wide, selling a $10 wide minus that 320 debit that you take. Apex of profitability right at or near that 150 strike. So if it continues to move higher above that all-time, back above the all-time high, the break-even 143.20. So that's just below that all-time high. But definitely a directionally bullish trade, but offsetting some of the costs. Instead of buying the vertical, the 140, 150 vertical, you're buying the call butterfly to offset some of the costs on that one. No commissions, but transaction costs on the unbalanced call butterfly. So good look at that one based on maybe some of that Likefolio data. All right, let's take a quick break. When we come back,
something to drink.
Take a look at Delta Airlines. That airline stock is up over 45% this year into and basically hitting 4-year highs at this point. So we'll take a look at Delta. That one is definitely a winner in the airline space.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Delta Airlines, let's bring in Alex Coffey, senior equity contributor here on the network. Alex, we got some firmness in equities post that jobless claims data kind of on the back of that non-farm payrolls report on Friday. Bad news for jobs, I guess, equates to positive stocks.
Yeah, it certainly has for now, Tom. The market weathered a little bit of volatility early. We were weak overnight. Jobless claims came out an hour before the market opened. A lot more concerning, I think, than expected. The over 230 print. We had really had been anemic in those reports for the better part of the last few months. So stocks doing what they do best, climbing what may be a bit of a wall of worry here, Tom. And you see that underneath the surface and sort of what's leading. You have a lot of weakness in names like NVIDIA on the back of the ARM report. A name like AMD is lower, even Alphabet in red territory. But you look at the overall market, there's a broad strength to it today. About 90 of the names in the S&P 500, let's call it almost 80% of the names higher. A good 60% of the NASDAQ 100 is higher. But when you look at the S&P sector performance here under the surface, Tom, a lot of this, of course, tied to NVIDIA today, but information technology, IT, is weaker, down about 0.25%. And the second strongest sector, which has been one of the leading sectors so far in 2024, is utilities. There's so much money in the markets that's mandated on an institutional basis to be invested. And so what do when they're worried about something? They typically move it into those lower beta sectors like utilities. So typically in a market where you see utilities outperforming technology, that's usually more associated with risk off, not risk on. So I think there's a bit of more of a worrisome undertone to this rally. Combine that with a bounce back in treasuries, some strength in gold. I don't know what the message is. It's definitely a different one, though, than the end of last year.
Yeah, you bring up a good point there. I understand the utilities are also higher on the back of those falling yields at 10-year down back below 4.5%. But the S&P 500 utility sector so far this month up 6%, nearly 12% on the year, and a 77 RSI. So getting overbought there on that utility sector, the push into that. All right, great break.
Yields.
Yep, great breakdown for us. Thanks to Alex Coffey, senior equities contributor here on the network. But now let's bring in George Tillis, senior markets correspondent here on the network. George, we're looking at Delta Airlines. I kind of wanted to hit this one. They had earnings in mid-April that were better than expected. CEO Ed Bastian, real good CEO as a proponent of basically beefing up their business and how they do it. What's your takeaway from here? Because this stock's overbought too on an RSI technical basis.
Yeah, I mean, we can look at the technicals first. Obviously, the stock has performed tremendously well considering where it was, going back to July. I mean, it's up over 50%, or actually 100%, or close to that, since those levels. From a technical standpoint, I'm just using the 10-week moving average. It looks a little extended, but it's actually hitting some highs relative to where it was back in 2019. But there's a lot of things going right for Delta Airlines. I mean, I'm looking at a business, if you look at total sales compared to 2019, because we're still below those 2019 levels for the stock. I mean,
I was just listening
in
to this. Give me 1 second.
That year, and last year it's close to 59 billion. So their sales have increased quite a bit since that point in time. But one of the things I did notice is that this company's performing exceptionally well from an operational standpoint, because they generated last year about $5 billion in net income.
Look, there's a breakout on Apple. It's breaking up above that flat top resistance. You pulled back in. See if it tries to extend here. Look at the volume breakout there.
Ratios, I can see why the stock
Look at the volume breakout here.
They are performing exceptionally well from an
operational
standpoint. The net
and we run the
margins
top
are
of that
quite high
range
compared to total gross margins at over 11% on 22% gross margins. In the company's guidance, if you look at the next year compared to 2025, their estimated earnings growth is around 15% on very moderate sales growth, around 2%. So they seem to be operating exceptionally well. And I think this is reasons why the stock has performed well from a price standpoint. But there's other things going on, because I have noticed, and this could be obviously some hedge fund or algorithmic trend going on.
There should be no reason why I continue to have to fool with these freaking charts,
travel
bro.
Category just for the moment, but you'll actually notice Delta is outperforming some of the other larger peers like United American, and Royal Caribbean also is really outperforming Carnival and Norwegian cruise liners as well. So I'm not saying that those two issues are related, but it seems to be that right now in the specific industry groups that the better performing stocks have been outperforming their respective peers by quite a large margin.
George, just a real quick question. Address capacity, because capacity has kind of an inverse effect on the stock, right? Less capacity, which is kind of where we're at right now. Actually, real bullish for the stock. When they add seats,
I'm going to go through these
whether
options
it should or
chains
not,
real quick. I want to
stocks get hit.
see
Airline stocks get
what
hit
we
on
have
that.
here.
Your
Let's
thoughts?
look in conjunction with the SPY.
So the capacity is
whatnot.
extremely
Come
important,
on.
and in fact, you'll actually notice that capacity is less over the last few years, but profits are higher. So what's happening here is this is based on the inelasticity of demand. Less capacity, less competition means higher prices. So even though they're selling fewer seats, they're making more per seat, and that's coming to the bottom line. So it's capacity as long as it's moderate in terms of the increase, but cost of goods sold as well. And in fact, if you look at Delta, considering oil prices and gasoline prices, which have been elevated, they performed well. So, if oil prices or jet fuel prices moderate, prices move up in the travel seasons, particularly the summer season. That might bode well for a continuation pattern in Delta, considering, again, also international travel, which is still relatively robust. So the answer to the question is you don't want to see too much supply, and you want to see prices remain firm. That's been the case across the airline space, but Delta has an exceptional operating margin and return on equity, and I think that's representative of the stock performance, especially in the past 6 months.
Yeah, a lot of the analysts coming out and stating best in breed in here. Business travel, 14% growth last quarter in those corporate travel sales. And by the way, you don't get upgraded like if I'm a prime member of my airline. I don't ever get upgraded anymore because people pay up for business seats. And
that's, right.
That's key right there, those more expensive seats. All right, great stuff. Thanks to George Tiller, Senior Markets Correspondent here, breaking it down. Kev, so I looked at an example trade in here. And this is based on RSI's at 71. So anything above 70 level considered overbought on a technical level. We all know it can stay above there. But I've got a 3-year chart, 1-day chart, or 2-year chart here, and with the 50-day simple moving average, where anytime the stock gets above there, it tends to crater a little bit. Now, that historically doesn't always happen, but when it gets extended over those levels and maybe overbought on a technical basis, sometimes we see a pullback. So I looked at a strategy that if you think that's going to happen again, this may work out. I looked at out in the June monthly cycle, so 43 days till expiration on this one, Kev. And I looked at just buying a put.
I don't like these
vertical
guys.
Like we talked
I
about
feel
with
like
Nathan,
in order for
in
this
his
to
example,
work,
trading Tesla, but I went a little deeper
in
in
order
the money.
for this
I
to
bought
work,
the 55 strike.
I think
put,
we would need like
and
a
then sold the
184 or
183 out in
183.
June. $5
think
wide
the,
bearish put vertical, paying roughly about a
sorry if
240
you can't
debit.
hear
You probably
me.
get it for 230
Just let
right
me know
now.
in chat
Markets,
if the sound is messed
moved
up
a
or
little
not.
bit. But if you pay a 240 debit, there's your risk. $240. It can expand to $5, Kev.
About 37 short deltas.
I think 185
on
is
this
too
trade.
far away.
So
Let's look at next
right,
week to see if they have like 184
than
calls.
you would see on maybe some
that's
other
so
trade.
weird.
So good, healthy one that, guess what? It's a 71
They
on the
don't
RSI.
either?
Can it stay up
Damn.
there? Yes. But now the odds start to shift a little
Look,
bit.
they
that
don't
it could
have
fatigue like
182
the rest of the
50s
market.
there.
And any mention of capacity increase.
Damn, that's
and
so
These
weird.
stocks get real volatile and real choppy.
Yeah, and I think part of it when you look at this, it's a risk-defined trade, is the fact that you don't need a massive move to get
Alright, so
the
2
stock
weeks
back
out, they
below
give you
50,
the
where it was just a couple weeks ago
182.50s.
here. So
That's
that
crazy.
might be the way you would look at it when you're buying an in-the-money put
No
and
wonder
selling
it's 30
just out of the
cents.
money to the downside, where you want it to go down on an example like this, but at the same time, you don't need it to crater 10%.
I think you have an ascending wedge building here,
or anything
just
like that.
slightly.
Maybe just a little bit of a correction where it starts to expand the price. You're
Slightly.
giving yourself duration, Kevin, about a month and a half in this position. So good look at another bearish. Man, I don't think we've ever had 2 bearish trades on one show
you don't really
as our
wanna
example
just
trades here, Kev.
cut through the-
But this is one if you think this stock may fall after the
look
over
like
the next
that,
month
but
and a half. All right,
maybe
that's
they
going to
made a
do
mistake.
it for us today here on Fast Market. But make sure to download the Schwab Network app, available in the Apple App Store, and
Let's
tune in
see if it
24/7
starts
on
to break down here and pull back.
schwabnetwork.com. Stick around. Next Gen Investing is coming up.
Let's see. It would be right there. Oh, never mind. Nope.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D.
All right,
Power
so we'll
for
go
5
to
years
the
in a
scanner,
row. With Investor Checking,
and we'll
you
go
get
over
the
stuff.
award-winning
If you
features of our
guys
checking
have,
account,
this is a
plus
commercial,
cash
so
management solution.
commercial. If you guys have tickers, throw them in the chat, and we'll cover some of them. Let's go over some of the latest news and whatnot. Yeah, so Apple's breaking out. I think you need an even closer, like a 184, a 183 something, or just buy the 18250s. Okay, for those calls. But I would not do that now. All right, you had to do it on that breakout. Just to, you know what I mean, make a couple bucks on that breakout right there. Pull back. That's when we said, hey, you pulled back to it. Bada bing, bada boom. All right, so that's that. Let's go here. What? God damn. I don't know why it changes on me. All right, GLD is still doing what we said. Looking for that consolidation right here underneath the 20-day. If we buy right, we should not test our stops. Spoken like a true professional. That was a good example that I showed, wasn't it? Right? There's a reason why this thing had volume way down at the low. Because institution is buying right. Look at that. Right there. I think it was there, was it? No, it might have been lower. No, it was right here. Yeah, it was this day right there. Oh, no, look. The volume, it's way up here. Look at that. That's nuts. The volume's way up here. So it was this day right here coming down into that level. And then you saw what happened. Look at all that volume. You buy right, your stops should never get tested. Okay. I don't know what I'm doing. Hold on one second. I wonder if I should raise this a little bit. Yeah, I'm going to raise that. 214.
At 88 years old, we still see the world with the wonder of new eyes.
What a beaut of a bear bull flag, isn't it? 15-minute bull flag. Look at that. God damn. God. GLD. What a beaut of a 15-minute chart there. A little over dawn. This could be a buy trigger. If I had to, I'd buy it right now. I would. I think this is actually a buy trigger right here, guys. Look, let's see if the volume starts increasing. Watch. Look at here. Look at the top right of the screen. Why is it doing that? It's been doing that. I don't understand why. I really don't know why. What's up, bro? How you doing today, man? Some bullshit. I gotta go here to this. I'm gonna go to a 15-minute chart because of a few reasons. Alright, I'm gonna just start going through charts upon charts upon charts upon charts, and I want to find something. Yesterday I was looking at Bank of America when the market closed up. I said, okay, if the leaders are going to lead and the laggards are going to lag, looking for Bank of America to get a pop. Pulls back. This is where we should have been a buyer. Right there. Right into where? Flat top resistant. Bang. Support also here. Yeah, over there somewhere. Circle didn't want to go. Alright. Shit. I can't believe I missed some of these. The volume is pitiful though. I pity the fool. Look at that. Look how low that volume is. It's like a little nub. Like I got in some action. It's got a little nub. Like, grab my strong hand. Grab my strong hand. Let's see here. I almost had a nub. Yeah, y'all don't know about that, do you? Manhole lid. Yep. Manhole lid took that motherfucker right off. God damn, boy. Guess what? It grew back. They almost put a fake index finger as my right index finger. And it dropped the manhole on my finger. And I pulled it. Like, as soon as my finger got smashed, I pulled it. And it just pulled everything with it. You know, the nail and the skin and stuff. And it was bad. But crazy enough, it grew back. It grew back. My nail grew back and everything. It's just, I have I don't have a nub. I have like a man finger on my right hand. It's like thicker. It's like a lot thicker and just, it looks like that thing been lifting weights. Been in the yard for years, right? My one index finger. If I took a picture of it, you'll be like, damn, that trigger been in the yard. But, I don't know where I got that from. I don't know where or why I brought that up. Oh, because of the flat top. Oh, because of the nub, the volume. That's right, the nub on the volume. So yeah, not much volume going on there. Let's go look at the sectors. Let's go to the heat map. ENPH. This could be a good one, guys. I do think so. Look, and it's getting ready to reject this level right now. My goal was to take this back down to like 106. You can see this stuff here was pre-market. Or not pre-market, but after hours. So if we scroll back, let me go to an hourly chart. So there is still a lot out there, believe it or not. You know, it just kind of just gotta wait for it. Hopefully I'm not giving bad advice, but I mean, I like these. Like EMPH, I like this. Will Roblox be next? I don't know. That thing just got... this is a girl on CNBC. She said, will Roblox be next? It just got... next to what? It just got chopped freaking almost in half. So yeah, I would look for like a 106, 108 on EMPH. I really like this setup. I'm looking at it on here for a reason. Quick. Or at first, quickly. Alright, so yeah. So you guys can see here, this gap. I'll show you guys. EMPH. If you guys also have tickers, please throw them in the chat and we'll cover it. Right down here. This is the target that I'd like to get to. It's like 106. Alright, 106. I didn't want to slurp while I was drinking. Come on here. Let's go. So right now I'm just going into the scanners. I could do it on the screen for you guys if you guys want. That's up to y'all. But
CNTX popping here. Charlie November Tango X-ray. Context Therapeutics on
what?
Company reported their earnings after the close yesterday.
What is this trash ass no liquidity talking about? 50,000 shares been traded. Poop. Let's see here. 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 C-pop. What do we got? What do we got? What do we got? What do we got? So we still have... oh shit, I forgot about that. I forgot about that. Triple leveraged. I should have just ran one of them today. Let's see. Does anyone have any summertime like What's something y'all want to do this summer that you guys haven't done? What do you want to get? Whether you want to get accomplished or something you want to do?
That being circulated now.
Oh yeah. What you doing, baby? You okay? All right. Sorry, I was just had to move my cat. Let's see.
Has a buy rating, raising the price target from $4 to $10. That's CNTX.
All right. So we can see this shift. Remember when I brought this up? Remember how Nvidia and stuff was green and starting to go like purple, starting to go red, heading in that direction, and now it is red, slowly turning red. And I forgot about ARM. That's so crazy. I was looking at like Microsoft, and I'm thinking about putting on a trade into like tomorrow. My cat's trying to get up and underneath. Hold on, guys. Alright, I just had to put her in my hoodie. Sorry, guys. Let's see. She gets tired and gets crazy. She doesn't get crazy. She wants to be held, and she wants, I don't know. If anybody has cats, you know how they are. All right, so I don't really know what to do. You know, we can go. Let's go over some of the news, and I know ARM had earnings, and they're down bad, which is weird, right? Which is weird because of a few reasons. You guys remember when TSM came out and said that that their earnings were going to be really good? Taiwan Semiconductors, where they had like upgraded their earnings. Well, the biggest player to TSM, I wouldn't say the biggest, like, because there was a documentary that I was going to play on here, and I wanted people for people that don't know much about semiconductors. I thought it was a really good, like, 15-minute video that, like, really gave you the inside on the companies, what they do, how these factories are made and ran, where semis are at right now. Like, we've pretty much topped out. TSM came out prior to earnings. I think it was up here, right? It was like back. It was like right back in this area, I thought. Oh shit! 30-year bond auction, gang. Hold on. 4.63. So, oh wow.
Right at the end of the process.
So it is working.
4.642. So it was in the screws, basically 3/4 of a basis point. That is a positive. So pricing was good. All the metrics were quite stellar except for one. Bid to cover better than a 10 auction average. Direct bidders, best since July of 23.
This might show. That's
20%.
showing you.
Those are insurance companies, mutual funds, hedges,
when they
and the dealers taking less than a 10 auction average.
Show up like that.
The only light spot was indirect
yields,
bidders. That includes,
you know, it's the start.
Interest,
once they start buying like this,
below the 10 auction average,
we start getting the
really
pullbacks.
Was best to breed. A- is what I gave it. And as you look at an intraday of 30-year bonds, you can see that the yield is falling, not only there but across the curve, and the equity space seemed to have liked it just as well. Kelly, back to you.
A sigh of relief. Rick, thank you very much, Rick Santelli. Well, you heard the sounds of weakness there from Lidl's U.S. CEO. What about the weakness the market's perhaps telling us about? The utility sector was the only S&P sector in the green in April, and it's off to a strong start again in May. Jim Cramer was talking about this.
I need to learn how to
spice
things up, you know?
You can see the XLU, which tracks the sector, up 11% year to date and up 3% just this week. Not traditionally a great sign. And at the same time, we're seeing some of those growthy names fading following earnings. We mentioned Shopify earlier. It's Roblox today. Could this dynamic be a sign of more weakness
Hold on one
ahead?
second.
Joining us now to discuss is David Bonson.
I'm just pulling up
Chief
some stuff
Investment
here, guys,
Officer
for
at
us.
The Bonson Group. No fan of growth stocks generally, David, but welcome. Do you have concerns about the market broadly speaking?
Well, first, Kelly, I want to say welcome back. You've been missed. It's wonderful to have you back on air. And I do have concerns about growth stocks, but not because I'm against growth. Growth is what you always want to invest in. It's just that the growth you're paying for, you're having to overpay. And what a lot of the names we're talking about experiencing weakness, they can't be called growth stocks when the only thing that's grown is how much money they lose. Beyond Meat was a $240 stock. It's now a $7 stock, and each year their losses went higher. And that's where some of the quality of the growth names is not exactly the same from some of these big tech names that are really big growth, really big money makers, but I just simply criticize their price, their valuation. I think that's a
Did anybody take those Apple calls?
Shopify's,
Did anybody try them?
And yes, even
or
and maybe there'd be two different ways to
or watch the did anybody watch these? Again, I didn't fool with it because I felt like a 182 and a 185 was too far away for either one. Hold on one second. That's the limit. Last. Why is the last all the way over here? Like, this should be able to be moved. Like, I hate how they do this. Like, seriously. Like, it should be bid, ask, last. Bid, ask, last. Or bid, ask. I just think the way that they have this is so ridiculous. And look, once you change it, though, right? Once you change this, it still changes on the other side because I've tried it before. Unless you guys know of a way to fix that. Yeah, so everybody's game OBO. Yeah, they haven't really moved at all. All right, so let's go through some of the news and stuff. So we have, obviously, we have energy, copper, silver, gold. You know, those sectors running. US 30 up 0.5%, 0.5%. US 500, S&P 500 0.3%, just under 0.4%. The Dow 0.5%. Yeah. The VIX is going green. Wow, you don't normally see that. That's cool that I just saw that. Look at that. You normally don't see that. And it's up a half of 0.5%. It's up 0.5%, while the overall markets are up just at, a little over 1/4 to 0.5%. That's pretty wild. Let's see here. UVXY. Yeah, UVXY is going higher. That's funny. Alright, come on now. Let's do this. Bro, come on. Yeah, look. UVXY. Heading higher. Okay, on the scanners we have... I don't really know what else to do, guys, other than like go through some charts. If you guys have any charts to throw in the chat, you can throw them in the chat. You could take a nap. I don't know. Whatever floats your boat. TIVCB, LZ, CPOV, MBC, PEAM.
T-Mobile and Verizon and talks to carve up US Cellular.
Oh.
That's TMUS and USM and BZ.
This is the exchange on CNBC.
USM shares are popping on that news. Again, the Wall Street Journal reported
That's what I say.
that T-Mobile, Verizon, and talks to carve up US Cellular. Shares of US Cellular spiking.
Look at that spike, gang. Damn it. As soon as we got bored, they're like, here, throw them some crumbs. Toss them out a couple crumbs. Look at that 3-minute chart. It did not save again, y'all. Oh my God. Apple. Uh-oh, Apple downside, Apple. Is this a retest or what? Dude, why is this doing this to me? Oh my gosh. Bro, shit is popping off right now. This is crazy. I still want to know why my charts are doing that. Time axis. Keep time, zoom in. Click. Check. Yes. Apply. Okay. Bang. Like, come on, bro. What you doing, man?
Shares of TDS also
Oh my gosh, and PDS is going. Apple's holding on strong. Apple's holding. Yo, things just started to pop off there for a minute. That's what's up. I'm loving it. I love it. Let's go. I think that news is old though. They've been saying this stuff. Been said it. Sorry, guys. Just give me a second. I was just going over that news and stuff there that just came out. Like as soon as it started to get boring, I was slowly starting to fall asleep. I don't know what's going on with my charts either, and it's really pissing me off because this should just zoom in like automatically. This should just zoom in. It should. It should just zoom in right there. We'll see if it works, and we'll see what happens. So I'm still not in anything. I'm gonna just keep looking. If you guys have tickers or anything you guys want to go over, or you guys want to call me a piece of crap, a piece of shiz, or if you want to, I don't know, whatever, throw it in the chat. Yeah, I'll be here. Just give me a minute. I'm just going through the index. I'm gonna go over some news articles.
Don't be such a stranger. First TV interview, Ethan, in 4 years. We really appreciate it. Thanks for joining us with our Kate Rogers today. Shares of U.S. Cellular briefly halted for volatility in the last couple of minutes.
So if you see me like pause up here, it's because I have another computer over here that I'm using to look at the SPY and stuff. And excuse me, look at the scanners. All right, look, Tesla reclaiming that 50-day moving average. That's big. That's big that it did not break down below the pre-market. There might be a nice little trade there to get back up to 174. If you're into that kind of stuff, look at GLD breaking out. GLD breaking out, gang. Look at that. What a beaut. That's a beaut.
When it comes to investing, we live in uncertain times. Some assets can evaporate at the click of a button. Others can deflate with a single policy change. Savvy investors know that gold has stood the test of time as a reliable, real asset. So how do you invest in gold? Sandstorm Gold Royalties is a publicly traded company offering a diversified portfolio of mining royalties in one simple investment.
Watch if Tesla does break down below, you know, 172.90 and starts closing down there, then I would watch. Like, let's go to charts. Let me go to here. Let's go to Tesla, and we'll go to a 3-minute. Let's see. Okay, so we're at a 3-minute.
Announcing effective date of reverse stock split.
All right.
1 for 30 to take place on Monday, May 13th, after the close of business. That is Alpha Delta November.
Despite reporting record EPS and revenue for the quarter. The company also saw $11 billion in net deposits, largest ever for Robinhood. I know a lot of people anecdotally have been looking at their new offers on 401ks and other accounts. Here's what
It's so crazy. Now we're just getting news out of nowhere. Just ripping and running news. So. Alright, midday movers. We'll cover them. I just wanted to throw Tesla up here. I want to watch this thing and see what she wants to do. If she wants to do anything. Meta. Oh, come on. My AirPods just disconnected.
Down the line, right? So it makes sense how that's how value is derived. But in the short term, I have a hard time really buying into that valuations and kind of what these companies are telling us for earnings really influence the current share price. It's more the stories, it's more the reaction. So when I look at a name like ARM, if you're just talking fundamentals at a 67.5 forward PE, there's no room for deceleration. This is a story that for you to continue to be buying this stock, you kind of need it to get better and better and better. That's sort of what they're priced for. So at some point, this AI story isn't necessarily going away. And if anything, it's still growing at a tremendous clip, maybe the fastest clip of anything. But if it's not ramping up the same way that it was before, that hype, that excitement starts to fade. We saw that with electric vehicles. We saw that with different technologies throughout. We see it in things like Bitcoin. The Bitcoin story hasn't really changed from 2 or 3 weeks ago, but Bitcoin as an asset is no longer going higher, so it's not in the news every second like it was. So at the same point, some of these semiconductor stocks become risk vessels, and when they stopped going higher, it's now 60 some dollars off its highs, the excitement starts to fade with it.
Oh, absolutely. And I would even say, like, listening to the earnings call, they mentioned data center growth. And it's like, yeah, that was the story of 6 months ago, though. And I'm not discounting the tremendous growth that they've seen in these various aspects that benefit from AI. But it's like this narrative, you basically have to have something new and exciting to continue to see things take off.
So I'm just looking at the SPY
and you're
stuff over here. Just give me 1 second.
Just said, what does it kind of square up? Well, the report was pretty strong. the story still seems largely intact. Maybe it's not better than expected. So maybe the fear is less that the stocks are going to go down a lot. You saw the stock, it was already tested a little bit of volatility. It bounced back quickly. But maybe it's less about how high does it go. It's more about maybe it just sort of grows into this valuation now. And
I figured
that kind of
this thing was
sets up,
gonna pull
if you're
back.
kind of a believer in that, of more of a neutral to bullish outcome to me, where it's like, hey, maybe it doesn't go down a ton, but maybe it doesn't go up a ton either. But maybe in general, the fundamental story is still pretty positive. So I looked at a June put vertical, selling the 95.90. It's risk defined in the event that what we just talked about doesn't play out that way and there is more substantial downside to be had. But it also takes advantage of the fact that these names have been volatile and the implied volatility
Watch GLT, guys,
is priced
and watch
as
the
such.
dollar.
So selling that $5
nice-
widespread for
nice setup there.
$1.50 would yield $150 in max profit on $350 in risk. 93.50 would be the break even. That's lower than where this stock traded post earnings, so you have that going for you as well. And it does take a little bit of time, so allowing for the stock to kind of settle in around 100 here, that would be a max profit outcome. But on defined risk as well as defined profitability, you don't have to sweat necessarily this stock going higher from here. Just rather.
There
go
goes
for what's
Apple.
lower.
Did
You got
anybody
$9
take
in
those
cushion
calls?
for max profit and a little bit over $10
Anyone?
to that break
I did
even
not
going
because
after
I
June.
felt like
And of course, we have, I guess, the next maybe
know,
catalyst for ARM going
185
forward could be
was a little
NVIDIA's earnings,
far.
which May 22nd. But
Which is probably going to be a catalyst, let's be fair.
yeah, but I have to say, NVIDIA's had some pretty boring post-earnings
Let's see here.
reactions
So
in the
this-
last several quarters because, again, that bar has been set so high. So
Damn.
maybe we'll see some movement, but we'll be watching, I'm sure,
30,
when
40,
NVIDIA
50.
reports
These things
how
are up a
ARM then
lot
moves
because they
in
were, I
reaction,
thought,
but we will
30
leave
some
it there
cents, right?
For FOMO, coming up next, though, we'll look at another space that's actually seeing some positive post-earnings reactions. That is the overall food space. We're talking Krispy Kreme and Cheesecake Factory, which is making more substantial of a move to the upside, up 6% here. We'll dive more into those numbers coming up next.
Watch Tesla.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. Now I'd like to welcome in Kevin Green, Senior Markets Correspondent for the network, to break down the overall ag space. We're talking some of these commodities, Kevin. I have to say this is Next Gen. This is an unfamiliar topic for us here, but what we were joking about is food is always timeless. So this is like the backbone of the American food culture, which I can talk about all day long. So walk us through your thoughts.
Yeah, definitely. Especially when you're talking about the inflationary environment. I think this is actually a very key topic for us to discuss because we actually have seen some deflationary pressures when it comes to the food space as a whole, as grain prices have moved to the downside pretty much since the Ukraine-Russia conflict, if you will. But what we are actually seeing is grain prices moving to the upside over the last couple of weeks. Actually, over the last 3 weeks, we've seen wheat prices up over 19%. We've seen corn prices up over 7%, and even soybeans catching a bid at 6.8%. And the reason why we want to really focus on this is because it's the start of the planting season, to say the least. And the United States actually had a fair amount of inventories left over from last year. And we are also seeing a lot of competition when it comes to South America, especially when you're looking at Brazil and Argentina, who have been able to expand their crops as well as being able to sell those crops at a cheaper price. And so they've been exporting it to some of our primary partners here, when you're looking at China or when you're looking at the European markets. But one thing to just kind of keep in mind, the reason why we are seeing this move to the upside is because of the weather events that we saw not only here in the United States, especially in the Midwest, but also what's going on in Brazil. And I think that's a really big key area to kind of focus on. Right now, they are seeing a historic flood, the biggest flood that they've seen over the last 80 years. They've seen over 15 inches of rain over the last 15 days, which is a very substantial amount here. And this is actually putting their crop into jeopardy. And they're right now harvesting right now within their crop cycle. And right now, a lot of estimates right now when it comes to the ag experts out there, they believe that there's around 4 to 5 million tons of crops that are actually affected or could potentially be damaged by this, which is another reason why we're seeing prices move to the upside. And unfortunately, when grain prices do go up, it's really hard to knock them back down during the growing season. And this could actually be an inflationary hurdle that we see in the next couple of months if this trend continues.
Yeah, Kevin, I was just looking to and wheat in particular. You know, it's down 12% if you look at the ZW futures over the last 3 years. But you're starting to see some green on different time frames on more shorter term basis, about flat over the year, but 6 months quietly up 8%. We're starting to see these commodities, which can trend for a long, long time, start to turn around, perhaps be some of those inflationary pressures. What does this mean for companies that are like Chicago's own, for example, Archer Daniels Midland, ADM? What does it mean for companies like this that are so tied to this agricultural space?
This could actually be a tailwind for them. And actually, if you look at a chart of ADM, it has been moving to the upside. They had a little bit of an issue when it came to some accounting practices around 4 or 5 months ago, but we have actually seen the stock being able to turn around here. And the reason why is if grain prices do go up and we do see a little bit of a shortage or rerouting when it comes to supply, that's actually going to expand their margins when it comes to the transportation business, as well as the crush business, if you will. If you're talking about
sorry, man, I
soybeans,
didn't see your
are able
comment.
to
Yeah, I had a
refine those
couple,
soybeans
man.
into
I had a
different
couple.
products, which could potentially be in very high demand,
What did I
especially in the
trade
East
today?
Asia market. So that's another reason why we are seeing a little bit of a bid
traded
for the
Tesla
stock. Now, it has
short
not been able to
on,
recapture
off
some of
the
the
bell,
lows because
long,
of the scrutiny around their
for,
financial statements,
nice
but it is
bounce.
a company that has a very low beta.
So yeah,
but
I
it
got a
hasn't
few
been
trades.
able
I
to
just
perform
enough to
pretty
put some
well,
money in my
actually, over
pocket
the
and not
last couple
get
of
too
weeks,
crazy
if
with
not
it.
months. So this could actually be a tailwind for some of these companies that do assist with the transportation of grain.
You know, it just, with it being the way it is, and with the amount of stuff we have next week, I don't want to do too much and overstay my welcome. I didn't take this Apple. I'm watching Tesla, and I'm watching Microsoft. I'm watching Apple. I'm watching GLD. But yeah, I got a couple trades off yesterday. I got like double the amount of trades I did today. There were some good setups with the banks and between what else did I trade? Not Goldman Sachs, no Moderna. Starbucks, that's what it was. Starbucks, yeah, Starbucks, JP Morgan. Sorry, getting tired. Just this market will put you to sleep. I wanted to go through like some charts and stuff like that. No, I don't want to.
Time for growth. Funding from Biz2 Credit makes it possible. Our easy and convenient process makes it simple to take the next step on your journey. Biz2 Credit. Funding what's next.
what does it mean to be rich? Maybe rich is less about reaching a magic number.
So ARM recovered a lot of this. Wow.
Rich is being able to keep your loved ones close and also send them away. Rich is living life your way and having someone who can help you get there. The key to being rich is knowing what counts.
Apple's literally at 184.50 right now, guys. That's insane. And it's still at 185 as well. Or it's still 50 cents.
Welcome back to The Exchange. The fight to stop global warming and the battle against pollution includes sucking carbon right out of the air. But how does that work and what does it
That's why it's hard for me to trade some of those names that are low volatility. To sit in a trade and not, the longer I sit in something, the more I can start to think and come up with reasons why I shouldn't be in it, or not second guess, but like, I just don't like it. I like volatility. Give me the follow through in the movement, and I'll sit and wait and relax in it. Watch GLD here and watch gold. Keep an eye on the dollar and silver and gold.
A ton of food, but they are then able to, I think, then navigate what has been a difficult storm for a lot of these restaurant stocks that are commodity exposed, to Kevin's point earlier.
No doubt about it. Much better reaction today in the share price of Cake as it's up almost 6%. And actually, it looks like made maybe a year-to-date high this morning, unable to hold on to those gains entirely. But far better, Jenny, I would say, technical picture in Cake than we're seeing in Krispy Kreme. Not that Krispy Kreme is bad, just a little bit more of a neutral trade.
Yeah, and Krispy Kreme, I mean, considering they had decent earnings, not seeing a whole lot of that reflected in the price today, while overall Cheesecake Factory is taking off. So I guess those big portions are paying off. When inflation runs hot, you got to get your bang for your buck, and I totally respect that. But we'll shift gears now. Coming up next, it's time for Under 30. We're looking at, though, another name that's reacting pretty positively to its earnings, to put it lightly. Warby Parker shares are up over 17% on the session.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
I'm not even gonna lie, I think she's so hot. I don't know why. I think she's just freaking bombshell for whatever reason. You just had to say that.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's time for Under 30. Today discussing Warby Parker, stock ticker WRBY. George Tillis is here, senior markets correspondent for the Schwab Network. Let's discuss here, George, post earnings and a much needed pop in the stock, jumping almost 20% here in real time.
Yeah, I mean, the stock is up right now about 17 or so percent. It was up 20% at one point in time. It was actually a pretty good report for Warby Parker, which is essentially a designer, manufacturing, retailer of glasses and progressive eyewear. They actually compete with companies like Vision Source, Luxottica, but the other mainstay, big box retailers like, of course, Costco and Target and Walmart. But overall, I mean, if you look at the report, it was actually pretty good. The GAAP EPS, there was still a loss of 2 cents, but it was actually better than the estimate, which was a loss of 5 cents, and it was an improvement, actually a significant improvement considering last year for the same quarter it was a loss of 9 cents. And sales were higher 16% at $200 million for the quarter, and that was again higher by 16% compared to the same quarter last year, beating the estimates by about $4 million. But if you look at the guidance the company's provided, now sales in the last 4 quarters were around $670 million, and they're actually guiding higher at the midpoint to $757 million for the year, which puts the growth in sales in the mid-teens, while at the same time they're expecting the growth in earnings to actually improve for the next quarter by 9%, and earnings growth over the next year by about 14%. So I think what's happening here is you're getting growth in top-line sales because of new store openings. They're expecting on an annualized basis about 40 stores, so they reaffirm that. And that's a little bit over 10% growth on a year-over-year basis, considering they have about 250 stores right now ongoing. But I think you're actually seeing better operating leverage associated with this name because they are guiding for the full year 24 and 2025 for positive adjusted profits. So it seems to be that they're generating more operating leverage while at the same time they're expanding their revenue base.
So, George, what's amazing to me about this retailer, we've looked at this name before, is I've always thought this has a degree of stickiness to it because of the fact that anyone that has glasses knows that you have to pay for glasses. But, I mean, I guess as a routine customer, because they did highlight the fact that a huge portion of their sales this quarter and every quarter are these higher-priced frames. I mean, I guess as far as like consumer spending goes, maybe this is where it's all going on a need-be basis.
Well, yeah, I think pricing is certainly a factor involved because they did denote as a company on an average customer basis, the revenue growth was about 8.7% or close to 9%, almost $300 per customer. So obviously the customers are still spending, while at the same time their total sales are expanding and they're getting closer towards consistent profitability. This is what you want to see for a stock. If you look at it in the last 2 years, it's really been in a trading range between, let's say, 10 on the low side and 18 on the high side. So it's stuck right in the middle of that right now, around 14. But I certainly could see some constructive movement in the stock because of the fact that the operating leverage is improving while the total number of stores is improving. And so it's one thing to grow your business. It's one thing to grow your business in a non-profitable way. They're actually growing more profitably, and I think that's why we're seeing some pickup in the shares, but also some of the analysts, I think like Tesla Advisory Group's got a $17 target on this name because they're starting to see what I see, which is better operating metrics.
Yeah, and George, that's it. You answered all my questions. I was going to say, what about the fact that they're still losing money? But I guess, hey, that is a trend they expect to improve at least, and I think that guidance of improved profitability is huge. I completely agree. So it checks out why we're seeing a nice pop today, to put it lightly, up 18% on the session. But appreciate the great rundown, as always, George Tillis, senior markets correspondent. And that'll also do it for Alex and myself for Next Gen Investing for this Thursday. Now, coming up next, we have the watch list with Nicole Pedalides.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. So she had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
There goes GLD. All right, GLD starting to break out. Keep your eye on it. Again, I'm just chilling, watching something real quick. Give me 2 minutes.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. Thank you for being with us. We have a big show for you today. In fact, Jeffrey Kleintop will be with us and talk about the Bank of England's decision to keep rates unchanged. Now, the bank signaled at a potential rate cut could be coming over the summer. Is the Fed watching? And Ryan Pinnell of Kaiju Worldwide will join me right here at the New York Stock Exchange. And this is a discussion about AI and debunking some of those myths, the common myths that surround technology pertaining to AI. And our panel standing by ready to break down the very latest earnings from ARM Holdings. In the meantime, here's a look at the numbers right now. Interesting that the VIX has now gone down below 13. It's at 1298. S&P 5205 up 1/3 of 1%. The NASDAQ is up 1/10 of 1% at 18,107. The Dow up 245 points. That's the 7th day in a row of gains for the Dow at 39,299. And the Russell up 1/2 of 1%. Oil and gold are both higher on the day. Right now, $79.08 the barrel for oil, and gold's at $23.41 a troy ounce. Dollar 105.17, and Bitcoin is down 1/3 of 1% at 62,260. For some of the top stories in the markets, we welcome in Kevin Hinks, Senior Equities Contributor here on Schwab Network. We'll start off with the economic news, and that is jobless claims came in more claims than expected, right?
Yeah, jobless claims ticking up to 231,000. Now, that's historically more of an average number, but as you know, we've been historically strong in terms of first-time filers for unemployment insurance. Remember, yesterday afternoon, the dollar had rallied, yields had rallied, coming off a lackluster 10-year note auction, but then that reversed everything. That weakness in jobless claims or maybe a crack in the labor market caused the dollar to sell off, bonds to rally, and yields to sell off. So this rally, fueled by what may be the start of some weaker or at least mixed economic data, Nicole.
Yeah. In addition to that, we're watching Warner Brothers Discovery, a streaming bundle. News there. Tell us a little bit about that.
It seems like it's coming full circle, Nicole. You know, Warner Brothers Discovery, they had their earnings out this morning. A bit of a miss on earnings per share, lost 40 cents. But the big news coming out of this is the fact that they're now going, Disney and Warner Brothers Discovery will bundle Disney Plus, Hulu, and Max streaming services. And so, Nicole, doesn't it just feel like all the streaming is just coming back to look like your basic cable subscription that you had in the past?
Which I always love.
Yes.
I will never get rid of my cable, ever. Kevin Hanks, thank you.
Yes.
Let's take a look at the bigger picture. Nancy Dowd's with us, CEO of Opus Advice First. Let's talk about that, Nancy. You know, when we look at what's going on in this market and the volatility, interesting enough, the VIX came down below 13 a moment ago. Some of your thoughts.
Well, it's kind of like the Goldilocks effect right now. It's not too hot, not too cold. I think a Hollywood director couldn't have scripted last week's results any better. You know, investors just heard everything they wanted to hear, and hence the rally. And now it's just kind of quiet for a change. It doesn't seem like anything big is happening, which makes us more vigilant, obviously, because we want to make sure that we don't miss anything in this environment.
Right. You look, there's always something happening. I know that for sure. And there's always opportunity in the market. Sometimes you'll find them in places you weren't expecting. Where have you been looking lately?
Well, I think it's important to note that as big tech has definitely still continued to lead the market. And the expectation is that it will continue to lead the market. And if it doesn't, we won't have the same year-over-year results coming towards the end of the year, which is where the big upside was for big tech. So that's going to be important to watch. Right now, we're still sort of lulling over the results from the last 6 months. But if it doesn't continue and become persistent through to the end of the year, we will see that pullback. Now, also, I think there's some still upside opportunity in the broader S&P 500. You know, that's not overpriced yet. And I think that that area may have some opportunity in it, as well as, of course, longer duration bonds. You know, I think we're all reasonably confident that the Fed will not be raising rates anymore. They might even be cutting rates, and we still think that will not happen until the very end of the year, and maybe just one rate cut. But if rates are no longer going up, then longer duration bonds at least, you know, hold on to the yield that is available right now. And if bond prices do go up, you'll be positioned well for that. So that's another opportunity. And lastly, Europe is starting to look very, very attractive because it's been undervalued for so long that there might be some longer term opportunities there as well.
Yeah, understood. As we comb through some of the sectors that you mentioned, and you mentioned tech that's been catching a bit of late, when you think about tech and the growth, the projections, and the fundamentally earnings have been improving, what areas of tech do you like or recommend?
Well, we tend to stick with the bigger, larger cap growth, but really the broad spectrum has been very, very successful in the more recent months. But I think it's important to diversify, obviously, because while tech has done extremely well, it can be significantly more volatile than the broader S&P 500 stocks. So I think it is very, very important to diversify in other sectors such as utilities and financials and healthcare. those we continue to hold on and stay the course with those. And in fact, actually, utilities are up now.
Yeah, what about energy, for example? I mean,
yes.
Yeah, something you like?
Absolutely. We definitely engaged more with energy stocks since the war started in October. And although there was some volatility at the beginning, now we're seeing obviously that really come up very nicely. And we believe that it will continue to be a good sector to be in for the time being. I think when I speak about longer term investing,
I just wanted to ask you about the consumer. Yeah, I'm sorry. I think we just had a drop for a moment. Go ahead, please.
No, when I talk about longer term investing, and I mean really long term, 10 years or longer, one of the things that we all have a difficult time grasping is that we will probably, the life expectancy has increased significantly and longevity is here to stay. And in much of our financial planning with our clients, we expect people to live to 100 and sometimes more. And one of the biggest fears, of course, is will I run out of money and or will I outlive my money? So I think it's really important to, if you're going to be speculative, to really think long term and allocate, a certain amount in a bucket that will be 10, 15 years or longer for those times when maybe you still have to have some income.
Yeah, and that's sort of a thing too, trying to put money aside for the rainy day or for later. And if you invest, obviously a compounded dollar is worth more over a long period of time. Just get it in there, right? You mentioned something like the S&P 500. Where would you put those long-term holdings to really sort of set it and forget it?
Well, you never set it and forget it anymore. Those days are over. It always has to be managed, and it always has to be watched. However, some of the more volatile or more aggressive speculative stocks would be including the informational technology sector, and maybe some up-and-coming companies that, and I can't mention specific companies, but any new or innovative, anything AI related, obviously will probably boom in the next 10 to 15 years, as long as you're willing to live with the volatility in the meantime.
Nancy Daoud, thank you so much, CEO, Apos Advice First. Thank you, Nancy.
Thank you.
Coming up next, Jeffrey Kleintop is standing by. He wants to talk about the Bank of England's rate decision and what it means for U.S. investors. Schwab Network, we'll be right back.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides, live at the New York Stock Exchange. The Dow is up for the 7th day in a row, and we have a lot of movers that we're watching. How about Duolingo? Well, this one is actually sinking. Had the first quarter earnings report and posted revenue growth of 45% and record profitability, as well as raising guidance for the full year. And the bookings grew 40%. Daily active users grew 54% year over year. However, the guidance for the next quarter did miss the analyst estimates, and so it's down 17% today. Airbnb lower on its first quarter earnings. So the multiple analysts did cut their price targets. Airbnb expects a stronger summer with tailwinds from the Summer Olympics and Euro Cup. Its forecast for the second quarter, though, was the problem, and those were below the expectations. Meanwhile, watching this one, Warby Parker, this one's climbing higher on the back of the first quarter report. Despite a quarterly loss, the market seems positive on the company, raising guidance for the full year. Average revenue per customer rose almost 10% in the first quarter. And Warby's saying offering more eye exams is helping grow that statistic. Then there's Roblox. This one's tumbling down after the first quarter. Despite it being on the top and bottom line and growing bookings, users, and user engagement, their numbers still disappointed the street. Second quarter guidance for bookings also below the analysts' expectations. Roblox warning it will have tough comps later this year. And here's a quick look at Bitcoin, 62,465. Ooh, in the green now, just fractionally. Let's get back to the big picture. Joining me right now, Jeffrey Kleintop is with us, Chief Global Investment Strategist at Charles Schwab. Jeffrey Kleintop, so glad you are here because every guest I have talks about rates, of course, and you're watching what goes on in Bank of England and what it could mean for us here at home. So let's just start with Bank of England, right? Unchanged right now, but not necessarily so going forward. Tell us the story.
Yeah, that's right. They did not hike, they did not cut rates today. The BOE voted with a majority 7-2 to keep rates unchanged at 5.25%. There were 2 dissents in favor of a 25 basis point cut, and they added a new sentence to the statement saying that they're really going to pay close attention to forthcoming data releases. That tells me there's only 3 more members that must switch their stance to a cut by June. And the release noted that among those who were still voting for a hold, there was a range of views about how much evidence was needed before they were going to cut rates, suggesting I don't think the hurdle's very high to get a few more on board with a rate cut in June. In fact, I'd say the wage data would have to surprise on the upside to prevent a cut happening in June. That's how confident I am. The market's confidence is now pricing in 59%, you can see in this chart here, 59% odds of a cut in June, up from 47% ahead of the meeting. And looking back at the start of this quarter, the odds of a cut by the Bank of England and the Fed were about to be the same, a little over 50%. Boy, things have sure changed a lot since then.
It's interesting because, look, all you really need is 50% or more. I mean, we were seeing 90% likelihood for some of the U.S. Fed rate cut possibilities, and those didn't even happen. But to your point, you only need 3 more. That'll bring you to 5. You'll have 5 out of 7, and you'll have the majority there. So assuming we get this June rate cut from the Bank of England, why should folks here in the United States of America be watching that?
This is what's really important, I think, overlooked. It's that UK stocks are actually outperforming US stocks here in the second quarter and have been for much of the year. What we've been seeing is in the stock markets of countries that are likely to cut rates next month, their PEs are going up, their valuations are rising. Like in the UK, we've seen the rise in the PE ratio as markets are embracing an outlook for easier financial conditions, and that has offset the decline in the pound against the dollar. The FTSE 100 is up about 8.5% this year. The price to earnings ratio is now 14.0, up from 11.8 back in December. And since the start of the second quarter, you can see the performance here. The FTSE 100 has sharply outperformed the S&P 500, up by more than 5 percentage points. This chart, both are measured in US dollars. So even though the fact that the pound has dropped a little bit versus the dollar, it's still up sharply, about 4.5% since the start of the quarter, versus U.S. stocks being down about 1% for the start of the quarter. I think that's important. This rise in the PE ratio, as not only are we seeing a recovery in the UK's economic growth and earnings growth, but that's coupled with easier financial conditions later this year, something we may not get from the Fed.
So here in the U.S., look, I mean, you're seeing that the U.K. market is outperforming, and that's clear and in a big way, to your point. So could that mean good things for our U.S. market here at home then, if we see the Fed cut maybe in the fourth quarter?
It's possible. I think that U.S. valuations, though, are already high. That's the challenge. In the U.K., they were below their 10-year average. So just getting back, there was room to go just to get back to close to the average. And the long-term average is around 14 or 15. In the U.S., it's around 15 or 16, but we're at 20 times earnings. So the markets, I think, have been maybe pricing in a lot more excitement around the potential easing in financial conditions and return of economic growth, or I should say earnings growth, outside of just the Mag 7. So the U.S. market is already primed for that. That wasn't the case in Europe or the U.K., and that's why I still see more opportunity there.
So what about all the other ones? I mean, what about all the other countries that we follow so closely? I mean, obviously you keep a keen eye on China, but what else? Tell us about whether it's China or other international markets that we should be watching.
China's an interesting one that you bring up. You know, China's been outperforming as well here in the last month or so. Really, in fact, China was the best performing stock market in the world in April, and that performance has extended here into May. It's funny. I mean, we've got this license withdrawal for the sale of chips to Huawei, just the latest in a series of actions where the Biden administration seeks to prove it can be as tough on China as the talk from the Trump campaign. It follows that TikTok ban. And I think next, the Biden administration has been working on what's known as the 4-year review of the Section 301 tariffs. I don't want to get too technical here, but those were the tariffs put in place during the Trump administration. And now that enables the Biden administration to either increase or reduce tariffs on a wide range of products. And I expect the Biden administration will look to raise tariffs on vehicles, electric vehicles, and a few other things. So that just, elevates this U.S.-China tension. And I just want to conclude by saying, despite that, Chinese stocks have really outperformed. It may be difficult to push them down with PEs now at their 20-year low.
Yeah, and I know you actually put out a note about how the China stock market and the U.S. stock market may have had different paths, but they've actually sort of met, right, and somewhat tied year to date after the different paths. How about when we look at currencies? I mean, when we look at what's going on in Europe, you've had a weak euro. Could that help overall? Because right now, you still have a relatively strong U.S. dollar.
Yeah, it's an interesting story. So obviously, when the euro falls versus the dollar, it's a drag on the return on investing in Europe from a U.S. investor's perspective. Yet, we've seen, as in the case of the UK, the price to earnings ratio for EU stocks have risen more than offsetting the impact of that currency decline. And longer term, as we look at this global manufacturing recovery, manufacturers in Europe are benefiting from a weaker euro. It's benefiting, giving them a price advantage in international markets. So there are some positives here that are going along with that weaker currency. So I wouldn't get too caught up in the idea that, the euro is going down versus the dollar. It's being more than offset by increasing earnings expectations. Second half of this year, European earnings growth expected to be faster than those of the S&P 500. Couple that with this ongoing rise in the PE ratio, you get better performance.
Yeah. Good to see you, Jeffrey Kleintop. Thanks for being
Nicole.
on with us each week. Chief Global Investment Strategist, Charles Schwab. Thank you. Coming up next, our guest will take a look at AI and debunk some of the common myths that surround this technology. We'll be right back.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon.
Give me 15 minutes, guys.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Non-discretionary inflation. This is the price pressures that U.S. households are seeing for the essentials in their budget. That's running at 4.7% year over year. It buries what we're seeing on what we call the discretionary side.
Every day this week, Market Overtime brings you an in-depth conversation with Danielle DiMartino Booth. With 9 years of experience working at the Federal Reserve Bank of Dallas, Booth does not hold any punches when talking about the Fed's fight against inflation. Check it out 4:30 p.m. Eastern Time or on demand on Schwab Network's YouTube page. And welcome back to the Watch List. I'm Nicole Petalides. Glad you are with us. It's time to turn our focus straight over to AI, artificial intelligence, and some common myths surrounding this technology. Joining me right now, Ryan Pinnell, CEO and Global Chair at Kaiju Worldwide. Thank you so much for being with us. So obviously there's what people believe and all that. Let's just talk about what Kaiju does. What does Kaiju do?
We use predictive AI to build capital markets trading systems and trading products. So we've been using predictive AI for a little over half a decade in the management of private funds. And for about 18 months now, we've operated an ETF right here on the floor of the New York Stock Exchange called DIP, which was the first ETF to use AI completely from end to end to make its investment management decisions.
In the meantime, we're looking how AI is evolving. So this is exciting, right? So you have an ETF, you're using AI, it picks the stocks in the ETF and trades right here. DIP, people could take a look at that. But that's one of the many things that you do there at Kaiju. How are you seeing the evolution of AI and how it enhances abilities to make decisions for your portfolio or anything else for that matter?
I think you're really seeing sort of a delineation between generative AI, ChatGPT, those types of products, which are using AI to try to create something new, and then the predictive side, so trading stocks, driving cars, flying planes, etc. And I mean, I'm a little biased working on the predictive side, obviously, but one of the key benefits is that we don't suffer from the same challenges that they do on the generative side. You know, we don't have a problem with ownership of our training data. We know exactly where it came from and we paid for it. Copyright infringement isn't something for us. The systems don't hallucinate, etc.
Right. Look, a lot of people are worried. I think there's so much excitement about AI, right? Best thing since sliced bread. But and a lot of kids use it in college to answer some questions for, to get themselves in trouble maybe. But the other side of it is, how horrific it could be. Fears, misconceptions. Are you hearing that more or less so lately? And what do you say to that?
Well, I think it's important to realize that, this is part of our collective subconscious. AI has been around in science fiction for a half a century. It's never the good guy, right? In a movie, it's always the villain. And so mulling around in there, you've got this sense that it can do an incredible amount of harm. But the reality is, it can't do anything that you don't give it permission to do. So if it's been trained or taught to trade capital markets, it can't suddenly decide to sing opera or launch nuclear weapons or do anything bizarre. It's just going to do what you allow it to do.
So it's sort of like bad people, right? Sometimes people say there are no bad dogs, just bad training. And in this case, there's no bad AI, it's bad training.
Exactly.
Is that right?
Yes. If you're reckless and you give it an objective of simply making a lot of money without any guardrails whatsoever, then of course it can also lose a lot of money. But if you force it to remain within a specific investment ideology, it can't go outside of the guardrails that you've placed there. So to your point, as long as you've trained it responsibly and you've applied the appropriate risk parameters, it's not going to get into a lot of trouble.
What about replacing humans? People don't want that. Some people don't want that.
Yeah, I think there's application for it to do that a little bit. Every displacement technology from the computer, the car, whatever, has replaced some jobs. Certainly in terms of pattern recognition or data analysis, yes, it's superior.
Right.
But I don't think you want a machine telling you how you should plan for your retirement. I think it's helpful as a tool to assist the asset manager or the financial planner, but ultimately, you're still going to want to talk to a person at the end of the day.
And what about the false information, which could be AI, could be social media? I mean, there's so much that goes into that. But how do we protect against that?
Well, that's a really good question. And it's something that generative AI struggles with because there are non-standard data sources that it uses. If it's going out onto the internet, then there's no single source of truth out there. Unlike, let's say, the predictive AI systems that we build, where price, time, and quantity are not something that we have any discussion about. They simply are the correct data. So the outputs are going to have a higher level of certainty than something like paint me a picture or get my song lyrics or pull all of the 13 Ds and Fs with these criteria and feed them back to me. You're not exactly certain that what you're getting is correct.
And then for decision making, do we use AI for decision making?
I think it depends on the application. So it's important to acknowledge that what we have an enormous amount of success with in our business is short-term trading. It's 1 to 7 days. Predictive AI is highly effective in that kind of time frame, but where a stock is going to be 3 months from now, 6 months from now, no, it's not going to be able to do that.
It's interesting because we were watching the Knicks playoffs games, right? And so you just talk about short-term trading and trying to pick winners, and you're probably using all kinds of metrics from cash flow to PE and all that. And the question somebody asked when we were watching the playoffs is, why can't AI just pick all the winners of all the sports things that we watch? Why can't it?
I think it would be able to predict outcomes in the moment. So Steph Curry receives the ball at the three-point line. There's no lateral movement. It could probably, with reasonable certainty, predict whether or not that ball was going to go in. But tomorrow, whether or not Steph Curry will have a good game or not, there are just too many variables.
Tell me a little bit about DIP. I mean, when you talk about the trading platform and trying to have AI pick the stocks that go into DIP, I mean, there's obviously some criteria. It must have to be a certain value. I mean, you're not going to put micro caps in there, right? Do they have to be U.S. stocks? Are they in a certain category? Things like that.
So DIP only is active on large cap U.S. equities, S&P 500 components. It predates on low to high mean reversion and artificially oversold stocks. It performs 2 billion discrete examinations every day before it rebalances at the end of the day. And I mean, it's had a heck of a year so far.
When you think about all the companies that are investing in AI right now, you know, it started with Meta's earnings release, and everybody sort of was scratching their head. They just didn't expect so much CapEx spending on AI, but we've seen it from the likes of Microsoft and all the other companies, Apple. What do you think about these big companies and how they're developing their own large language, you know, platforms and such?
Well, I think right now there's an enormous amount of promise to the technology. Whether or not that can actually be delivered is another question, and I think that's where investors are starting to drill in right now. It costs an incredible amount of money to run these generative systems, but the revenue model isn't exactly clear so far. Many of them have not articulated a revenue model, and in the case of OpenAI, I mean, Sam Altman just came out and said that his revenue plan was to develop artificial general intelligence and then ask it how to make money. So, you know, the flash and fanfare of last year at about this time, now I think you're getting a lot more skepticism and a critical eye applied.
Look, I'm not an AI expert, but I did hear an interview pertaining to AI, and it was just exactly what you're talking about, ChatGPT, and the billions of dollars that go into each level of advancing AI, and that at some point it just gets priced out. I think we were up to chat GPT 4 or 5. Right? Is that right? Somewhere around there? 4 or 5 is that. So it was just talking about how now you stall out because you need billions and billions of dollars to try to get to the next level. Like, when does that happen?
Well, exactly.
Right?
And I think that's the real challenge, is that because you have to account for any question or task someone might ask,
right.
It's this never-ending, all-consuming application where you could throw a limitless amount of money on it.
Yeah.
It's one of the reasons that we really drilled into predictive AI, because it's a much smaller ecosystem where you're solving a specific problem.
And look, it slows down. It's exactly what the first meetings were, right? You had Elon Musk going to Washington and sort of looking at AI and regulation on AI and slow it down. It's too much, too fast. I mean, just the price tag will slow it down.
Exactly.
Right,
If you're
okay.
entering like the generative side now and you don't have tens of billions of dollars, I don't think you can compete.
Ryan Pennell, CEO, Global Chair at Kaiju Worldwide. Thank you for being with us.
Thank you very much.
Coming up next, we're going to look at some stocks for you to watch, maybe a few overseas names for your portfolio. We'll be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim.
I'm just watching a video, guys. If anybody's still here, just give me a
Bring
minute.
your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies.
GLD
Tailor the
holding up really
platforms to
nice
your
here
unique
underneath that
needs
20
with
day.
nearly endless customization.
Watch the dollar if it
and
pulls
track
back
market
and makes it
trends
a little
with up-to-the-minute news and
extension.
insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides, live at the New York Stock Exchange. Glad you're with us. 90 minutes left in the trading day. You can check out how the markets are faring here. 270 points on the Dow Jones Industrial Average, right? You'll take that up for the 7th day in a row if you're a bull out there. You are seeing the S&P at 5207, so that's up over 1/3%. I was looking at the recent high of 5264, March 28th. So we're not quite at the highs, folks. Though you are seeing some names hitting highs, like Amazon, right, in NASDAQ. In the tech world, 31 points higher there for the NASDAQ, and the Russell gaining 0.5%. In fact, let's bring in Kevin Green, senior markets correspondent here. 90 minutes left in the trading day. What are you watching?
Well, as you kind of talked about, the S&P 500 is green on the day here, but we are testing a very critical area of resistance. The 5210 level has been a critical area that we have rejected several times throughout the session here, Nicole. Haven't been able to get over it, but if we're able to hold the 5200 level, that will be a very key win for the bulls, to say the least. But when you're looking under the hood, when you're looking at the participation, we actually see around 78% of the stocks in the S&P 500 in the green today, so much so that the equal weight S&P S&P 500 is up around 0.6% on the session. So that's actually pretty good when you're looking at market breadth. We are seeing a little bit of lagging when it comes to the S&P, or when it comes to semiconductors, especially when you're looking at NVIDIA, and that's on the back of the ARMS earnings that we saw last night. And we have not been able to retrace some of those losses, which is really dragging down the major indexes, to say the least. But overall, we are seeing defensive sectors continuing to outperform, from utilities to materials, and also looking at from the energy market as well, continuing to see a little bit of a bid. So overall, it's actually a pretty decent session for the broader market, just not for the headline market cap weighted S&P 500 and NASDAQ 100.
Yeah. We're watching nat gas too. I mean, you're seeing the futures taking flight, it says.
Yeah, definitely. We always want to call this out. And whenever we see natural gas catching a little bit of a bid, because it is a little bit rare, it's the most abundant energy source here in the United States, but we are seeing it up over 18% month to date, and it's up around 5% in today's session. There's several different factors that are taking place right now. The biggest one is just the warm weather that's being projected for the remainder of this year, which could actually increase the demand for natural gas and utilities as a whole. That was really the spark that actually started this whole rally, along with a short squeeze from speculators that have been shorting this market for a very long time. And Nicole, last but not least, one of the things that actually could continue this rally to the upside is going to be Ukraine and Russia. Ukraine actually has seen a significant amount of infrastructure being hit, and now they are looking to double their imports when it comes to natural gas, which could actually be a boon for the LNG market as a whole. And that's why we are seeing this, this product actually catching a little bit of a bid. We are going into injection season, so a lot of supply will be coming online here. Let's see how long this is going to last to the upside.
Yeah, well, as you noted, a big move today when it's up over 5%. People pay attention. Thank you so much, Kevin Green. Good to see you. All right, let's welcome in our next guest, talking markets here. Ben Benesh is with us, co-founder, Tourbillon Investment Management. Thank you, Ben, for being with us. Some of your thoughts today.
Yeah, look, so we at Tourbillon are global value investors, and we take a very long-term view, investing in just a handful of companies globally. So our perspective is really entirely built from the bottom up and where we're finding the best opportunities today. And from that perspective, we're certainly seeing more opportunities in companies outside of the US and smaller, mid-sized businesses in many cases. And I guess a select few large, maybe old economy companies staying away from the Magnificent Seven for now.
Staying away from the Magnificent Seven. Why stay away from the Magnificent Seven when it's what everybody wants? That I'll play devil's advocate, you know?
Well, as you know, and I'm sure your viewers also know, around 30% of the S&P today is in these group of businesses which trade on average on a GAAP trailing 12-month basis on about 42 times earnings. So they've got to grow almost 4x to deliver what we would call a equity-like yield, a 9% earnings yield. So that's a tough basis for any company, no matter how wonderful. The other thing that we'd point out really is that, and I think your last guest alluded to it a little bit, this dramatic increase in capital expenditures. Now, we're looking at around 200 billion of cumulative capex for fiscal 24 for the group of 7 companies. That's 2 times depreciation and almost 2 times where we were this time last year. And as a lot of it is going into AI, into data centers, with an uncertain rate of return on some of those investments today, we're slightly concerned about the deterioration in cash conversion that goes along with that.
Yeah. Look, you like some old economy names, right? They have historical data, which obviously helps you to better understand what the company can or cannot bring to the table for an investor, right? What would be a name like that? Berkshire Hathaway?
Yeah, Berkshire is maybe the epitome of it. I mean, I was, like many other people, out in Omaha last weekend, and it was really striking to see how many of the questions focused on succession once Mr. Buffett is no longer with us. And we have a little bit of a different perception of what Berkshire is today. Mr. Buffett did a wonderful job for a very, very long period of
Tesla
time.
breaking down.
And replicating that
I'm trying to watch this
in the same
video
sort
real
of structure
quick.
is certainly
Give me
going to
2
be an
minutes.
incredibly difficult task. But today we see Berkshire as more like a system rather than relying on the genius of any individual. So if I can elaborate on that just a little bit, Berkshire's market cap today is around 850 billion US dollars. They've got 570 billion of book value of equity, by far the largest globally. I think JP might be second, quite a ways behind. But they're able to invest around $1 trillion worth of gross assets, 350 billion or so in common stock. The vast majority of the rest is in cash or wholly owned businesses. So 1 trillion of assets working on 560 billion or so, or 70 billion of equity, which is really the beauty of the flywheel, the flow which has been created, the low cost of funding, basically gives Berkshire a capital structure which we think would be incredibly difficult to replicate from scratch today for anybody, and people have certainly tried. But it really gives a boost in terms of the return on equity you can get. We think the company can do a 12% return on equity over the very long term without the phenomenal capital allocation we've seen for the past several decades.
And why AutoZone? That seems like a special one in your portfolio.
Well, it's so funny. People look at the Magnificent Seven and they look at the wonderful growth and returns that they've generated over the long term. And they absolutely have in aggregate. But I would suggest that AutoZone, selling used car parts, everyone's very familiar with the business, has done just as well. Over the past couple of decades, they've compounded earnings per share at over 20% per year, which is absolutely phenomenal given the nature of the industry and the mature nature of the industry that they're in. And they're able to do that a few different ways. We estimate around 50% of what they sell is private brand. So although it's a retailer in most people's eyes, brands like Duralast and others are really things that they do themselves. So that vertical integration gives a great cost advantage relative to the vast majority of their competition. And they're able to generate these phenomenal 50% return on capital, a lot of which is actually going back into repurchasing shares. So this same company over 20 years has repurchased over 80% of their total shares outstanding. So the end result of that in a not particularly glamorous industry has been a return for shareholders, which is absolutely phenomenal. And because it's in this sector which maybe doesn't get as much attention or as much hype as AI, you're paying a valuation today of around 18 times forward earnings, which we think is phenomenal value given the nature of the business, which we think can continue to grow at very high rates per share.
You also had some overseas, just quickly because we're just about out of time, but you had some overseas ideas. You had what you equated as the Home Depot Howden abroad, but did you like Home Depot and Costco and things like that here at home, in addition to Howden and Cosmos of Japan?
They're absolutely wonderful businesses. It's just the price. As you may have gathered, we're value investors at heart, and the US market trades at much higher valuations, certainly than the Japanese market where Cosmos is listed or where Howden's is listed in the UK. And we feel you get equivalent levels of quality and growth in those businesses versus the US counterparts. That's in many cases close to half the valuation. So Howden's, just very quickly, it's similar to a Home Depot. They focus predominantly on the kitchen market, and they're very, very laser focused on that specific niche. And they, similar to AutoZone, they're vertically integrated. So a third of what they produce is manufactured in-house. Again, allows them to generate 60% gross profit margins whilst offering a phenomenal value to both the tradespeople they interact with and the end consumer. But because the UK has been suffering from lower rates of growth, mortgages in the UK typically floating, the housing market's been weak, and we've been able to buy this business, which we think is wonderful, at around 16 times our assessment of earnings next year.
Ben Benesch, thank you so much, co-founder of Tourbillon Investment Management. Thank you, Ben. Still ahead, we are ready to focus all about ARM. We have a panel ready for you. We'll be right back.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. Time to take a look here in the semiconductor stock name, ARM Holdings. So reported its numbers. The stock right now is down about 1.5%, and most would agree that the quarter was pretty good. But the question is why it doesn't have, and this seems to be the consensus, why it doesn't have some wow factor going forward, even if the guidance, right, was decent as well. Let's ask our panel. Andrew Graham, CEO, Jackson Square Capital; Kim Forrest, founder, chief investment officer at Boca Capital Partners. Thank you both for being with us. So Kim, I mean, I don't know, do you agree with the summation? Most of the stuff I'm reading talked about a great quarter, even the outlook being pretty much in line, but that it didn't have some wow factor. Maybe people were looking for more on AI. I don't know. What say you?
Yes, I think AI is the missing element in everybody that has kind of reported in the tech industry and, you know, had a pretty good quarter, but not a great quarter, and certainly didn't have those all important letters, AI, in the guidance. And I think it's reasonable to expect that ARM in time would benefit from AI. But right now, in the short term, they didn't say the magic words, and they're paying the price with their stock.
So that's interesting. Andrew, what do you think is going on at ARM?
ARM's not a chip company the way most people think about it. They have an unusual role in the whole semiconductor ecosystem. So they license the set of instructions that software uses to communicate with chips. They're called CPU design blocks. And they earn royalties on all the chips that, all the chips that are shipped using that design block. And so we've got two sets of revenue coming in. You've got the licensing revenue, and you've got the royalties. And there's going to be a lag, and it's going to be smooth. I think the reason why people paid 21.5 times sales a couple days ago is because it's such an easy to you can look across the whole thing. There's great visibility. You can see 18 to 20% revenue growth, 40% earnings growth for the next 3 years. And so a lot of the AI stuff definitely comes through, and it comes through at a higher, faster pace. The adoption of AI requires more capability and power efficiency per device. and that's their new product. They're going from the ARM v8 to the ARM v9 with more compute IP, more ARM compute IP.
Oh, it figures this video is getting ready to be over, but so yeah, let's see. A lot of things are rallying here. I haven't taken anything. I was getting a little tired there, but I was watching a video. So we'll see what we can get into this afternoon. GLD's taking off there, guys. That was a nice break. I got... let's see. I don't know. If I get into something, I'll let you guys know. If you guys see anything, you know, news or anything. Vice versa. I call it out.
Was lessons, but also the trauma from that as well, and it's shaped a good part of your life. Can you take us through that part of the story?
Well, when I came back from, well, before I went over and joined the Marine Corps and went to Vietnam, I was, you know, pretty you know, well, didn't have any focus. Every year, you know, when I went to school, every grade, I pretty much, well, it was a photo finish. Whether I passed or not, I failed the 5th grade. Nobody can ever take that away from me. And so when I joined the Marine Corps when I was 17 with 2 buddies, and my mother had to sign so I could go, and she did, and she said, maybe this will be what you need. And so 6 months later...
I tried to go to the service too, but, you know, I had
I was at 26
open heart
Marines,
surgery and
we were
collapse left lung.
With rice paddies as far as you could see.
Couldn't
we were running
go.
ambushes to keep the North Vietnamese out of the villages from getting their rice and so forth. But when I came back from the war, it was a couple things. First of all, I went to college, and in college I graduated magna cum laude with a degree in accounting.
Oh.
Passed a CPA exam. I'd have never done that without the Marine Corps. So everything I've ever accomplished in my life, I owe to the Marine Corps. But there was a downside too. I had PTSD to beat the band, and what I did was, well, I would, like for example, my first software company. You know, I bought a book. I learned how to program a computer from the book, and a couple of years later, I started a software company in my basement, and I used to work 60-hour shifts, 60 hours straight. And writing code, and I dealt with the PTSD by burying myself in my work. And I mean, so that was the genesis of how all this stuff got going.
Sure, Kelly. I mean, it's crazy.
You talk much later in the book about now treating that and some of the newer techniques and psychedelics and things that people are experimenting with.
Psychedelic is the best thing. You know, I read this book by Michael Pollan called How to Change Your Mind. And this thing is, well, it's all about psychedelics and what they've been used for millennia. And for me, I mean, I told my wife I wanted to try this because, I mean, it's just PTSD was eating me alive.
Sure.
And so she had me hooked up with 2 guides a couple weeks later that treat guys and, I mean, people with you know, mental issues with psychedelics. And we met in Hawaii. And over 4 days, I was treated, and you know, a lot of therapy, a lot of tears, a lot of reliving all that stuff.
Yeah.
I never want to go through it again, but I was a different guy afterwards. I was like I should have been.
Yeah, a lot of people, you know, are looking at it as potentially a market after cannabis. There's a lot of business advice in here. One of the things that jumped out to me, because it goes back to a conversation we were having earlier, but you say, you know, every company has to decide who's most important, the customer or the employees, and you have an interesting answer about that.
Oh, for sure, the employees are.
The employees, he says, yeah.
Yeah,
and why is that?
The reason the employees are more important is because the employees are the one that relates to the customers, and they convey the company to the customers. So what you need to do is you need to charge your employees with enthusiasm, so they're excited about what they're doing. And what do we know about enthusiasm? When they deal with the customers, it's contagious.
But what about the whole Amazon strategy of, you know, relentless focus, customer first, and, you know, the corporate culture just has to be, you know, laser focused on that?
Well, the customer is first, but the employees come before that.
Interesting. Yeah.
Now, here's the question I have for you, and this is one that I know that you have a lot of thoughts on. really quickly, just a few moments left. Is the American dream still alive? Can it still be achieved?
Oh, absolutely. I think the American dream is alive as it's ever been. It's you know, you don't really recognize it because it looks like hard work. And you know, you hear all these people that say, well, you know,
Amen.
I work smart. You know, I don't work hard. Well, you show me somebody that works smart, and I'll show you somebody that they work for, and that'll be a person that works hard.
By the way, I love the anecdote as well about how the Super Bowl changed everything for GoDaddy. You know, you almost went out of business, and then here you have this splashy ad, your market share goes up, and then, of course, the rest is off to the races. But I'll let people read the book if they want to hear the full story.
There you go.
There you go.
Bob, thanks for joining us today.
Folks call fire in the hole.
That's right.
There you go.
Bookstores everywhere. We'll be right back.
That's crazy. Look at that. Apple did go higher, but if you didn't buy correctly, you know, you're down money. I mean, I don't think anybody would buy when it's already in front of you. When it's already really close to 185. I will say this here in just a few minutes. Or it's like it's close to the point where this thing will actually start flipping because it's almost in the money, and it should. And Tesla's still holding up, man. Tesla's still holding up.
When it comes to investing, we live in uncertain times. Some assets can...
Welcome back, everybody. Don't look now, but the market is putting together a nice string of gains lately, extending into today's session, Dom, with a 320-point session high pop. This could be the 7th straight day of gains for the Dow. First time we've had that this year.
You know, it's crazy because it's just a couple of weeks ago that we've been talking about this notion that the markets were testing their 100-day moving average for the S&P 500. Could this be the break? Could we see a real downside move? And people just stepped in to buy it.
Yeah.
And that's just what happens. And it's been the same muscle memory for years now at this point.
Of course, watching rates, not seeing a lot of movement there. Had the 30-year auction relatively uneventful, 445 still on the 10-year.
Watch small caps because it's been relatively the power catch-up trade in the last few sessions.
All right.
What happens. All right, well, thanks very much for watching Power Lunch, folks.
We'll see you later. Closing bell starts right now.
All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with the best playbook for your money right now, and we will get it exclusively today in just a bit from PIMCO's Erin Brown. She's going to reveal her latest asset allocation strategy first. She's going to do it right here. In the meantime, your scorecard with 60 minutes to go and regulation looks pretty good. There's 52.12 on the S&P. Why is that significant? Because if we can hold this, it would be the first close above 5,200 in a month, exactly a month. And we're looking pretty good in this final stretch because it's a pretty broad rally. The major averages are all higher. Energy, utilities leading the way, but we're almost green across the board. Well, not necessarily growth. It is a tough one today for Roblox. Those shares are plunging following the company's guidance today. There it is, stock's down 21.5%. It does take us to our talk of the tape, the resilient rally, how long this can last. Let's welcome in Kristen Bitterly of Citi Global Wealth. She's here with me at Post 9. It's good to see you.
Good to see you, too.
Is this what the next leg of this rally looks like? One that is carried by a lot of things other than tech?
Absolutely. I think that entering into this year, we thought that there would be a broadening out of earnings, and I actually think it's good to see this is a healthy rally in terms of seeing it across the board without that type of concentration. But I think we have to point back to the fundamentals that are driving it as well. This earnings season has actually been better than expected, and there is a lot of delineation under the surface in terms of idiosyncratic events. And so companies that are not delivering are getting punished, and companies that are and are raising guidance are seeing the rewards in the market. So I think we could continue to grind higher.
Are you surprised at the bounce back? How quickly the market recovered from what felt like it could be something a bit worse than what we got?
I think April was a really unique month in the sense that we were coming off the back of 2 quarters where we had double-digit gains in the S&P 500. And so some of that was more normalization. We had to give back. And when you look at the pullback that we saw, you can make an argument that that was a garden variety pullback, that we tend to see those types of pullbacks in any given year. I think right now the question still, Fed is front and center in terms of whether we're going to see rate cuts, the story about the trajectory of inflation and what that's going to do to corporate earnings. But for those companies that have strong balance sheets, I think we still see some continued strength in earnings, which will drive the market.
Is it fair to say we're not as obsessed over the Fed as we were 2 weeks ago? Right? Powell sort of came out, he calmed us down because he wasn't as hawkish as we feared he might be. So now we're not hanging on every Fed speaker's word. We're kind of taking him almost at his word. It's like, we know you want to cut. Okay, we can accept the fact that it's not today and it's not tomorrow, but we know you're gonna. And if the economy's good enough and the earnings remain as good as you suggest they might, then we're okay.
Yeah, so I think we should always take Chair Powell at his word. I actually think he's a very clear communicator and is very direct in terms of what they're watching, and what they're watching is the data. So I think what we have to see in order for the Fed to be in a position to cut is clearly continued disinflationary forces. We don't have that yet. So we have a pause in terms of some of their progress. We need to continue to see that. We're starting to see a softening in terms of some of the employment data, which is something we're going to be watching very closely as well. I will caution, though, that when you look at the market reaction function, I mean, we started this year with like 6 to 7 rate cuts priced in. Then we came back to next to none. Now we're at 2. So we started this year thinking we would have 3 rate cuts and that they wouldn't start until the summer months because of we needed to see that disinflation work its way into the data. And we're still sitting there. We think that's going to be the case.
Well, you guys are on the, I think it's fair to say, outlier island in some respects, and that you still think there's going to be 3.
We still think there's going to be 3, but no, we haven't changed that the entirety of this year. So while we saw these wild, we've seen the wild swings. We didn't go up to 6.
Yeah.
We didn't go down to 0. And I think the reason is like we have to, when we go into the summer months, there are certain seasonal factors in terms of the data that we could see in employment. We obviously got the jobless claims this morning, which was something I wouldn't read too much into it. But you start to add up some of these data points and you're seeing a slowing in the employment backdrop. And that, coupled with some disinflationary pressure, could actually be something that could put them in a position to cut this summer.
Is this what we're looking at on the screen right now, the Treasury curve? Is that the most important thing that we will be keeping our eyes on? The fact that, you know, we were pushing 5% on the 2-year and we were like 470-ish on the 10. And obviously we've settled and we've come down, and that has enabled stocks to go up.
I think there's fundamentals that are driving it, rates clearly being one of them, but I think the most important thing in terms of stocks going up is earnings right now. So when we look at earnings and the ability to deliver rates matter, of course, and rates certainly matter for companies that are highly levered, where there's a dependency upon refinancing your debt. So those are things that it's really a tale of two markets in terms of the companies that have strong free cash flow generation, that have strong balance sheets, that took advantage of historically low rates to get their balance sheet in order. And so those companies are almost immune to some of these pressures. So I think earnings matter and rates certainly matter for certain parts of the market like small caps.
I still feel like the rub on that is, as it relates to earnings specifically, almost all of the earnings growth is coming from that very select group of stocks for the most part, right? Mega cap tech, but yet you're a believer in the broadening out. Does that mean that you think their earnings growth pie is going to be more inclusive to some of those other companies?
And when we say that it's broadening out, you almost have to go back to the fact that last year you had 7 out of 11 sectors in certain quarters that were in profits recession. So when I'm talking about the broadening out, it is no longer kind of one sector driving that. Maybe you have outsized gains in one sector versus another, but we are starting to see that broadening out across the board, and we're starting to see flows coming into areas that were really unloved last year. And so if we were going to pick a position, for example, within the S&P 500, instead of playing the market capitalization weighted, where really you're trying to look at stretch valuations, some of those mega cap companies, just doing an equal weighted expression of that is a clean way to kind of go into the second half of this year.
Look at the year-to-date gains to your point about the broadening beyond tech. And I think people would know about this at this point, but you know, financials year-to-date as a sector up 10%. Tech's up 11, but industrials up 12, energy up 12.5, comm services, which plays certainly into the mega cap tech story, is up 19. You know, industrials up 10, utilities up 12. So it is pretty broad, and lately it's been, you know, staples and utilities having another good day. So we should believe in that?
I think so. If we look at utilities, that's a great example of people really trying to broaden it out in terms of what are going to be the beneficiaries of AI, right? So not the pure plays, but almost looking at the energy consumption and really trying to find ways of other expression in terms of supply, demand. I think when it comes to, let's talk about the health of the consumer and some of those earnings that we're anticipating next week in terms of the big retailers. I think if we were going to pick another theme within earnings season that was very important is looking into the health of the consumer and some of those areas that were slight misses, especially when it comes to the lower income consumer and middle income consumer. And so I think going into the next couple of weeks, that's certainly something that we're going to watch.
I mean, online retail was a big blow up over the last few days. So, you know, there's a big divergence between the winners and the losers within the retail. Maybe we get more clarity on that next week. Let's bring in Chris Heisey now of Maryland Bank of America Private Bank, and Joe Terranova of Virtus Investment Partners. Joe, a CNBC contributor. Welcome to you both. So Chris Heisey, I'm reading your notes. You seem pretty bullish to me.
Yeah, Scott, you know, we try to parse through all the data. We've got the best consumer data out there in terms of our penetration to the consumer, and we still see very good signs with the consumer. Is it slowing down? Absolutely. Is it worrisome? No. Most of it in the job market is driving that right now for certain income cohorts. The wealthy have created a lot of wealth since 2020.
But
the shortest span ever.
At least I'm not feeling any pain.
The largest amount of wealth created ever in that shortest
Just numb.
span. But what's
It's like
important in all of this context is,
like
are we
cream.
in the early stages of a long-term bull market or not? It feels comfortable saying it on a day like this, but we are, in our opinion, and it's because the wall of worry is still high. Profits are growing above their long run rate. Sentiment, as I mentioned before, is still like, what is coming around the pike that I need to be worried about? And finally, you're starting to see this basing out of small caps. And Kristen just talked about it before, and Joe's been talking about this for a while. You've got much more industry group participation across the board. It's not just the Mag 7 or the Fantastic Four. In fact, there's well over 150 companies in the S&P 500 that are driving the performance.
Joe, maybe the most controversial take that Chris has is this idea that we are in the, what he says, early portion of a decade-long bull market. I say that because I think the prevailing view among most is we're late cycle. He would have you believe otherwise. What say you?
He would. To look out over the next decade,
and to gain a clear understanding of what direction we're going to go in is very difficult for me. I'm sorry. I'm just being candid. I can't go out that far. I think where we are now in 2024 through 2025, we have a bull market in place. I think when you hit 2026, you have a little bit of a hiccup surrounding the midterm election and some of the expiring tax cuts. But to go out, over the next decade, I just can't. I can't look at it that far.
That's fine, but when people say we're late cycle, that doesn't necessarily imply that we're going to be okay through 2025. That means that this bull market is going to be sucking wind fairly soon.
So here's why, and that's an excellent point, and here's why I disagree with that. Because I think you have to look at how far we've come. Yeah, there's a great song by Matchbox 20, by the way, How Far We've Come. But I just want to go back and remind everyone where we were when you were sitting here with me on a Thursday in early April. And you remember the day the Dow went down 500 points at the end of the day? The S&P went down from 5250 to 5150. Neil Kashkari warned all of us about his concerns about inflation. Oil prices hit $88 that day, and there were all these overwhelming concerns. We're 1% away from a new all-time high right now. We have washed away the entirety of that decline. This week, we have navigated through significant 10 and 30-year debt auctions. That was the big bugaboo for the market. Scott, the 10-year Treasury has declined 30 basis points since April 25th. And yes, the mega caps have supported earnings growth for the S&P and for the NASDAQ itself. So I think very quietly, this market, the resiliency of it is absolutely remarkable. And I think it's reminding all of us, you will get punished at your own risk if you bet against it.
Do you agree with this notion that we're more early stages of a bull market rather than late stage?
I think we're certainly not in a late stage. I think when you look at the leadership and what we just talked about this rally having the potential to broaden out, that we're seeing earnings broaden out, that wouldn't happen in a late stage of a bull market. You'd actually see
think about getting some shorts here.
The leadership narrowing. And I think you do have to take a step back. And I've said this a number of different times, but like, what do we know to be true? We know that there's significant amount of cash on the sidelines, just $6 trillion plus in money market funds alone, even more than that when you look at deposits. And so you have a lot of cash on the sidelines. We saw that recently in terms of buying the dip action. And then you have earnings growth. So we went from a profits recession to now we anticipate about 8% for the totality of this year. Fed funds most likely has peaked, and inflation, while it's not exactly a linear trajectory down, it can be a little volatile. That's actually a pretty conducive setup for risk assets.
I think your late cycle, when speculative behavior, gets so complacent, and the areas of the market that right now are rightfully correcting, the emerging growth stocks, they are correcting. Generally, what you see is those stocks go parabolic at the end of the cycle. What we're seeing right now is indicative of a healthy marketplace, a marketplace that wants to pay the premium for the profitability and the margin expansion. A market that is dismissing the premise that those emerging growth stocks that don't have that degree of profitability can extend the significant appreciation that they've witnessed in the last several months.
Chris, I mean, it's one argument is kind of hard to think we're late cycle if we know we're not even at the start of the cycle of rate cuts, right? If you get rate cuts when the economy is doing okay, you get them for the right reason because you know that the Fed wants to cut. They feel confident that they can cut because inflation's coming down. You get the earnings story that Kristen is talking about. I guess those are good reasons to stay bullish.
Certainly in the shorter term. So let me put a few things in the context.
What's that mean? What's that mean in the shorter term?
Well, we've got,
what does that mean?
Okay, the next 1 to 2 years, because you've got a business cycle, you've got an economic cycle, and you've got market cycles that, pierce through both of those. We're going to go through, as Joe said, we're going to go through late, early, mid cycles in the market to assess the incoming data. What I meant about the long run bull market is it's driven by more demographic factors. It's driven by the sheer wealth, the size of the millennials, the Gen Z. They will have no choice but to invest. So you have higher demand for investing. You have lower supply for equity overall, given what's going on. At the same time, you have this incredible commercialization of, yes, initially overhyped generative AI, but eventually it's going to hit at the cost inefficiencies out there, and perhaps maybe even the cost inefficiencies at the national debt level. So for me, I could see very clear, transparent themes over the long run. Now, in the here and now, what do? You use the yields to your advantage. We haven't seen yields like this. And cash on cash is an extraordinary, powerful movement to take that cash that you earn on your cash or fixed income and reinvest back into equity hedges, even if inflation doesn't come all the way down to 2%. So I think this is a time, turn the page back to 1990s. We had an incredible decade. Yes, there were early, mid, late cycle movements, but through the decade, we had a pretty good run.
Kristen, what about the small caps that Chris was talking about? Year to date, it's such a dramatic underperformer. Is the Russell, for the obvious reasons of higher rates, loaded with regional banks, all the things we've discussed for forever at this point. Is now the moment, finally?
I actually think, like, within small and mid cap, if you look at the profitable growth pockets of that market, that's a much more attractive place to be in terms of playing this catch up and playing a broadening out versus going into something like the Russell 2000 that, to your point, you're going to be exposed to some leverage, you're going to be exposed to financials, you're going to be exposed to things that maybe if we do have rates higher for longer would be highly exposed. So I would say mid cap, small cap growth. And if you look at with the profitability filters, those are the ones that can actually play from some of these long-term unstoppable trends that have been dominating the market but haven't really caught a bid.
I don't know if I'm ready to go towards small caps just yet. I need to see the profitability be witnessed. 22% for earnings growth to the NASDAQ. Why move away from that? Why move away from the earnings growth of 5.5% that you're getting for the S&P? So if you want to move away from the Mag 7, if you want to move away from the engine of this year's appreciation, which to me is the semiconductor industry, I could still stay high up in the equity size class with large caps. I could look at Chipotle. I could look at Costco. I could look at Intuitive Surgical or Merck. I could look at Goldman Sachs, which is making a new all-time high as we speak today. I've got other areas, other sectors in the large cap universe where I could find opportunity. I don't need to go to small caps just yet.
Chris, I don't think it's going to surprise anybody if we have a day like today where we say, wow, look at this.
You'll already know
We're
what I'm going to
close
say.
Probably above 5,200 on the S&P 500.
Damn. This would have been a monster, and it's still going. We could still be trading this. We could still be trading this. Bro. Fucking 410 fucking calls, bro. This thing is almost $50 in the fucking money, bro. That was our fucking style loss, bro. What the fuck, bro? Oh my god. Wait, no, it was for... Back here! This is insane! This is so insane. Yeah, right here. It's at fucking 450. Fucking crazy, bro. That's so nuts. It's rallied $50. And that's what Goldman Sachs does. I should have just went for it. They're so fucking stupid.
That's a powerful statement.
Yeah, for sure. And thank you for that. Chris, thank you. Joe, thank you as well. Kristen, we'll see you soon. I do have news to get to, some breaking news.
Department
out
of
the DOJ.
Justice
Eamon Javers
Task
with
Force.
that for us. Eamon?
Scott, that's right. The Department of Justice's Antitrust Division is now announcing a new task force on what they're calling healthcare monopolies and collusion. This sounds like it is going to be a very wide-ranging effort in the healthcare industry by the Antitrust Division. Just take a listen to what they're talking about in this press release in terms of what this new task force is going to do. They say it's going to consider widespread competition concerns shared by patients, healthcare professionals, business and entrepreneurs, including payer-provider consolidation, serial acquisitions, labor and quality of care, medical billing, healthcare IT services, access to and misuse of healthcare data, and more. So a very wide
More government in your
Department
life.
of Justice task
More,
force
more,
here
more.
on what they're calling
Bro.
healthcare monopolies and collusion from the Department of Justice. I interviewed Jonathan Cantor, the head of the Antitrust Division,
What
on
a
CNBC a
fucking
couple weeks ago,
dumbass,
Scott, and he was signaling then that healthcare was a big area
that's
of
really, really
interest
what we
for
need
them.
right now.
So I think this should be on the radars of all the people in that industry, certainly.
You got all these
this
fucking homeless
afternoon.
people,
Yeah, no doubt. Eamon,
fucking
thank you for that very
diseases,
important
and
news. Eamon Jarvis in Washington.
fucking
Let's
shitting
send
on
it
the
over to
street,
Christina
and you want to
Partsinevelos
do
now for
stuff
the
like
biggest names moving
What a
into the
fucking
close.
idiot,
Christina.
man.
Well, let's start with
He really
T-Mobile
is.
reportedly closing in on a deal to buy parts of regional carrier U.S. Cellular for more than $2 billion, while Verizon is also considering buying certain parts of U.S. Cellular, but there's no transaction
need to be
details for
ramping
that
things
company
down,
just yet.
Joe.
This all according to the Wall Street Journal.
right, not
the
up.
reason that they're having this split sales structure is to convince the antitrust department that the deal won't hurt competition. You can see those shares up barely 1%, but Telephone Data
do you
Systems
offset
owns the
inflation?
majority of U.S. Cellular.
You don't raise taxes. You don't start doing more shit like this. Fucking idiot, man.
Customer inventory levels that also are high. The company cut shipments to get through excess inventory, and that contributed to weak revenues of $204 million in the quarter, much lower than the $1 billion in revenue the company pulled in a year ago. Weak margins and a weak Q2 revenue guidance also added to the company's 7.5% drop. Scott?
All right, back to you in just a bit. Christina, thanks so much. We're just getting started. Up next, PIMCO's Playbook, the firm just dropping its brand new market outlook, and we have the exclusive first look with portfolio manager Erin Brown. We'll find out how she's navigating the backdrop for stocks, where the opportunities are. We'll do it next.
If I have to redo that, I'm gonna be pissed. Like, I don't know what's going on with my 3-minute chart and even some of the others, but it shouldn't be doing this. Like, even the 15-minute, it shouldn't be all the way over there. Did we finally get 518? Damn, that's crazy. Just hit 520. It's a good thing I took profits on those 520 calls. I got them for like, shit, what'd I get them for? I got them dirt cheap yesterday. I mean, granted, well, they're not in the money, but it wouldn't take much. Another little retest here, but the market's getting ready to close in 30 minutes. I think that's your call wall there. Right there at 520. That was your sweet spot. Kind of curious what the market does from here. If the Dow is still acting like a little tool and just ripping and running. Just, excuse me. Damn, man. That's wild. Look at that. I said this too. I said we had nothing stopping us from the Dow. That's why I put these levels here. Now that I remember, I told you guys that if we can break through this level, I think you see a nice rip. That's so fucking crazy. I literally said this to fill the gap. I fucking said it Tuesday or yesterday. It had to have been Tuesday, Monday into Tuesday, because of this. We weren't up through this level
Stocks are
yet.
great across the board. Dow on track for its longest winning streak of the year now. PIMCO's Erin Brown is out today with her new asset allocation.
I gotta start writing literally
Joins me now for an
everything
exclusive
down.
interview. Welcome back. It's nice to see you.
I gotta have a recorder here or something.
Nice to be
here.
One thing that jumps out to me, I guess, is you told this is what you told our producers. You're modestly overweight equities.
This is what you told our
That sounds
producers.
like a, dare I say, modest.
I was gonna say
drop
something.
down
I'm not
from
gonna say it.
where you were before. Am I right or wrong?
No, so we're still, I would say our positioning really hasn't changed within equities in terms of the aggregate length. I would say on a scale of negative 10 to positive 10, we're a 5 out of 10. So that's still pretty bullish equities relative to where we've been. That I think remains consistent, but we are broadening the lens in terms of our exposures outside of just AI tech into a much broader diversified set of assets that we now like within equities.
What is going on here?
So you're a believer in a big one in the broadening story. So if you're moving to diversify away from tech, where are you diversifying into?
Yeah, so a couple of things. First, you're really starting to see a change and a
I thought she
turn
was going to
in
say,
the,
you're really starting to piss
global
me off.
PMIs.
I really
you're
thought
starting
she
to
was
see
going to say
manufacturing
that.
growth bounce back up. Not only are you seeing
We
that,
have
but
here
you're
you-
starting
you
to see
said- you
export
told our
orders from our
producers.
largest trading partners also start to pivot more positively, and even
Damn, look at the
incrementally,
Dow.
some of the
That's insane.
data out of China is coming out a little bit better. So I think you now can
While the
start
rest
to
of the
look
market
at
isn't
much more
moving.
aggressively at cyclicals that have been in an earnings recession over the last 6 quarters. And starting to look at manufacturing, cyclicals, industrials, and even some emerging markets that are going to take advantage of global growth bottoming out and starting to rebound, into more positive territory now.
That's interesting to hear. It sounds like your strategy.
Damn, that's crazy.
May be more bullish than your. To the degree to, I mean, if you want to be modestly overweight equities, and let's say you're 5 out of 10, you just painted a pretty bullish picture to me. What's missing?
Yeah, I think that you still want to stay underweight the small caps. I think that sector is going to continue to be hampered by very high rates, which are going to come down slower than probably even the market's expecting. We're expecting, probably one cut rather this year, and fairly modest, shallow cutting cycle rather next year as well. So I think our estimate is that, at least within the U.S., that small caps are going to continue to be hampered by very restrictive rates. I also think that as you start to see this broadening out of leadership within the market, certain sectors that are still leveraged to high rates, I think are going to continue to underperform. So a little bit less optimistic, some of the more defensive sectors in the economy, and starting to look both at a barbell approach, being long AI and AI winners on one hand, and then on the other hand, getting longer cyclical risk in the portfolios and starting to incrementally add back some emerging market risk as well.
Oh, interesting. What do you make of what we've witnessed this week with some of those more growthy names getting hit pretty hard on any slight either miss or just perception that maybe things aren't going to be as great as they were?
Yeah, so that's been, I think, one of the big themes of earnings, which is that misses are getting hit hard, much harder than what we've seen in the past, but you're also seeing the winners get rewarded as well. So you saw some of the data center names and some of the power IPP names that had really high earnings expectations built in. They were able to beat, and their stocks soared on the back of that. So you are seeing this bifurcation emerge. I think that, I would be looking at my shopping list right now, some of the names that got hit hard on the growth sector that you still believe fundamentally in the secular themes, and looking to buy them at lower levels. I'm not giving up on the growth sectors of the economy. I think that's still going to be an area that over both the medium term as well as the longer term will continue to shine, because that's ultimately where we're seeing growth being driven in this economy.
What's this move in utilities about? I've heard all of the, hypotheses of and
AI power play to it. What's your best guess, and how long does it last?
So we are in very, very early innings of this. The amount of electricity capacity that right now the AI industry is using
Oh,
is
she
about
needs some
2%.
water.
It's expected to grow by 2030 to about 8%, and then over the next 10 years beyond that,
she
it's going
sounds
to be closer to
parched.
20%. So there's going to be a significant amount of
Like she's been in the
electrification
desert for a
and
month.
power that's needed in order to be able to fuel the development of AI. And that's not just in running the servers and the computers and the data centers, but it's also cooling. So you're going to have multiple needs for power in order for AI to really become a impactful sort of secular theme. As a result of that, we really like those utility companies that are independent power producers, that are not heavily regulated, that have more ability to be able to scale more rapidly and be able to expand their grid more rapidly, and that's in the independent power producers. So I would be underweight the broad utility index, but overweight those IPPs, particularly ones that are being able to sign long-term contracts with data centers and are able to take advantage of this AI theme and have those long-term contracts in place in order to do so.
Wow, so you're a big believer in that story that some are now talking about on an almost everyday basis. And by the way, utilities as a sector more broadly are up near 8% over the last month, far outperforming everything else.
But when you look at these IPPs and these AI power names, they're up double that. So you are seeing a pretty big divergence. Yes, the theme is pulling up the entire sector, and utilities also have been an underperformer over the last year. But if you really want to juice that trade, I would be looking at the IPPs specifically.
Aaron, I appreciate it, as always. Thanks for sharing this with us first and exclusively. Thank you, Aaron Brown, PIMCO. Coming up, greater than the sum of the charts. BTIG's top technician, Jonathan Krinsky, is back. He'll tell us how he's charting the recent rebound and the rally's road ahead. S&P now trying for its first close above 5,200 in exactly a month, on track to do that. We'll track it over the final 30 minutes. We're back after this.
All right, welcome back. The S&P 500 moving higher, putting the index just 1% now from record highs set last March. Late March, excuse me. Our next guest says a retest of previous highs is in fact coming and sees one overlooked group that could outperform. BTIG's chief market technician, Jonathan Krinsky, joins me now. It's good to see you. So we're going for 5,200, a close above that for the first time in a month today. And we may very well.
Bears last things down. We're looking at the analog back to the last summer when you had about a 6% drawdown in July. You rebounded back into September and then you failed and moved lower. And so we should, if that analog was going to play out, we should have really turned lower yesterday. Looks like bulls kind of, regain leadership here. And so, yeah, I mean, I don't think it's a stretch to say new highs are coming. We're only about 60 points or so above that. But I think more so it's, you have the VIX back under 13, trends still positive. So that's probably the path of least resistance is still higher here.
I mean, this market's confounded you at times, hadn't it? And other technicians too, whereas things look like they're about to roll harder and they rebound faster than many people expected. Is that a fair assessment?
Yeah, and I think it speaks to the internal rotation that's going on. I mean, I think if you think, I think most people would say that technology has been leadership, and certainly has over the last 12, 18 months. But let's take the last 3 months, for instance. The S&P 500 technology sector is basically flat, while something like utilities are up 18%. So there's just continued leadership, and when one sector takes a pause, another steps up, and that's really kind of what's been the story of late.
What caught my ear of what you said a few moments ago is this might be the Bears' last stand. Can you expand on that? Because, the Bears have felt emboldened at times when it looked like they may be regaining something, and then they've been steamrolled again.
Yeah, I mean, like we said, we had that 6% drawdown in April, rallied back to a level where, again, if we were not going to make new highs, it was likely to turn lower this week, and it appears that didn't materialize. So, doesn't mean we can't have pullbacks or shallow dips, but I think that, if we're looking for that playbook with like a 10 to 12% drawdown like we saw this last summer, we're probably going to have to wait a bit longer for that, and probably from higher levels at this point.
You look at some charts, you say the gold miners look especially strong. Tell us more.
Yeah, I mean, gold miners continue to act well. They're actually, outperforming the market year to date. Probably not a lot of people realize that, but they had a massive move over the last 2 months, basically consolidated for the last couple of weeks, and now they're kind of reasserting themselves and breaking out higher today. Silver's outperforming gold, so those are things you want to see. Real yields coming down. Those are all constructive aspects to the gold trade, but yeah, it's a good-looking trend, and we'd expect higher prices for the miners here.
I don't know if you heard my conversation prior to this one with Aaron Brown of PIMCO, who's more bullish on China. By virtue of what Chinese equities have done. Jeff DeGraff has been looking for a breakout there, and I think you are as well.
Yeah, so at the end of last year, we said China is kind of the ultimate contrarian trade, just absolute worst of the worst trend. Sentiment was bottom of the barrel, and so that was really a time you really had to be kind of uber contrarian and buy a falling knife. We now have, I would argue, sentiment is still just as bad as it was then. If you look at the latest Barron's big money poll, only 4% of respondents said China was the best, most attractive country to invest in this year. And yet the trend is actually starting to turn. So, the Hang Seng's actually in line, almost beating the S&P year to date. So we now have a positive trend, positive momentum for China, and yet sentiment's still extremely bearish. So, we think from a risk-reward perspective, it's much more compelling to us than U.S. equities broadly here.
What's the message, if any, today that we may get above that 5,200 level and close there without tech being the leading contributor to it?
Again, when volatility and volume is so low, we tend not to put as much weight on price levels because it doesn't take much to move above or below it. But I think it's psychological, and again, if you look at the retracement off of the correction we just had, getting above 5,200 has some significance. So again, it's not a big call to say we're going to get to 5,260, which is the all-time highs. That could happen in a day or two. But I think it's just emblematic that volatility is continuing to compact. And above 5,200 is a nice psychological level for the bulls to hang
No,
their
but
hat on.
you didn't address my question specifically about the fact that we may very well get there today, but it's not technology that's dominating the conversation. In fact, it's everything but.
Yeah, no, that's valid as well. And like we said, technology is basically flat over the last 3 months. And so it's really been, financials and other parts of the market. Materials still act pretty well. So yeah, that's an encouraging aspect as well. It's a good point.
Jonathan, we'll talk to you soon. Thank you. BTIG's
Thanks,
Jonathan Krinsky. Up next, tracking the biggest movers into the close. Back to Christina with that. What do you see?
Well, something isn't translating for Duolingo shares, even though the company's earnings and guidance surpassed expectations. I'll tell you what that something is after this short break.
And make it count.
We're 15 from the closing bell. Back to Christina now for the stock she is watching. Tell us.
App loving. That's what I'm watching because it's almost, 15% higher, hitting a new 52-week high after the app monetization firm posted strong earnings and a strong sales outlook, signaling maybe, just a maybe, a rebound in app advertising markets. That's why you can see shares up 14%. First quarter earnings for Duolingo, though, were double estimates, with management raising its revenue outlook for the year, and yet the stock is getting crushed, down 18%. Because user growth is starting to slow down after rapidly adding users over just the last 2 years. So starting to see that slowdown, down 18%. Scott?
All right, Christina Partsenevelos, thank you very much. Still ahead, the Roblox wreckage. Shares cratering after the company's first quarter earnings report. We're going to run through the numbers that have investors heading for the exits today. We're back on the bell just after this.
All right, guys. I'm getting up out of here. Y'all have a wonderful day. Maybe we'll do a watch list. I know I've said I was going to do one for a while, but it's been a little hectic in the afternoons. I don't know if it's supposed to storm still or not. I hope you guys have a great day. Just somewhat of a stronger day, at least the Dow in the Dow. We'll see what tomorrow brings. Worst case, next week is going to be a week to remember. All right. It feels like it's one of them. So, if you guys need anything, reach out. If you guys take care, have a great rest of your day, and all that good stuff. Peace out.
A CNBC interview, an exclusive one you cannot afford to miss. Ahead of next week's critical inflation data, Minneapolis Fed President Neil Kashkari, Chicago Fed President Austin Goolsbee are both sitting down with our own Steve Leisman tomorrow, power lunch at 2 o'clock Eastern time. Up next, results from Dropbox are after the bell in OT. Stock down more than 30% in the past 3 months. But can today's report jumpstart that turnaround? That story and more we take inside the market zone next. Now in the closing bell market zone, CNBC senior markets commentator Mike Santoli here to break down the crucial moments of this trading day, plus Steve Kovac on Roblox, heading for its second worst day ever. Pippa Stevens looking ahead to Dropbox earnings out in overtime today. Mike, begin with you. Looks like we are going to close above 5,200 for the first time in a month. The significance of that to you is what?
Obviously, the resilience of the market got us here. I think we're higher at the close versus the midday or midpoint of the day, 11 out of 14 days. So the old Art Cashin line that it's a procrastinator's rally. People expected and hoped for more of a dip than we got. 5,200, we first got there, day of the March Fed meeting, March 20th. Since then, we've actually gone down half a PE point in the S&P 500 from 21 to 20 and a half at the same index level because forward earnings have come through. That's how it's supposed to work. To me, banks and breadth are still some of the biggest assets of this rebound rally. Banks up 7% in a week. Breadth, advanced decline is some of the strongest multi-day readings you're going to get. All of that being said, how much of this favorable rotation can get you farther? Because, industrials and materials, they're more expensive on a forward PE than they've been almost any time in the last 15 years except for the pandemic when earnings were depressed. So, you have to wonder whether you have a lot of blue sky above. But for now, market is really not doing anything. No macro news is good news when the bond market is calm.
Able to get here, too, without tech participating. I think it's the only down sector in the entire S&P today.
Yes, so it is about, again, the fact that people haven't just pulled back entirely and reduced equity exposure. They want to rotate and find something. I know you've been talking about the utility move. It was all about what hasn't participated yet, okay? Utilities versus equal weight S&P were lagging by 40 percentage points over the prior couple of years, and they've regained 10 of it. I mean, so you're talking about just deep laggards. Let's see if they can participate, and then we get the storyline built around it.
I think you're starting to hear that storyline relative to AI a lot by a lot of smart people.
Go look at the independent power stocks in the late 90s, early 2000s. They ripped. A lot of them went bankrupt. One of them was called Enron.
Hey, it's Josh Brown said on halftime today, that's going to end in tears. In his words, not mine.
Degree.
All right, Steve Kovac looking at the record. Actually, you know what? I have a news alert I want to read first. It's Boeing. Those shares are taking a bit of a dip on a recent news that the SEC is probing statements the company made about its safety practices following that near tragic January incident where a panel blew off the plane. We have reached out to the SEC and to Boeing, and we'll bring you any comments as we get them. Now to Steve Kovac, looking at Roblox. Tell us the stock has been a mess today.
Yeah, mess. Not as much of a mess as it was earlier. It's down as much as 29% pre-market, Scott. But look, this is really about the guidance, and the guidance is missing expectations in a significant way for both Q2, the current quarter, and the full year. I caught up with CEO Dave Baszucki about what's going on here. In this report, they talked a lot about decreased engagement, being behind a lot of this, being behind this weak guidance. And he told me it's more of a technical problem with the game than it is something about people not wanting to play or spend money in it. The last year, they basically shipped a bunch of new features for Roblox that don't really perform well on Android phones, which is like the biggest part of the user base there. They say they fixed it now. He told me they fixed it just a few weeks ago. It's performing better. And so there's a little bit of optimism that they're being maybe a little too conservative in their guidance. On the call, Baszucki also said they wanted to provide some cushion in that guidance just to see if the new trend they're seeing in user engagement actually pans out for the rest of the quarter. But for now, it's really taking a hit, down 22%, Scott.
All right, good perspective, Steve Kovac. Thanks to you. Need some perspective now from you, Pippa, on what to expect from Dropbox in overtime.
Well, Scott, the stock is down more than 20% since its last quarterly update when Dropbox said it lost roughly 50,000 paying users while also issuing light guidance. And so for the first quarter, Wall Street is expecting the cloud company to earn an adjusted 50 cents per share on about $629 million in revenue. Now, customer count and free cash flow guide will be top of mind for analysts. JP Morgan said the stock has sold off more than it expected and that the valuation is cheap relative to peers, but the firm still holds a neutral rating on Dropbox, saying they continue to see signs of deceleration in the underlying business with a tough setup for growth over the next few quarters. Now, earlier this month, Dropbox disclosed a cyber attack. The company said it doesn't believe it will have a material impact on overall operations, but investors will be looking for more clarity on that. Scott?
All right, Pippa, appreciate that. We'll see you in overtime. When those results hit, 2 minutes exactly, Mike, to go. Rates are a big story. Let's look at the yield curve because we've come down so much. The pressure's been taken off so much, and that has a direct correlation to this 5,200 getting back here in the speed in which we have.
Yes, so you're off like 0.25% across the curve pretty much. So essentially, a quasi-rate cut has been initiated in the Treasury.
That's the only time you like to talk percents when we're talking about yields.
No, a quarter of a percentage point.
Oh, okay.
So I should have made clear on that, but you're absolutely right. You don't do percentage moves in yields. And, obviously on some level, the inflation numbers next week kind of have veto power over the rally in the short term. So you have to be sensitive to that idea that, yields were also calm at the end of March when, in fact, we got this little surprise and this little jolt. But really, that's all that matters. You look at the charts of the yields, and they look like they've rolled pretty nicely. So they defend those highs. And again, we never have to unwind.
Well, that's another one in the books, ladies and gents. Have a wonderful afternoon.
It's just about them not blowing out in a disorderly way. It's the volatility of the Treasury moves that seems to matter more for the near-term equity action.
Goolsby and Kashkari tomorrow with Leisman. Any risk? I mean, Goolsby, you could say, is no doubt a dove. Kashkari's gotten a little bit more hawky
I think
over the last couple of years.
Arguably, Friday's